7, completion and review. All right, this should not take a lot of time. Okay, because what is the best part of this chapter is there are very clear questions and very clear answers. All right, so you don't have too much, fuss in the discussion like essay 530, 520. No, in chapter 4 we got stuck in couple of essays. That is not the case over here. All right. So chapter 7, completion and review. Essay 560, subsequent events. Now listen to me very carefully. Hello. When it comes to this chapter, again, this can give you 10 to 12 marks. All right. What we are seeing in the ICI papers also. Okay. There are 6 essays in this: 560, 570, 580, 260, 265, and 450. All right. There are such essays in this. But you know what? Out of this 260, 265, and 450, all right, are very short essays. Right? Only we have to give some time to 560, 570, and 580. I will go one by one. Essay 560, subsequent events. All right. Now focus over here. 560 subsequent events. I will give you clear formula. After that, you will not go wrong at all. See, when you are sitting for marathon lecture, I am assuming that you are done with AS4. All right. Events occurring after balance sheet date. All right. At least that much liberty I can take. Okay. So when I say subsequent events, first of all, focus over here. If there is any question after the balance sheet date, if there is any question after the balance sheet date, you will have to be very clear, all right, with respect to the dates. That 31st, for example, financial year 25-26. Then 31st March 26 will be your, don't say balance sheet date. There is no such word called as balance sheet date in my subject. All right. Say call it as date of financial statements. All right. Then in AS4, you are worried about date of approval of the financial statements, which is the signing. All right. But we are worried about this date of auditor's report. But the good news is that signing of the financial statements and signing of the auditor's report is done on the same date. All right. So you call it in AS4 events occurring between after the balance sheet date up to the date of approval of the financials by the statements by the management. I call it as events occurring between the date of financial statements and the date of auditor's report. Events occurring between the date of financial statements and the date of auditor's report. All right. So this students can solve very easily. Listen to me, category 1. And the good news is that normally question is from this category only. All right. So listen to me, I'm giving you clear formula. Events occurring between the date of financial statements and the date of auditor's report, I call it as category 1 because there are more 2 categories in this. All right. The moment you get such a question, first you will write a standard introduction. Tell me, as an auditor, I am worried about sufficient and appropriate audit evidence. For which events? Adjusting events or non-adjusting events? Come on fast, adjusting events. But there is no such word like adjusting events in my subject. I told you instead of calling daughter, my subject will call, instead of calling sister, my subject will call daughter of my father. Long cut. Look at this. Obtain sufficient and appropriate audit evidence. Whether events occurring between the date of financial statements and the date of auditor's report. But which events? Adjusting events. But wait, look at what you're writing for adjusting events. Events that require or disclosure in the financial statements are appropriately reflected in the financial statements as per AFR. One more time. What will be the standard introduction for category 1? Obtain a sufficient and appropriate audit evidence. Then full category 1. Events occurring between the date of financial statements and the date of auditor's report. But which events? Events that require adjustment of or disclosure in the financial statements are appropriately reflected in the financial statements as per applicable financial reporting framework. All right. This is the standard introduction which you will write. Then you will analyze the question. Whether it is just a practical question or they want theory, procedures. Wait, I will show that. Hey, hello. Hey. This is just example of adjusting events. Look at this. Many financial reporting frameworks specifically refer to such events, explain those events. There are 2 types of events. Adjusting events are events for which conditions were existing as on balance sheet date, all right, and further events have occurred which give the outcome of those conditions, all right. And then there are events which are completely new events which occur after the balance sheet date, for which no conditions were existing as on balance sheet date. So this you can just give your AS4 sheet and get your marks. All right. But look at this. CA is working as an internal auditor in TAA Limited, a non-listed company. The responsibilities of internal auditor include reviewing financial information and performing detailed tests on transactions and balances. He is also responsible for compliance with laws, regulations, and external requirements. During the year 22-23, services of an employee of the company were terminated. The said employee had filed a suit against the company in respect of certain compensation dues amounting to rupees 10 lakhs, which were not paid to him. Based upon the legal counsel advice, the company has made a provision of 10 lakhs for 22-23. However, somewhere in June 23, there is an out of court settlement between the company and employee for rupees 6 lakhs. The statute out of the company is under progress and audit report has not yet been finalized. So tell me, June 23 means can I say after 31st March, yes or no, sir? All right. Events occurring between the date of financial statements and the date of auditor's report. All right. So category one. How they have used internal auditor? Actually, they should have used statutory auditor, but fine. How statutory auditor should have proceeded in the situation? All right. Tell me, if you are the auditor, will you ask management to make the adjustment for this 6 lakhs? Yes or no, sir? Fast, fast. AS4. There is a provision entry of 10 lakhs, but settlement has been agreed for 6 lakhs. When they have to write back the provision of 4 lakhs, na yaar? All right. Yes or no, sir? Yeah. Tell me, this is a practical question or a theory question? Practical question. There is no point of writing too much theory over here. All right. But you will need some accounting English. Huh? It provides evidence, conditions were existing as on balance sheet date. Hello. All right. I will need such kind of English. Huh? You will have to say that why this is an adjusting event. All right. Done. So sometimes such kind of practical questions are asked. All right. Always write an introduction of SFI 60. All right. And then solve it practically. But look at this. CAK is the statutory auditor of Demma Private Limited for the year 22-23. The company has 3 plants in India. He is nearing completion of audit procedures relating to financial statements for the year under audit and has yet to sign the audit report. Meanwhile, a huge fire had broken out in one of the plants of the company located near Nashik on 25th June 2023, damaging substantial part of machinery and work in progress, resulting in loss of about rupees 5 crores. Unaware of the incident, he is in the process of finalizing his report in the first fortnight of July 23. State few. All right. So by till here, you were so excited. Wow. I will show my knowledge. All right. I will show my AS4 knowledge to them. All right. And all of a sudden, U-turn. All right. They're asking you to write horrible. So question will be from category 1, but you will have to check. If they say, how will you deal in this situation? How will you deal in this situation? Then answer practically. But if they say state few audit procedures. All right. State few audit procedures. All right. Then I have my audit procedures. Sumi's adjustment in writing. All right. So everyone over here, first of all, basic audit procedures. Boss, if you are auditing 25-26, then the first 3 months of the next year, first 3 months of the all right, are very important. So they are saying as for subsequent interim financial statements to be read. As for as for subsequent interim financial statements to be read, that means first quarter of the next year. All right. Then you have to understand the procedures which are established by the management, that how they are identifying such kind of subsequent events. All right. M for I will have to read the minutes of meeting held after the date of financial statement, which meetings on it, which meetings, board meetings, minutes of meeting which are held after the date of financial statements. And I for I will have to ask lots of questions, inquiries of the management to identify whether there are such subsequent events which require adjustment or disclosure. And come on, man, last point we have discussed in many essays. All right, that we will take a written representation from the management that they have disclosed to the auditor all the subsequent events. All right. So Sumi's adjustment in writing, we will write it and we'll finish it. But look at the last line. Also explain auditor's responsibility in this situation. Tell me, AS4, is this an adjusting event or a non-adjusting event? Boss, wait. Whenever there is a fire, all right, there are 2 possibilities. There is a fire, no? Fire on 25th June. So whenever there is a fire, there are 2 possibilities. Either it damages the going concern or not. All right. Tell me, if it damages the going concern, then you pass the adjustments. But if it is not damaging the going concern, all right, then will you still consider it as adjusting event? Or you have to provide a note in the notes to accounts? You can include one note. Are hello? Yes. Yes. They are just saying, look at this. I was not happy with the last line of the answer. They are just saying auditor has a responsibility to obtain sufficient and appropriate audit evidence. They have not discussed the case. Actually, they should have discussed that case. All right. Okay. So we are very clear about what will happen in category one. With respect to category one, all right, I have one more question for category one. All right. CA Chandni Khanna is going to complete audit of a company within next few days. She has performed necessary audit procedures like Sumi, find out Sumi, find out Sumi. I for inquiry, M for minutes of meeting. All right. Then going through the books of accounts after the date of financial statement. So S for subsequent interim financial statements. All right. So she has done S, then M, and I. I think she has done U also by understanding this whole entity. All right. Still, she wants to be certain that no such events have been left out. All right. What she should do in such a situation, discuss the rationale. Madam, adjustment point will come only when, all right, you have identified certain subsequent events and you want management to adjust. All right. Sumi's adjustment in writing. What was the last point? Writing. Obtain a. So what is she missing out? Written representation. All right. So she should obtain a written representation from the management. Tell me, why do you want a written representation from management? Why? How the written statement signed by the management? How it will help you? All right. Tell me, SA 580 written representation. What do you remember? Written representation is just a necessary evidence. It is a supporting evidence. Written representation alone is not a sufficient and appropriate audit evidence. But tell me, every evidence is incomplete without written representation. Written representation is your situationship here. All right? But I cannot stay without you, but only you are not enough. Huh? All right, so look at this. Why do we want written representation? There is one line. There is one line over here. The rationale of obtaining written representation is that she may not come to know all subsequent events. All right. So that is why she wants a written representation from the management. All right. Because remember one thing, written representation is a necessary evidence. Auditor cannot form an opinion without obtaining written representation. Although it is not a sufficient and appropriate audit evidence, but it is a necessary evidence. So full connection with written representation over here. All right, nicely asked question. Category 1, I rest my case. Now, with respect to category 2 and category 3, listen to me. Hello. Facts that become known to the auditor after the date of auditor's report. Tell me, facts that become known to the auditor after the date of auditor's report. Then you will have to check very carefully. After the date of auditor's report, fine. See, in this case study, my audit report was signed on 15th May. All right. On 19th June 2026, the audit report was going to be issued. When I say issue means it will be issued to third party. It will be issued to. Issue means when financial statements and audit report are made available to third party. All right. So if it is between this date, between the date of auditor's report, but before issue, I will call it as category 2. If it is after issue, then I will call it as category 3. In your AS4, you don't talk about category 2 and category 3. You go only till the date of signing. All right. However, my question goes till category 2 and category 3 also. Look at this. Listen to me. Once the signing is done, see, tell me, once your engagement is done, huh? Oh, 200 people attended the function, engagement is done, and that person is not replying to your only one message. All right, will you break up? That don't no, shit, block. No, you will not act like a mad person, psychopath. Once the audit report is signed, then for every single thing, we don't want it to be changed because it is signed. So look at this English properly. And once the audit report is signed, then your English should change. Look at this. Look at this. Respond appropriately to the facts that become known to the auditor. All right. Had it been known to the auditor at the date of auditor's report, it may have caused the auditor to amend the auditor's report. All right. After engagement, you came to know that the other person does not have the habit of brushing his teeth. All right. Only once a week. If tell me if this was known to you earlier, can I say you would have changed the decision? Yes or no, sir? But exactly. I want the same feeling. Look at the English. All right. Had it been known to the auditor at the date of auditor's report, had it been known to the auditor at the date of auditor's report, it may have caused the auditor to Amend auditor. Only if you come across such facts, then you will react. So this becomes your standard introduction for category 2 and category 3. One more time. For category 2 and category 3, as per SA 560, auditor shall respond. Auditor shall respond appropriately to the facts that become known to the auditor. Had it been known to the auditor at the date of auditor's report, it may have caused auditor to amend the auditor's report. Only then auditor will respond. Am I clear with this? Yes or no, sir? Yes. All right. Now listen to me. There is a question. Where is Rashmi? All right. CA Rashmi is the auditor of ABC Limited for financial ending 31st March 24. The audit report for that year was signed by her on 19th April 24. Audit report signed on 19th April. On 25th April 24, the company received a communication from the central government that an incentive amount of rupees 5 crores pertaining to financial 23-24 was approved. It was paid to the company before the end of April 24. The financial statements of the company were not yet issued. So this is category 2. The board of directors wished to include the incentive amount in the financial statements and requested the auditor to issue a fresh audit report for that year, analyze the issues involved, and give an overview of auditor's responsibility in such a situation. Listen to me. Whenever you get such a question, first there is one common theory that you will write. Acha, congratulations, this theory will remain common for category 2 as well as category 3. 3 marks you will score here only. All right. So first you will say auditor has no obligation towards such facts. Then you will say, however, if a fact becomes known to the auditor, had it been known to the auditor at the date of auditor's report, may have caused the auditor to amend the auditor's report. Then auditor shall. Now go to the management. Management. Give me more information about this. Then you have to decide whether financial statements need to be amended or not. If the financial statements need to be amended, then ask management that how they will amend these financial statements. 3 points. Don't forget this for 3 marks. Come on, one more time. Discuss the matter with management and where appropriate, those charging comments. This to anyways randomly students keep writing. All right. Determine whether financial statement need to be amended. And if so, inquire how management intends to address the matter in the financial statements. All right. This will give you 3 marks. Now there are 2 possibilities. Either management amends the financial statements or management does not amend the financial statements. All the best from my side. Now listen to me. In my regular course lectures, I would have discussed this for 1 more hour. But in this lecture, I need to respect how much institute has asked. I may discuss the full chart, very technical chart. But institute is not asking that. They are just in the theory part. Yes, with this, you may not score. With how much I have discussed, out of 4, you will score 3. 1 mark you will not score. But for that 1 mark, I don't want to give 30 minutes of chart discussion. Am I clear with this? So for category 2 and category 3, for category 2 and category 3, you write the introduction, write the theory, and then just write all the best. All right. Don't try to give the conclusion. Fine. You lose your 1 mark. That is okay. All right. Done, everyone? Yes. May 26th, my student, one of my student, SA 530, he left in option. He got scared. He wrote in the paper, please pass me. I have family pressure. All right. Result reserved. Disqualified. He had to write apology letter for the next examination attempt. All right. What is this? Look at this. Chalo, okay, cut this. So then he's texting me, sir, what to do. All right. So focus over here now. SF 560 subsequent events is over. Category 1. All right. Practical question answer practically. Here you write Sumi's adjustment in writing. For category 2 and 3, just write the standard introduction and theory. You may not get full marks, but as of now, I just want to ensure that you get 70-80% of marks in whatever we are discussing. All right. Now everyone over here. SA 570. Hello. SA 570 going concern. All right. When it comes to going concern, first of all, when you should look at the question and try to understand that whether when it comes to going concern at Inter level, there are 3 types of questions. All right. One, accounting question, where they will just ask you accounting concept of going concern, where I have nothing to do. Whatever you know from accounts, omit. What is going concern assumption? Entity does not have an intention to shut down in the foreseeable future. If going concern assumption is appropriate, company can continue to recognize balance sheet at historical value. They can continue to book income on expense on approval basis of accounting. No need to shift to receipt basis of account. So your regular things you can write about accounting concepts. Second is procedural question. Which question? Procedural question. There I have a role to play. Okay. And then reporting question. Question dependent on audit report. So first try to find out what is the question. All right. We will just straight away look at the question. Okay. We will just try to find out what is the question. The auditor of a company is having concerns about following of going concern basis of accounting followed by the management for preparation of financial statements. It asks management to justify the preparation of financial statements. However, management is not willing to make its assessment and share it with the auditor. What are the implications for auditor's report in such a scenario? Tell me, what is this question? Accounting concept? All right. Sorry. Accounting concept. Procedural question or reporting question? Reporting question. It is which question? Reporting question. Last line we are clear. Auditor's report. All right. Now, I have avoided the discussion of auditor's report till now. But at least now I'll have to discuss something with you. All right. Whenever there is a question on auditor's report, whenever there is a question on auditor's report, yeah, all right, and it is talking about going concern. Wait, I drew the chart today also over here. All right, focus over here now. Shay, focus over here now. Whenever there is any question on audit report, whenever there is any question on audit report, first check whether it is accounting matter, auditing matter, or statutory reporting requirements. I don't want to teach this full chart right now. I want to stay in the zone. Tell me, going concern is an accounting matter, auditing matter, or statutory matter? Accounting matter. All right. It is an accounting matter. All right. I don't have time to explain logic today. You will straight away understand and accept what I'm trying to tell. All right. So if it is any accounting matter, you will first check whether evidence is available or evidence is available or evidence is all right. Relax. Tell me in this question, can I say management is not willing to make the assessment? So auditor has developed doubts. Listen to me. Auditor has developed doubts over going concern. So auditor is requesting management, hey management, please show me the plans for the next 12 months. Management says, no, I don't want to show you any plan. We don't want to make the plan. That means management is not ready to provide proper information to the auditor. Yes or no, sir? Tell me sufficient and appropriate audit evidence is available or not available? Not available. Not available. All right. Not available, you said? Huh. All right. I thought not was silent. Look at this. If evidence is not available, then you will straight away say either qualified or a disclaimer of opinion. All right. Either qualified or disclaimer of an opinion. What is qualified opinion? That financial statements show a true and value except for the following. All right. Second, what is disclaimer of an opinion? We are unable to form an opinion. Today, no arguments. You have to simply apply this. If there is any accounting matter and sufficient and appropriate audit evidence is not available, then you will have to go with qualified or disclaimer of an opinion. All right. So tell me, over here, they are not ready to make the assessment. All right. So you will go with what is the answer? You will go with qualified or disclaimer of an opinion. The unfortunate part is the students are being very sensitive when it comes to going concern. Management is not ready to make the assessment. Going concern, disclaimer. All right. Because going concern is a very big matter, no? All right. Whereas institute says either qualified or disclaimer. What is the logic behind this? Dash off, not today. Are you getting it? Okay. You will have to accept what I'm trying to tell you. So if management is not willing to make the assessment, all right, it will be either qualified or disclaimer of an opinion. Next. After the lecture, you can sit with me full night. Look at this. While conducting audit of TA Limited, CAY notices that company has lost one of its key markets along with the important customers. Additionally, several highly successful competitors have emerged, impacting business of the company. Despite the existence of material uncertainty, CA finds the use of going concern basis of accounting appropriate for the preparation of financial statements. The company has also disclosed material uncertainty in the notes to accounts adequately. How should he deal with this matter in the auditor's report? So tell me, this is an accounting question, procedural question, or reporting question? A reporting question. Why? How he should deal with the matter in auditor's report. So tell me, the question is a reporting question. Means you don't have to think about long procedures, nothing. Straight away think about audit report. Now focus over here. Focus over here. I will give you this chart for audit report. All right. There are three possibilities when it comes to going concern. Either auditor concludes that going concern basis of accounting is appropriate, Reliance Industries Limited. All right? Or auditor concludes that going concern basis of accounting is appropriate, but a material uncertainty exists. What is material uncertainty? There are losses, there are debts, there are problems, but the business is still going on, just like a married man's life. All right, there are problems, but still going on. So there is a material uncertainty over going concern. All right. And when I say going concern basis of accounting is inappropriate by choose, all right, that there is no intention to continue. Okay. Vodafone idea is over here. Huh? But fine. Today I am focused only on the question. All right. So wait. Auditor has concluded that there is a material uncertainty. Tell me, material uncertainty or inappropriate? What have they used in the question? Means the business is still going on. Now wait, one by one, one by one. When there is a material uncertainty, first of all, we want management to provide. In material uncertainty, we don't want management to show balances at NRV. We don't want them to start preparing liquidation basis of accounting, but we want them to provide adequate disclosures. All right. Even I have given only adequate disclosure to my father-in-law that I don't know how long it will continue. All right. But I have not started shifting my assets and stuff. No. All right. So everyone over here. When there is a material uncertainty, we just have to provide. There are three disclosures to be given. First, explain material uncertainty. These disclosures are not to be given by the auditor. Huh? This is to be given by the CFO in the notes to accounts. All right. So CFO has to write three things. First, explain material. Imagine me talking to my father. There is a lot of problem here. Explain material uncertainty. Second, but we have met one counselor. Plans to deal with material uncertainty. But I don't know, sir, how far it will continue. Entity may not be able to realize the assets and discharge the liabilities. So I repeat, CFO has to give three disclosures. One is material uncertainty. Second, plans to overcome such uncertainty. And entity may not be able to realize the assets or discharge the liabilities. Now there are two possibilities. Either management provides adequate disclosures or management. Okay. If management provides adequate disclosures, if management, then there will be no impact on audit opinion. An institute says that you will have to write this separately. In which paragraph? Material uncertainty related to going concern paragraph. All right. So everyone over here, if you see this question, there is a material uncertainty. There is a material uncertainty and management has provided adequate disclosures. All right. So auditor has to write this in which paragraph? But tell me everyone, if you remember this, I will be your fan. All right. Tell me, if let us say if EA Limited is a listed entity, if I change this question and make this entity a listed entity, then where will you write this? A audit matter. No. All right. You will still write in Murg paragraph. Murgi. All right. So everyone over here, we had done this. All right. We wrote key audit matter, emphasis of matter, and we cancelled it. All right. Then you have done it. Look at this. But I don't know what happens to inter-CA students the moment they see listed entity. Key audit matter, key audit matter, key audit matter. All right. So everyone over here, whether it is a listed entity or unlisted entity, you will write it in Murg paragraph only. Am I clear with this? Yes or no, sir? Yes, sir. Yes, sir. Yes, sir. So when will you use Murg paragraph? At once. When will you use Murg paragraph? There is a material uncertainty over going concern. Management has provided adequate disclosures. Then auditor will write it in Murg paragraph. Now you are the auditor. What you will write in Murg paragraph? All right. I gave you a code word for that. You will have to write RAM. All right. You will have to give reference to the notes to accounts. That we would like to draw our attention to note number. You have to give reference to the notes to accounts. All right. You will have to explain that there is a material uncertainty, and you'll have to tell them, relax. They have given the disclosures, so we do not have a modified opinion on this matter. U for unmodified opinion. So one more time. As an auditor, oh, okay, everything at once. If there is a material uncertainty over going concern, we will ask management to provide adequate disclosures. If management provides adequate disclosures, then whether it is a listed entity or not, you will write it in Moorg paragraph only. And in Moorg paragraph, you will explain reference to the notes to accounts in the financial statements where they have explained material uncertainty. Then U for unmodified opinion on this matter because management has provided adequate disclosure. And M for material uncertainty, you will have to explain in the audit report. Am I clear with this? Yes, sir. Yes, sir. Yes, sir. All right. Okay. Wait. I am just explaining this material uncertainty. If there is a material uncertainty, we ask management to provide adequate disclosures. If management do not provide adequate disclosure, management does not provide, that means you came to know that there is a material uncertainty, yes or no, sir? Hello. Yes. You ask management to provide adequate disclosures, but they are not doing it. All right, then we will give qualified or adverse opinion. Everyone over here, look at this. If management is not ready to show you the plan only, if management is not ready to show you the plan, then qualified or disclaimer. But if evidence is available, we told management to write in the notes to accounts, and they are not writing properly. All right. If ACPD is incorrect, one more time. If evidence is available, we will have to check amount classification, presentation, disclosure. If it is incorrect, then we will have to give a qualified or adverse opinion. So final formula. If evidence is not available, then what will you say? Qualified or disclaimer. But if evidence is available and there is a material misstatement, if evidence is available and there is a they are not giving disclosure, giving wrong disclosure, whatever it is. But if they are committing mistakes, then we will say qualified or adverse. All right. What is qualified opinion? Financial statements show a true FRU except for the following. What is adverse opinion? Financial statements do not show a true FRU. And what is disclaimer of an opinion? That we are unable to form an opinion. Am I clear with this? Yes. All right. There will be more practice of that in audit report chapter. And as of now, I'm just teaching to the extent I require for this SA 570. All right. Look at this. Sometimes you will find such questions. Mention any four financial events or conditions individually or collectively that may cause significant doubt on the entity's ability to continue as going concern. Everyone over here, listen to me. When it comes to going concern, one of their favorite content for MCQs, yeah, yes. What is that? Indicators of material uncertainty. When do you start developing doubt? All right. When do you start developing doubt? Either there are financial problems, all right, or let us say financial, there is no financial issue, but there are operational problems. Like supply, there is no supply available, Strait of Hormuz. All right. Or there can be other indicators. All right. Modi ji at 8 p.m. says that, all right, plastic ban. Are you getting a point? So other indicators. So everyone over here, either a financial indicator or operating indicator or other indicator. Financial indicator, hello, I am not reading all of this, but this is their favorite for MCQs. All right. So any financial issue, any financial problems, you will say financial indicator. I'm just reading operating indicator. Look at this. If management has an intention to liquidate, let us say they have a surplus of 700 crores, but management says we want to shut down. That's it. All right. I want to retire from this life. And gone. Entity gone. All right. It is an operating indicator. Second, loss of key management without replacement. They have 800 crores, but no one is ready to run that company. Rajesh Export. Next, loss of major market, key customer, franchisee, license of principal supplier. All right. Nokia phones, how they vanished. Then labor difficulties, full labor union on strike. All right. Shortages of important supplies, Strait of Hormuz. Emergence of a highly successful competitor, Amazon and Jio. All right. Now, other indicators, any legal issue, litigation issue. Which issue? Legal issue or litigation issue, government issue. All right. Or this fire, flood, and Donald Trump. Look at this. Okay, he's a catastrophe only. All right. So everyone over here, this will be our other indicator. Okay. So everyone over here. Now I am not reading this. They can ask you either financial indicator or operating indicator or other indicator. Okay. Now listen to me. Hello. Now the last part that I want to discuss. In SA 570, I told you there are three types of questions. Either accounting questions or procedural questions or reporting questions. If there is a procedural question, First of all, how will you come to know that there is a procedural question? All right, look at this question. During the audit of a company, CA Karthik has noticed that company's turnover has fallen. Basically, a lot of bad things have happened. All right. Huh? In first 2-3 lines only, you will understand very negative. Then they will say which additional audit procedures are to be performed. Right. Over here also, if you see, lot of negative things have happened. All right. Lot of negative, and then at the end, which? So listen to me. Listen to me. SA 570 procedures get divided into two. First is risk assessment procedure. Second is further audit procedure. Risk assessment procedure, we are just trying to find out whether there are events or conditions, whether there are events or conditions that may cast significant doubt on the entity's ability to continue as going concern. One more time, you can't just say find out problems over going concern, then your going concern will be damaged over there. All right, so you have to say, as an auditor, first we have to perform risk assessment procedure and identify whether there are threats to going concern. No, chichi. Events or conditions that may cast significant doubt on the entity's ability to continue as going concern. But if you look at this question, can I say auditor has already identified the events or conditions that may cast significant doubt to the going concern? Yes or no, sir? Then they are saying which? So tell me, the question is talking about risk assessment procedure or further audit procedure? So now listen to me. If the question already has negative indicators, if the question already has, and it is talking about further audit procedures, all right, then in that case, always remember this full code word. First, we will ask management to give me an assessment of the next 12 months. First, we'll ask management to give me an assessment of the next 12 months. That show me the plan, all right? Show me the jalwa, show me the plan. That next 12 months, how do you plan to continue, all right? Now, if management submits that, okay, then in that case, never forget this full code word. Complete period beyond future forecast is facts to be written. Tell me. Complete period beyond future forecast is facts to be written. Okay, now management has submitted the plan. First, I will check the completeness. There should be no omission in that. They should have considered all the relevant information. Then, most importantly, I will check the period. Period has to be at least next 12 months from the balance sheet date, covering the foreseeable future. Then, I will also see whether there is any event beyond the period. Let us say 13th month from now, company has to repay a major loan. Yes, it is not getting covered in the next 12 months, but I can clearly foresee it. All right. So even though it is on the 13th month or 14th month, all right, we have to conduct inquiries of the events or conditions beyond the period of management's assessment. So one more time, complete period beyond future. Boss, I want to know whether this will improve. All right. I want to know their future action plan, whether it will improve their situation or not. I want a forecast. I want a forecast, cash flow forecast. Tell me very clearly for the next 12 months, what are your cash inflows and cash outflows? All right. Then I want to know whether there are additional facts, subsequent events, whether there are additional facts that I come to know. And at the end, I want to obtain a written representation, whether the plan is feasible, achievable or not. So you will see this entire procedure over here. All right, complete period beyond future forecast is facts to be written. Full procedure you will see. Why? Because negative things were already identified, and we asked the management. All right, and the question was asking us that what kind of additional procedure you will perform. I want a confirmation. Are you clear with this? Yes, sir. Yes, sir. Wait. So this is procedural question. Which question? Procedural question. All right. Now look at this. Which MTP July 24. How does the going concern affect the preparation of financial accounting question? All the best from my side. Whatever you know about going concern, just keep on vomiting. All right. You see this going concern. What is going concern? What if going concern is not followed? All right. Whatever maximum you can write from accounts, that you will write. For me, you will just write my essay number, essay 570 going concern. All right. Now look at this question. TA, a CA student, is part of an engagement team conducting audit of an entity. The audit procedures are nearing completion. He notices that engagement partner has asked for a cash flow forecast from the management for the next 12 months from the date of financial statements. Keeping in view above, answer the following. Discuss the likely purpose of engagement partner in the above situation. Listen, this many students are not able to answer properly in English. See, why engagement partner is asking for such kind of documents? Because he wants to obtain sufficient and appropriate audit evidence. And he wants to form a conclusion. Conclusion on what? On appropriateness of management's use of going concern basis of accounting. Further, his purpose is also to conclude on the basis of evidence obtained whether a material uncertainty exists or not. This much I want at the tip of your tongue. Tell me, why are we performing procedures as per SA 570? What we will get from SA 570? We want to obtain sufficient and appropriate audit evidence to conclude on the appropriateness of their going concern assumption. One more time. We want to obtain sufficient and appropriate audit evidence to conclude on the appropriateness of their going concern assumption. And I want to obtain evidence and conclude whether there is a material uncertainty or not. Right? This much at least you should be very clear. This is the purpose of engagement partner. All right. Now listen to me. He is specifically asking for a cash flow forecast. If I give you my next 12 months cash flow forecast, you will have to check RD, RA. First, you'll have to check reliability of the data. You'll have to check. All right. You asked me that, Pragnesh sir, from where you have created this next 12 months, cash flow forecast. Actually, it is based upon last 3 years financial statements. But in all the last 3 years, each of the year, I gave you an adverse opinion. Sorry. All right. So first, reliability of the data. The data has to be reliable. And this next 12 months, you are expecting your turnover to go 3 times. Right? Yeah, actually, we are planning a reel. Reel will go viral. We will get a turnover. What is this? This is the reasonable assumption. What is this assumption? So when it comes to cash flow forecast, when it comes to, you have to see the and support your reasonableness for the assumptions. Am I clear with this? Yes. Then you will get your answer over here. This is again a procedural question. Look at this. Any two procedures only with respect to cash flow forecast. There are only two procedures for cash flow forecast: reliability of data and reasonableness of assumptions. All right. Again, a procedural question. All right. With that, we have covered almost all the possible questions. There is one reporting question. All right. Yeah. CAB is the statutory auditor of Boom Payments Bank. All right. For the year ATM payment for the year 23-24, the license was cancelled. No? During the year, banking regulator has imposed restrictions on the bank from accepting new deposits due to non-compliance in conducting KYC, full Paytm case only, in large number of accounts and violation of rules aimed at preventing money laundering. There is material uncertainty regarding probable outcome of such restrictions on ability of the bank to continue as a going concern. However, for financial year 23-24, auditor has concluded that use of going concern basis of accounting is appropriate. The financial statements of the bank do not make adequate disclosures of material uncertainty due to above events in the financial statements. Wait. There is a going concern is appropriate, but there is a material uncertainty. We want management to provide 3 disclosures. Management does not make necessary disclosures. What are the implications for auditor's report? Hello. Evidence is obtained or not obtained? Are obtained? All right. They have already concluded. It means evidence is available. Yes. All right. Evidence is available. We ask management to provide something in the notes to accounts. They are not writing it in the notes to accounts. So this is not a case of evidence not available. This is a case of evidence available, but there is a material misstatement. So tell me, everyone, if evidence is available, we check ACPD is correct or not. If ACPD is wrong, amount, classification, presentation, disclosure, then we will give qualified or adverse opinion. Look at this. Qualified opinion or adverse opinion. I want a confirmation. Are you clear with this? Yes, sir. All right. With that, we finish the discussion on SA 570. So we are done with SA 560. We are done with SA 570. All right. Now SA 580. All right. Now SA 580, written representation. They have asked really good questions for written representation. All right. I will quickly revise written representation for you. Everyone over here, I don't want any material uncertainty over written representation. All right. Hello. What is written representation? Written representation is a written statement signed by the management addressed to the auditor. Come on, fast. Written representation is a written statement signed by the management addressed to the auditor. See, when I was teaching, I had created full written representation over here. Listen, over here in the worst possible handwriting. Look at this. So, to the auditor. Wait, focus over here. To the auditor, then the date and everything. Then, dear sir, ma'am, guru, signed by, all right, the management. Okay, so we will go one by one. We'll go one by one. When it comes to written representation, first the format. Focus over here. It has to be in letter format. It has to be in letter format. All right. Then date. I know in the revision series, I always take SA 580 after SA 560 so that you understand date point very clearly. All right. Date of written representation should be as near as practicable to, but not after the date of auditor's report. So you need to take it before the date of auditor's report. You need to take it before the date. Thank you. You need to take it before the date of auditor's report, but not very early. All right. So it should be as near as practicable to, but not after the date of auditor's report. All right. So everyone over here, listen to me. Why it is written in this manner? As near as practicable to, but not after the date of auditor's report. Why they have written in this manner? Why they are saying as near as practicable to? All right, because we also want to cover subsequent events. We also want to cover Sumi's adjustment in writing. So we also want to cover subsequent events. So first of all right, we want to cover the subsequent events. Yeah, date. We want to cover subsequent events. And why I'm saying not after the date of auditor's report? Why I'm saying that at least you should take it before the date of auditor's report? Because written representation is a necessary evidence and it is not possible to form an opinion without written representation. And am I clear with this? Yes. All right. So very important logic for the word date. All right. So subsequent events and written representation is a necessary evidence. Listen to me. Wait. We will go one by one. Too much of discussion will create a problem. So if you see over here, CA Manoj is the statutory auditor of a company. He has completed the audit and issued the audit report dated 30th June 2024. Before signing the audit report, written representations dated June 29, 2024 were obtained from the management of the company. Discuss the significance of the date of written representation. Also state whether written representation obtained on June 29 is proper or not. Tell me everyone, he has obtained it on June 29. Can I say it is proper? Yes or no, sir? Audit report is signed as on 29 June. Written representation should be dated as near as practicable to, but not after the date of auditor's report. Why? Because auditor wants to obtain sufficient and appropriate evidence for subsequent events. All right. So auditor also has to take it in writing from the management that they have fulfilled their responsibility for subsequent events. Second, written representation is a necessary evidence. So it is not possible to form an opinion without written representation. You will explain these reasons and you will talk about the date and you will say that, okay, date is appropriate. So there are dedicated questions only for date. All right, wait. Now, period. All right. Hello. We ask management. See, this is the CFO is writing this. Huh? CFO is telling us we have fulfilled our responsibilities and hereby confirm the following to the best of our knowledge. We have fulfilled our responsibilities in relation to preparation and presentation of. Tell me, if you are conducting audit of financial year 25-26, there are two columns in the financial statements, current year column and previous year column. We are taking written representation for which column? On both the columns. This is what happened 10 minutes late. All right. और ऐसे का 10 मिनट का कंटेंट फोकस over here. Listen to me. When it comes to period, all right, written representation shall be taken for all financial statements referred to in the auditor's report. So say we will take written representation only for the period which is covered in auditor's report. Now, which period is covered in auditor's report? Current year. Then we will take written representation only for current year. If audit report is covering 2 years, then we'll take written representation for 2 years. But in India, audit report cover only the current period. Am I clear with this? So don't just say current year. All right. Then you will get current in the mark sheet. You will have to say written representation shall be taken for all financial statements. All right. For the period under audit. Tell me for the period under audit, the period which is referred to in the auditor's report. All right. Now let us say, hello, Shoy. Let us say that you are conducting audit of financial year 25-26. You ask the CFO to give the written representation for financial year 25-26. CFO says, hi, actually not possible. Why? I joined from October 25. from April 25 to September 25, there was previous CFO, CFO Sam. All right. I am CFO Raju from October 25. So I will give you return representation only for 6 months. Is it acceptable? No, no, no. Give me the English why it is not acceptable. Yeah, actually, we just feel. Right, no, wait, look at this. The management of PQ Limited changed during the period under audit. The full question paper, you should just write yes, no, no. Within 50 minutes, you'll answer. Mr. G, an auditor at the time of receiving return representation. Hey, wait, first line adjustment. Management was changed. Mr. G, an auditor at the time of receiving return representation of management, responded for management was in a dilemma relating to the date and period. Date we are clear with. For the new management of the was of the view that they can give return representation only from the date they took over and not for the prior period when old management were managing the affairs. All right. So what you will do? Shout then. All right. Then I need one very important line. Date is covered. Period also we know referred in the auditor's report. This line. Situations may arise where current management were not present during all periods referred in the auditor's report. Such persons may assert that they are not in a position to provide some or all of the representations because they were not in place. This fact, however, does not reduce such persons' responsibilities for financial statement as a whole. Accordingly, requirement for the auditor to request from them written representations that covers whole of the relevant period still applies. Am I clear with this? Yes or no, sir? I will need this. At least in short form also it is fine, but something from this situation word at least. Situations may arise where current management were not present during all periods referred to in the auditor's report. They may say that they don't want to give written representation for full financial statement. All right, still it is okay. At least you are writing something. Okay. However, this does not reduce the responsibility of the current management to provide written representation for whole of the financial statement and the relevant period covered in the auditor's report. Therefore, auditor must obtain written representation from the current management for the whole of the relevant period. You will have to explain this. Are you getting my point? I mean, at least little bit in your own English, fine. All right, but something is required over here. At least chemical paneer you give. Or let's say over here. You are giving dhokla instead of paneer. This so. See, I've written also. I've written also when I was teaching. This is case study. All right, this line. So I'm not saying by heart everything of written representation. All right, but few lines are very sensitive. Yes, sir. All right. Next. Still, I'm talking about content. Okay, content of written representation, content. Now I will focus on content of written representation, content of written representation. First, I will give you a clear formula. Focus over here. When it comes to written representation, first we want management to give it to us in writing that they have, they have fulfilled their responsibilities. They have fulfilled word very important that management has fulfilled its responsibilities. All right, with respect to financial statements, they have provided complete and accurate information to the auditor. They are not hiding anything from you. Full toxic mode. You're not hiding anything from me, no? You're not hiding anything. So they have provided complete and accurate information, all right, to the auditor. Then whatever was agreed in the whatever was agreed in the terms of engagement. Hello. I was expecting a hero moment, like I'll say, and you will reply. All right. Whatever was agreed in the edit this edit. Whatever was agreed in the terms of engagement. See, everyone is replying. Huh? Whatever was agreed in the terms of engagement, letter of engagement. They have also fulfilled those responsibilities. So hello, 1, 2, 3, 1, 2, 3, 1, 2, 3, all about fulfillment of their responsibilities. Am I clear with this? Yes. So first, fully you have to write about fulfillment of the responsibilities. All right. Then you have to, then why I'm taking up essay 580 after so many essays? Tell me in different essays, can I say we are taking different types of written representation? Yes or no, sir? All right. So we also have to take written representation as required by other essays. We have seen this in these 2, 3 essays that we were talking about written representation. And then for any other additional matter as required by the auditor, you can take written representation. I want a confirmation. Are you clear with this? Yes. One more time. Give me the formula. Fulfillment of responsibilities plus other essays plus as required by the auditor. Tell me. Fulfillment of responsibilities plus other essays plus as required by the auditor. Now look at this. Written representation about management's responsibilities involves confirmation of fulfillment of the responsibilities in the preparation of financial statements. Explain. So you have created formula, fulfillment of responsibilities, other essays as required by the auditor. Body, whatever you are aware that they have printed in the question. All right, responsibilities. They want you to elaborate this only. All right, so everyone over here. What are the 3 points of fulfillment of responsibilities that we have? Fulfilled our responsibilities for preparation presentation of financial statement. We have provided complete and accurate information to the auditor. All right. And whatever was agreed in the terms of engagement, whatever was agreed in the all right, we have fulfilled those responsibilities. This is the basic written representation that we will require. Now look at this. Next written representation. Other written here. Okay, yeah, this is also a good question. Look at this. CA is reappointed as the auditor of B Limited. He wants to reconfirm certain matters and has asked management to give written representation for the same. Under what circumstances can auditor ask management to reconfirm its acknowledgement and understanding of responsibilities in written representation? Trust me, answer is very simple. Only question is difficult. All right. This is a very logical question. Listen. This is financial year 25-26. Here you have signed line of England. What is this? Letter of engagement. All right. You started the audit. Okay. Now you are ending the audit. Now you are ending the audit. Here you are taking written representation. So we want management to give it to us in writing that they have fulfilled the responsibilities. All right. Tell me, when I was taking the lecture, I gave you one homework. You remember? You remember? No? All right. Listen. Nothing. I'm just joking. All right. Listen to me. So when you have agreed something few years back, right? And now you are taking written representation. Forget about fulfillment. I did not ask him whether you have done the homework or not. I asked him, do you remember? Do you remember? So sometimes what happens is forget about fulfillment. We want management to give it to us in writing that they understand. All right. So sometimes in written representation, we ask them to first confirm that they understand. Then we ask them about fulfillment. So they are saying some circumstances, sometimes auditor can ask management to reconfirm its acknowledgement and understanding. All right. And then auditor will ask them to confirm that they have fulfilled. Otherwise, normally we directly ask that they have fulfilled. But sometimes we want them to reconfirm that they have understood. So everyone over here, listen to me. Understood the question? Yes. Now answer is very simple. All right. Whenever there are changes, if there are too many changes, right, then in that case, I will be worried that do they understand their responsibilities? All right. Yes. Yeah. Oh, all right. Don't worry. What happened? All right. So let us say if there are too many changes. All right. Or let us say that terms were prepared in a old terms. If you have given someone work before 1 week, today first thing you will ask is, do you remember or what? All right. So old terms, previous year. All right. Or let us say that there is too much of misunderstanding. All right. If there are too much of misunderstanding. All right. So PM changes. All right. Previous year, yeah, change the PM. All right. Previous year or misunderstanding, all right, or changes. In that case, we will ask them to reconfirm that they understand their responsibilities. Then we will take an acknowledgement about fulfillment of their responsibilities. I want a confirmation. Are you clear with this? Yes. All right. Now listen to me. So if I go to these points, tell me, written representation is a sufficient and appropriate audit evidence or just a necessary evidence? Written representation alone, is it a sufficient and appropriate audit evidence? No. All right. Then can I say auditor will have to perform his procedures to obtain the sufficient and appropriate audit evidence? Yes. All right. Wait. I'm just looking at some very important points now. Content done, reliability done, form done. All right. Now listen to me. Last chart. Auditor has requested management to provide written representation. There are two possibilities. Either management provides written representation or management Does not provide written representation. Question 5. CAR Gurumurthy is about to complete the audit of a company. Before completion, he asks management to provide him a written representation, confirming that management has fulfilled its responsibilities regarding preparation of financial statements. He also wants management to confirm in writing about providing of all the necessary information and completeness of transaction. Management feels that auditor is seeking irrelevant documents near the completion of audit. Is the management correct? No. What will Gurumurthy do? Now again chart. Management refuses to provide requested written representation. Auditor shall discuss the matter with TCWG as per SA 260. All right. Man A. But if you want to tally with the suggest answer, you will write discuss the matter with management and TCWG. In this answer, they are printing both. I don't know why. All right. Otherwise, they should directly print TCWG. All right. So discuss the matter with management and TCWG. If still the written representations are not provided related to fulfillment of responsibilities, if still written representations are not provided related to fulfillment of responsibilities, then you will lose the trust over the management. You will lose the. Tell me if they are not. It will leave that bench. All right. If they. All right. What happened? Sorry, yes. All right. So look at this. What happened? Sorry, yeah. Document. That is what happens when you tease innocent child. All right. Okay. Now focus over here. If they are not ready to give it to you in writing that they have fulfilled their responsibilities, then you will lose the trust over the entire management. Then in that case, they are saying straight away give. No, that is why I'm telling focus. Straight away, institute has written disclaimer. Why? All right. What is your name? Okay. Kajal. All right. So now please you can you give it in writing that you are the most sincere person. All right. It's a fake statement. All right. So Kajal will fall in this case. She is giving it to me in writing, but I know that I have a doubt. All right. So everyone over here. Now focus on. If management is not giving to you in writing, let us say she would have denied. No, I cannot give it to you in writing. All right. Then I will for sure doubt yes or no, sir. If management is not ready to give it to you in writing about fulfillment of responsibilities, then till date, whatever evidences they have given, purchase invoice, sales invoice, whatever they have given, all right, tell me, we will develop a doubt. And that is why we will give each opinion. No qualified, straight away disclaimer. Only in this essay. All right. Now listen to me. You are saying, say at the top of the voice in this lecture, that written representation is a necessary evidence. Audit, or it is not possible to form an opinion without. So if I don't give you the necessary evidence only, you will not be able to form an opinion. And you will give which opinion? Disclaimer. So Gurumurthy. All right, Gurumurthy will give disclaimer of an opinion. Am I clear with this? Yes. All right. Focus over here now. One more nice question. All right. During the audit of a company, CA Jack, just read this question with one coffee. Focus over here. Tell me, he has obtained written representation, yes or no, sir? Hello? Yes. Regarding all known instances of non-compliance that should be considered in the preparation of financial statement. However, during the audit, he observed that management says that we have disclosed everything to you. All right. All known instances of non-compliance. However, during the audit, he observed that information provided in this regard was and evidence indicating such non-compliance contradicted the written representation. Casting doubt on the everyone over here. Means management has provided written representation, but auditor develops doubt over reliability of written representation. Well, let us say written representation is inconsistent with the evidence. All right. Then auditor shall discuss the matter, perform additional procedures, try to resolve the doubts. But tell me, if the doubts remain unresolved, listen, if you don't give me a written representation, or let us say you give me a written representation on which I can't rely. Let us say that I am the auditor of Rajesh Exports. He is the CFO of Rajesh Exports. Morning 11 a.m. he signed written representation. 4 p.m. he was taken by police. All right. Then tell me, will I trust? No, na. So either you don't give me written representation or you give me a written representation on which I can't rely. For me, it is the same. All right. So even this will lead to disclaimer of an opinion. Look at this. Full chart they have copied what I have over here. All right. Means I have copied from them. All right. So full chart they have written. Okay. And then at the end, they're talking about disclaimer of an opinion. Am I clear with this? Yes. So, acha, there is one just small adjustment in the written representation. In the written representation, sometimes management may use such language. All right, listen. In the written representation, sometimes management may use such language. We hereby confirm the following to the best of our knowledge. This is called conditional language. Which language? Qualifying language. All right? If management is using such language, but if a responsible person is signing, all right, then in that case we can accept such kind of qualifying language. All right, not a problem over there. So when it comes to written representation, either there will be a technical question on date period, or there will be a technical question on the content. All right. Or there will be a technical question on management is not providing written representation or providing, but we are not able to rely. Tell me, whose signature on written representation you will prefer? CFO or the chairman? CFO. Or any of these? CFO. Very good. Written representation is signed by management rather than those charged with governance. Because management has the knowledge of the concerned matters. Remember one line forever. Written representation shall be signed by such person who has knowledge and responsibility of the financial statements. Who has knowledge and responsibility of the financial statements. And it is normally the management who has the knowledge and responsibility of the financial statement. So CFO signature will be preferred over the chairman. Am I clear with this? Yes or no, sir? Yes. So let me just think. Written representation, date, period, content, who will sign? None. Written representation is just a supporting evidence, not a sufficient and appropriate done. Written representation provided by the management develops doubt, question done. Written representation not provided by the management, that is also done. So we are done with essay 580, written representation. So three long discussions of chapter 7 are over. That is essay 560, 570, and 580. Now we have short discussions. That is essay 260, 265, and essay 450. All right. All these three look like one essay only. All right. Okay. All right. So we are continuing our discussion in chapter 7 essays. Chapter 7, essay 260, 265, essay 450 is something that we will target to wind up ASAP. All right. Essay 260, very clear question. Communication with those charged with governance. All right. No confusion at all. If you see on your screen, all right, there are basically three types of discussions over there. First one is who is those charged with governance. So we know who is those charged with governance. In normal English, we know, but whether we know it in essay English or not. All right. So who is those charged with governance matters to be communicated and the manner of communication. All right. These are the three discussions. Who is TCWG matters to be communicated and manner of communication. And sometimes they can ask you on benefits of such communication. All right. Which is the very first question. Look at this. In what ways an effective two-way communication between auditor and TCWG is important? See, if auditor and TCWG, both of them communicate with each other, all right, then it will help in understanding the matters related to audit, right? That is the first thing. Second, if auditor has a very good relationship with TCWG, then it will help the auditor in obtaining important information from those charged with governance. If auditor is communicating important matters with TCWG, then it will also help TCWG in fulfilling their responsibilities. All right. So three things. First, both of them will develop a good relationship. Second, it will help the auditor. Third, it will help the TCWG. All right. First, both of them will develop constructive relationship. Second, it will help the auditor. Third, it will help the TCWG. It will help auditor in obtaining important information. It will help TCWG in fulfilling their responsibilities. That is how effective two-way communication can help. All right. So that is one point. Then look at this. This was asked in Jan 25. All right. They want to know clearly who is those charged with governance. All right. And we have to guide them by explaining that who is TCWG. Look at this. Who is TCWG? See, when I say who is TCWG, means TCWG is the person who is providing strategic direction, who is providing strategic direction and supervising oversight of the management. Now, when it comes to big entities, all right, large entities, you will clearly see a difference between management and TCWG. So normally you will see the two-tier structure over there, where management and TCWG will be separate. All right. However, in mid-sized entities, all right, you will see that management and TCWG could be the same. All right. So one tier structure. In government entities, we have seen the concept of external TCWG. Like Railway Ministry is the TCWG for India and Railways. All right. So it becomes external TCWG. And in NGO, NPO, sometimes Chopra uncle is supervising, sometimes Malhotra uncle is supervising. All right. So in NGO, NPO, TCWG may not be clearly defined. So 4 points for who is TCWG. In large entities, you will clearly see two-tier structure. All right. In mid-sized entities, you will see one-tier structure. And in government entities, you will see external TCWG, and in some NGO, NPO societies, TCWG may not be clearly defined. So that is your point on who is those charged with governance. All right, and you get your marks over here. Then next is the matters to be communicated. All right. Now, if you see over here, in matters to be communicated, I have created one code word IFRS. There are total 4 matters to be communicated. How many matters? 4 matters to be communicated. Now, what are those matters? All right. I for independence. Listen, this is very important for MCQs. In listed entities, auditor has to give a written declaration. I repeat, in listed entities, auditor has to give a written declaration to the TCWG that I am independent. All right. So auditor has to give a written declaration about independence in case of listed entities. Wait, I for independence. Wait, F for findings. What auditor will communicate with TCWG? Whatever are the important findings. F for important findings, all right, significant findings. R for responsibilities of the auditor. Whatever are the important responsibilities of the auditor, which we study in chapter 1, that auditor will communicate with TCWG. And S for whatever is the scope and timing of audit. All right. One more time. What are the matters to be communicated with TCWG? IFRS. I for independence. That is a written declaration required only in case of listed entities. F for findings, significant findings from audit. R for responsibilities of the auditor, and S for scope and timing of audit. All right. IFRS, 4 matters to be communicated. First, I will explain I. I for independence. That I'm explaining only for MCQ. All right. So when it comes to independence, listen, if ABC firm of chartered accountants is the auditor of Alpha Limited and CA is the engagement partner, then in case of listed entity, they have to give a written declaration. Now, what is the content of that written declaration? The CA will have to say that, hello, engagement partner, that means CA, his audit team, all right, his firm, and network firm. All right, sir, which is the network? So, what do you understand by network firm? Let us say ABC firm and PQR firm, both of them are controlled by EY. Then ABC firm and PQR firm will become the network firm. So, I repeat, if you just by heart that in listed entities, auditor has to give a written declaration about independence, it's of no use. You need to know the content. That in written declaration, they will have to write engagement partner, audit team, firm, and network firm. All of them have complied with the requirement of independence. All right. Then, whatever is the relationship between ABC firm, all right, and Alpha Limited, let us say one partner is providing some other services, one distant cousin is working over here, whatever it is. All relationships and other matters between the firm, network firm, and the listed entity. So between the firm, network firm, and the listed entity, whatever relationships that they have, which can in fact, which can affect their independence, that also needs to be communicated. Third, and the most important, whatever are the audit services and non-audit services, because I'm done with the concept of independence chapter 11, you can understand that if you are providing non-audit services, all right, it can affect your independence. So whatever are the audit services and non-audit services provided by firm and network firm to listed entity and the subsidiaries. All right, remember this table. Whatever are the audit services and non-audit services provided by the firm, network firm to the listed entities and its subsidiaries, whatever income they are earning from that they will have to disclose to TCWG. All right. And third, they also need to disclose the safeguards. All right, applied to eliminate such threats, whatever preventive corrective actions they have taken. One more time. What is the written declaration of independence? That engagement partner, audit team, firm, network firm, all of them have complied with the requirement of independence. Then whatever are the relationships and other matters between the firm, network firm and the listed entity, and the subsidiaries of the listed entity, that also needs to be disclosed, especially in that case audit and non-audit fees which is earned by the firm and network firm while providing audit and non-audit services to the entity and its subsidiaries, that needs to be disclosed. And third, safeguards applied to eliminate or reduce the threats to an acceptable level, that also needs to be disclosed. All right, so this will be the entire written declaration for independence, which is mandatory in audit of financial statements of listed entities. IFRS, I done. I done. All right. Now F. F for findings from audit. Significant findings from audit. Again, this is one of the question over here. Look at this MTP August 25. What if it is question in September 26? Look at this. CA Ritu is conducting statutory audit of KLM Limited. During the audit, she encountered significant difficulties in obtaining certain information. She also noted that one of the accounting practices was not applied by the company properly. With reference to SA 260, what are the significant findings from audit that should be communicated to TCWG? So I'm giving you simple formula. If the question is about significant findings, all right, your code word should be wo mard. All right. So these are the points which are to be communicated with TCWG. All right. So look at this. Wo. W for written representation. Whatever written representation we have requested from management, if management is not providing, then we will go to whom? Those charged with governance. All right. O for any other matter which is relevant to financial statements, which is very important for TCWG. Now, Mard. M for matters subject to discussion with management. There can be some very significant matters which were discussed with management, like some fraud by employees or some GST non-compliances. So whatever was discussed with management, which is very important, that you feel that there is a requirement to communicate with those charged with governance. All right. A for accounting practices. Not some simple points of accounting practices. Like debit what comes in, credit. No. Qualitative aspects of accounting practices. Which aspects? Qualitative aspects of accounting practices, important policies, estimates, disclosures, all right. These kind of things we will communicate with those charged with governance. All right. Then R for hello, whatever are the modifications in the report, qualified, adverse, disclaimer, key audit matter, emphasis on matter, other matter. All right. Whatever are the main concepts of audit report. All right. Wherever you have included additional discussions in audit report, that also you will communicate with those charged with governance. And whatever difficulties you have encountered, like management is not allowing you to get the data, whatever it is. So whatever difficulties you have encountered, that also you will communicate with those charged with governance. Now listen to me, everyone. If I look at this question, wo mard, W for written representation, O for other matters relevant to financial reporting, M for matters discussed with the management, A for accounting practices, qualitative aspects, R for report modification, and D for difficulties encountered. If you look at the question, D for difficulties encountered and A for accounting practices were already discussed. So you have to write the balance points which are not covered over here. All right. So wo mard. All right. Whatever you have to write that wo mard, and whatever is covered is fine. Other points you can write over here. All right. So wait. I'll go back to my discussion. We are communicating with those charged with governance. All right. What are the matters to be communicated? IFRS. I for independence, very important MCQ which we have done. F for findings. R for responsibilities of the auditor. When I was taking the revision of chapter 11, all right, ethics and terms of engagement, there was one very important point which I did not discuss at all. All right, now it will help me. All right, so listen to me. When we were discussing chapter 11, yeah, when we were discussing chapter 11, we came across this concept. All right, we came across this concept of engagement letter, correct? We came across this concept of engagement letter. All right. Engagement letter is sent to whom? All right. It is to the management by the auditor. So if I am the auditor, can I write engagement letter to those charged with governance? Yes. Listen to me. Engagement letter can be given to management or TCWG. Now imagine she is the management and imagine he is those charged with governance. All right. I am the auditor. If I have already discussed the letter of engagement with TCWG, then he already knows the response. He already knows that I am the auditor, yes or no, sir. He already knows my responsibility, yes or no, sir. Now, if I tell him, hey, yeah, sit for 2 minutes, no? Actually, my responsibility is to obtain reasonable assurance. Hey, what you are suffering from some Alzheimer? You have only discussed the letter of engagement with me, no? SA 210, Chapter 11, interfere. But now I'm discussing SA 260, Chapter 7. Listen, my response, hey, no, yeah, this will look so comedy, so stupid. All right. So look at this. They are saying that if letter of engagement has been discussed and agreed with TCWG, then there is no separate communication required as per SA 260. However, if letter of engagement has been agreed with, then we will have to forward a copy of such letter to those charged with governance. So one more time. I for independence listed entity written declaration compulsory. F for significant findings, wo mard. Alright. R for responsibilities of auditor. If I have discussed letter of engagement with TCWG, no need to communicate as per SA 260. If I have not discussed letter of engagement with TCWG, then I will have to forward a copy. Alright. And as for scope and timing of audit, no need to by hand this. All right. Plan scope and timing of audit. Whatever is my planned scope and timing of audit, when I will visit and stuff, all that I will discuss with TCWG. All right. So I repeat, we are done with who is TCWG. We are done with matters to be communicated with TCWG. The very first question that we did was benefits of the communication. All right. Now let us see if there is some more question over here. All right. 1, 2, 3. Yes. So very few questions have been asked from SA 260 because anyways the content of SA 260 is limited at CA Inter level. Okay. So who is TCWG? Matters to be communicated and benefits of such communication. All right. That is more than enough when it comes to SA 260 communication with TCWG. All right. Next, SA 265. All right. This has some good question. Communicating deficiencies in internal control to those charged with governance and management. Communicating deficiencies in internal control to TCWG and management. The essay is very clear that essay is worried only about deficiencies in internal control. Everyone over here, listen to me. Deficiencies in internal control. Okay, listen to me. When you are conducting audit, all right, during the course of audit, if you find that there is some weakness in their internal control system, means there is some deficiency in internal control system. First of all, what is the meaning of the word deficiency? I want clear formula in your mind. Either internal control is unable to PDC, either it is unable to prevent, detect, or correct misstatement. So system is there, but it is not functioning. All right. For example, cashier and accountant are separate people. I have divided the duties, but no one is checking the work of each other. All right. So it is unable to prevent and detect and correct misstatement. Second, all right, the control is missing. The necessary control is missing. It is a missing control. All right. That is why it is not able to PDC. Let us say I have appointed the same person as the cashier and same person as the accountant. If same person has multiple duties, okay, then in that case it has too much power. Too much power, then they can commit a fraud, yes or no, sir? Yes. So one more time. Either control is unable to PDC or the control necessary to PDC is missing. Tell me. Either control is unable to PDC or the control necessary to PDC is missing. Then we say it is a deficiency in internal control. Let us say you are conducting audit of DMart. All right. And in one of the stores of DMart, let us say in South End store of Bangalore DMart, all right, there was one daily stock reconciliation exercise which was not done properly by them. Which was not done properly by them. Can I say we need to inform the CFO of DMart, yes or no, sir? Oh, that will be too much, yeah. All right, that will be too much. Okay. So what institute says is, if you identify deficiency in internal control, you will have to check whether it is a significant deficiency or not. Only if it is a significant deficiency, then you go to higher level of management, TCWG and stuff. But if it is not a significant deficiency, all right, then you will communicate with lower level only. All right. Like I told you, DMart, one of the store, there is a problem in stock reconciliation. You cannot say it is a significant deficiency. Wait, don't read the chart. That means our main job is to find out whether a deficiency is a. All right. Then which deficiency will be called as significant deficiency? Any deficiency which requires the attention of TCWG. Tell me. Any deficiency which requires the attention of TCWG. Theory is fine. Practically, how we will come to know. All right. Exactly. That is the question. List some of the matters that auditor may consider in determining whether a deficiency is a significant deficiency or not. There are too many matters given over here, but my code word is clear, like volume and amount of SUSU. All right. When will I say that the deficiency is a significant deficiency? Listen, when the likelihood, what is likelihood? Probability. Probability of material misstatement increases, like, okay. Second, imagine in a banking industry, in the interest calculation software, if there is a simple deficiency that there is one error of 1 day, software is not able to calculate that 1 day properly. So that leap year and stuff is not functioned programmed properly. Tell me, will it be a significant deficiency? Yes. Because of the volume involved, because of the. All right. So volume will also decide whether a deficiency is a significant deficiency or not. All right. Then I also need to see how much amount is exposed to that deficiency. I went to the management. Management, there is no one ready to over here. There is no one watching over the cash balance. All right. No one is looking at the hard cash. Management gave me a hard slide. That idiot, the only cash that we have is petty cash. For that, you want me to appoint an employee or what? Oh, so I also need to see the amounts exposed to deficiency. All right. Then SUSU. Su. Sue for susceptibility to loss or fraud. Tell me, if I give you plant and machinery, which is there in 2 acres of land, right? That okay, you can steal this, or I give you cash to steal. Where you will steal first? Cash, no, because the cash is more exposed. Susceptibility means exposed. Cash is more exposed to loss or fraud. So that cash deficiency is a significant deficiency. Understood this? So everyone over here, you can't take decision just by one factor. You have to see everything. All right. Like volume and amount of SUSU. All right. SU. Subjectivity and complexity of estimated amounts. All right. Tell me everyone. I have invested in a private limited company. All right. Which is a computer company, computer software company. The turnover of this private limited company is Infosys turnover divided by 1 lakh. All right. So can I say the share price of this private limited company will be Infosys share price divided by 1 lakh? Yes or no, sir? Are no, na. If I am calculating in this manner, all right. First of all, you will take my CA degree. All right. Boss, value of a private limited company is a very subjective calculation. It is a very. All right. If there is a deficiency in such area, then it will turn out to be a significant deficiency. All right. So like volume, I should have a proper calculation software, not this way. Like volume and amount of SUSU, like for likelihood, then volume, amount, all right, and susceptibility to loss or fraud, and then subjectivity and complexity. All right. These things will help me to decide whether a deficiency is a significant deficiency or not. Now my essay goes ahead. If it is a significant deficiency, if it is a significant deficiency, all right, if it is a significant deficiency, then I will communicate in writing with appropriate level of management and TCWG. Both are both. I will communicate with appropriate level of management and TCWG. Who will be the appropriate level of management? Some kind of lower level manager or the CEO, CFO? CEO, CFO, because it is a significant deficiency. Let us say that I have a complaint with CFO only. CFO is the one because of which there is a deficiency. Then I will communicate straight away with TCWG. If management appears to be involved, then communicate directly with TCWG. If TCWG is also involved, then this essay does not talk about it. All right. Because this essay is an internal communication. But normally we take legal advice then what to do. All right. But don't write all of that. So if there is a significant deficiency, we will communicate in writing with appropriate level of management and TCWG. If management appears to be involved, then communicate directly with TCWG. However, If it is not a significant deficiency, like one DMart store stock reconciliation problem, right? Then you will communicate with that store manager. You will communicate with that. But wait, you went to the store manager. Store manager, yesterday employees they did not do the reconciliation properly. Get out from here. I already have a field manager. He told me that. You should have first asked field manager whether he has informed me or not, and then entered my cabin. Understood? Look at this. So I have to determine whether such deficiency has been communicated internally to appropriate level of management. If someone has already communicated this to the appropriate level of management, all right, then in that case, no communication is required by the auditor as per SA 265. All right. However, if no one has communicated this to the appropriate level of management, then I will communicate in writing with appropriate level of management. But who will be the appropriate level of management over here? The immediate higher level authority. So if it is the stock reconciliation issue, it will be the store manager. I want a confirmation. Are you clear with this? Yes. So one more time, this chart is everything. All right. First, we need to see whether there is a deficiency in internal control. Deficiency in internal control, either internal control is unable to PDC or the necessary control which is required for PDC is missing. All right. Then we have to see whether it is a significant deficiency. For that, I will have to see like volume and amount of SUSU. All right. Then, if it is a significant deficiency, I will communicate in writing with appropriate level of management and DCWG. Your appropriate level will be CEO or CFO. However, if management is involved, then I will communicate directly with DCWG. If DCWG is involved, I will not think about it. If it is not a significant deficiency, then first I have to determine whether it is internally communicated to the appropriate level of management. All right. If it is internally communicated to the appropriate level of management, then in that case, no communication is required by the auditor as per 265. However, if it is not communicated with appropriate level of management, then we'll have to communicate in writing as per 265. You don't watch this video in 2x, 4x, idiot. All right. So everyone, that was for record. Okay. Look at this. Examples of significant deficiency, like volume and amount of SUSU that is done. Sometimes students SUSU at the wrong place. All right. No. Sometimes the question can be indicators of significant deficiencies. Sometimes the question can be indicators. Which caters? Indicators of significant deficiency. Let us say if you find mistake in my book. All right. The first thing that you will think is, see, that means he did not see his own book. We are students, no, he should have first read the book. That means there is some problem in his process. All right. You have not actually found out what is the problem, but you are now doubting me. Right. This is an indicator of significant deficiency. Look at this. Misstatements detected by the auditor, which were not detected by entities, internal control. Hello. Yes. All right. Mid. Yeah. MIP. Yeah. Mid. All right. Then look at this. Ineffective control environment. Work culture. Bloody that CFO, CEO, director, chairman are playing Ludo. All right. When you are communicating deficiency to them, they are asking you also to join in the game. Ineffective control environment, work culture. All right. Work culture is very ineffective. No one is looking after anyone. All right. Then, hello. Let us say you did not find mistake in my book. I told you that there is a mistake and I asked you to rectify. Still, you will doubt me. That means he did not see this before printing. Right. So even if management discloses mistake to the auditor, that sorry, auditor, last year we committed a mistake, we have rectified it. That means something went wrong somewhere, yes or no, sir? Yes. So disclosure of prior period items, mistakes of the last year getting rectified in the current year, prior period item. All right. So tell me everyone, indicators of significant deficiency, say MID, or FDIM. All right. So M for misstatements detected by the auditor, which were not detected by the management. I for ineffective control environment. All right. D for disclosure of previous year's misstatement in the current year's P&L. Am I clear with this? Yes. All right. Sometimes that can be a question. Let us see what they have asked over here. CA Vasu was appointed 1 minute. This question. See MTP April 25. What if it is actual question September 26? All right. Auditors are required to obtain an understanding of internal control. Yeah. PDC Limited appointed CA Nikhil as auditor for financial year 25-26. Yeah. During the audit, he observed significant deficiency. Yeah. Look at this theory question. What is that straight away? Actually, there are five, six indicators. I gave you only three because beyond that, students can't buy it. Right? If you can, then it is fine. Misstatement detected by the auditor, which management has not detected. Sorry, misstatement detected by the auditor, which management has not detected. Then I for ineffective control environment. D for disclosure of a misstatement. All right. So at least two, 3 points, there's some respectable marks you will get over there. All right. If they talk about indicators of significant deficiency, do not susu. If they talk about indicators of significant deficiency, where you will susu? Only if they ask, list out some matters or examples which talk about significant deficiency. All right. Now listen to me. Let us say you have identified significant deficiency. All right. Then this essay wants you to communicate in writing with appropriate level of management and those charged with governance significant deficiency. But how you will communicate in writing? Can I say we can just send a snap to TCWG? No. All right. You will need to give a detailed communication. All right. Look at this. You have to explain what is the deficiency. D for description. You have to tell them that what can be the effect of that deficiency. So listen, when you are communicating in writing, you have to they. Okay. D for description and E for explanation of the effect. All right. Sometimes it so happens, all right, that one girl is sharing her notes with one boy, and the boy starts family planning. All right. And she is so supportive. And then the girl says, relax, bro. All right. I am just sharing notes. You are thinking too much. Similarly, even auditor needs to control the expectations of TCWG. That, bro, I am here to conduct audit of financial statements and express an opinion. I am not here to provide a separate assurance on internal control. I am not here to provide separate assurance on internal control. All right. So my audit does not include such assurance on internal control. This communication is only for your clarification. That does not mean that I will express a separate opinion on internal control. Look at this. You have to explain them the context that, bro, I was just sharing notes. What do you want me to share? I will not. Look at this context of the communication. That purpose of audit was only to express an opinion on the financial statements. All right, I have considered only those controls which are relevant to financial statements. Only those deficiencies have been communicated which were identified during the audit. Am I clear with this? Yes. This is compulsory. Further, it's just a recommendation, but this is compulsory. D, E, they, context. Tell me. They, context. D for description. E for explanation of effect. All right. Of that deficiency. And then we have to explain them the context. All right. The point of view, the feelings. So everyone over here. Now let us go to this CA Vasu. CA Vasu was appointed as auditor of Messrs. Pizza Limited for financial year 23-24. While reviewing internal controls, all right, he observed that the company has entered into many transactions with firms in which directors are interested. The company's specified procedure was bypassed in such transaction. Oh, system not followed in related party transactions. What do you think? Is it a significant deficiency? Are hello? Yes, if the system is not followed in a related party transaction, obviously it is a significant deficiency. Don't worry, they are not trusting your brain. They have written it in the question. That it is a significant. Anyways, you should understand that it is a significant deficiency. All right. He communicated this deficiency to TCWG as under. Look at this CA Vasu, Gen Z auditor. Look at this one line he's communicating. That, bro, controls over significant transactions with related parties are weak. Okay. Thank you. All right. This is such a short communication. All right. In view of the above, please explain what is meant by and what is meant by internal control. Yeah, baby. What is meant by deficiency in internal control? All right. So look at this. What is meant by deficiency in internal control? All right. One control is YouTube editor. Like one, I'm a very sophisticated person. All right. One control is unable to PDC. All right. Or the necessary control for PDC is missing. All right. Then, as per SA 265. All right. Whether the significant deficiency communication is appropriate? No. Because CA Vasu has to the context. All right. Look at this. He has to give a description. He has to explain the effect. He also has to give a context of communication. All right. Therefore, this communication is not proper. I want a confirmation. Are you clear with this? Yes. One more time. When it comes to essay 265, first we should know that the definition of deficiency in internal control. All right. Then we should find out like volume and amount of SUSU, whether it is a significant deficiency. If it is a significant deficiency, management and TCWG, unless management is involved. If it is not a significant deficiency, check whether it has been internally communicated. Yes, then no need to communicate. If no, then you have to communicate. And then when you are communicating significant deficiency, you have to the context. Is everyone clear with this? Yes. Remember one thing. SA 260. All right. Communication with TCWG. What was that? IFRS. All right. In that, only I for independence was compulsory communicated in writing. IFRS. There were 4 matters. In that, only I was communicated in writing. F, R, and S can be communicated orally also. All right. R though may not be required only if letter of engagement has been communicated with TCWG. But SA 265, SA requires only written communication. Which communication? Only written communication. Are you getting my point? Yes or no, sir? Yes. All right. So 260 is not mandating written communication for everything, but 265 requires a written communication. All right. Last essay for chapter 7. Hey, this is that same question. I will not repeat it just for practice. Deficiency and significant deficiency. All right. Now, essay 450. Sorry. Last essay for this chapter 7, essay 450. Evaluation of misstatements identified during the audit. I have a very clear formula for essay 450 also. Everyone over here, please focus if you want to do it very fast. All right. Essay 450. Okay. This is the small working of essay 450. All right. As you can see on your screen. Essay 450. All right. Says evaluation of misstatements identified during the audit. The first thing, the moment you obtain misstatement, if you identify a misstatement, can I say the first thing that you will do is communicate with the management for rectification? Yes or no, sir? No, no. Wait. All right. Listen, that's okay. All right, that's okay. Let us say that you are conducting audit of Reliance Industries Limited and you found an error of 5,000 rupees in salary. 5,000 rupees in Reliance Industries Limited. You will communicate with the management. Management, 5,000, they will kill you there. All right. Have some level. Don't expose your class over there. All right. That is Anand Ambani. Are you getting my point? So tell them, listen, hey, I don't want to communicate. Look at this. On identifying misstatements. All right. We only know our bank balance. Don't show it to them. All right. On identifying misstatements during the audit. All right. The first thing is first evaluate whether it is within clearly trivial level or not. Whether it is within, listen, clearly trivial means immaterial. Bullshit. Listen, material, immaterial, and clearly trivial are 3 different words. Tell me, material, immaterial, and clearly trivial are 3 different words. Material and immaterial is very judgmental. All right. For example, 50 rupees currently. Just God Lakshmi only for example. All right. 50 rupees currently in this age and in this situation. All right. For me, it is immaterial. All right. Currently for you, not considering your father's income, considering for you, it can be material. All right. As of now. But let us say for both of us, if we are traveling in 2 separate autos, there is a bill of 29 rupees and we have 3 10 rupees note. All right. And the auto person says, sorry, I don't have change. Then 1 rupee, we will let it go. That is clearly trivial. When I say clearly trivial, means, acha, that 1 rupee, I will also let it go, you will also let it go. Clearly trivial is not immaterial. You will get 0 if you write immaterial. Say clearly trivial is clearly inconsequential. Say clearly trivial is clearly. You use this no when you are frustrated with someone that bloody you are absolutely not important for me. If you don't message, what do you think? I will not be able to live my life. You are clearly trivial, clearly inconsequential. All right. Don't use slang language. No. Use audit language. I will give you the words. All right. So if someone is absolutely not important, trash in your life, tell them you are clearly trivial. You have no consequence considering your size, nature, and circumstances. All right. So everyone over here, considering your size, nature, and circumstances. All right. So remember, now you will never forget this. Clearly, see, when I'm taking normal lectures, no, I am worried too much about concepts. In this, I'm a different person. I am just worried that please wear the clothes. That is. So on identifying misstatements, all right, I want to see whether it is within clearly trivial level or not. If it is clearly trivial level, clearly inconsequential considering S and C, size, nature, and circumstances. All right. Neither the size of the amount matters, nor the nature matters, nor the situation matters. All right. Absolutely no consequence. If that is the case, if it is within clearly trivial level, then you need not accumulate such misstatements for further communication. You need not accumulate such misstatements for further communication. However, if it is above clearly trivial level, all right, then you will accumulate the misstatements for communication. So every single misstatement is not rectified or not communicated. Are you getting my point? Yes or no, sir? Yes, sir. Yes, sir. All right, wait. If it is above clearly trivial level, you will accumulate the misstatements for communication with the management. But before communication, check one thing. Let us say you're conducting audit of government entity and Comptroller and Auditor General of India has said that if you find any misstatement which is above clearly trivial level, all right, then you will communicate directly to the office of CNAG and don't communicate with management. Check whether there is any prohibition by applicable laws. So listen to me. Communicate such misstatements with appropriate level of management. Look at this. What I've written. Such communication is prohibited by applicable laws. And I will communicate with a request to correct. So not 99% you will communicate. 1% if there is prohibition, then you will not communicate. Right? So misstatement above clearly trivial level, yes. Then you will accumulate, yes. You will communicate only if there is no prohibition by law. All right, with a request to rectify. Let us say now there are two possibilities. Either management rectifies or management does not rectify. If management rectifies, then we'll have to check whether it is appropriately rectified. However, if management refuses to rectify, if management refuses to rectify, all right, then you will have to understand the reasons that why it is not rectified. Sometimes it is possible that misstatement is not misstatement only, it is just your misunderstanding. All right, so you have to obtain the reasons. If the reasons are not valid, they have valued inventory at cost or NRV, whichever is higher. So tell me, can there be any valid reason for this? No. All right. So reasons are not valid. Reasons are not valid. Now we will communicate with those charged with governance. Are you getting my point? Yes or no, sir? Yes. But wait. What we will communicate with TCWG? Whatever are the fast, whatever are, I can't give too much time to this essay. Whatever are the uncorrected misstatement and its effect on the financial statements, and I will request them to correct. But listen to me, Halosh. I am going in front of those charged with governance. I am going in front of those charged with governance. All right. I am the auditor. Madam, you are TCWG. All right. You are fully serious, like Board of Director Audit Committee Chairman. All right. So let us say she is TCWG. I tell her, TCWG, actually management has not rectified this misstatement. You see this drunkard management. All right. So this management has not rectified certain misstatements. She is TCWG. She will want more information from me. At Pragnesh, so what? What is the exact effect of this? Is it material? Do you want to modify opinion for this? Maybe. My homework is pending, madam. So listen to me. Hello. If you see, I have pulled out an arrow from you. Right? That when you go to TCWG, you can't go unprepared. Where there is a question. All right. We will have to evaluate the effect of uncorrected misstatements. We have to evaluate the effect of uncorrected misstatements. All right. She is TCWG. She would want to know what is the effect of uncorrected misstatements. All right. Now listen to me. I have to finally tell her whether that effect is material or immaterial. You know what? Many times every day I feel, right, that I should divorce my wife. All right. But then when actually I will divorce, then the matter has to be actually material. When I actually think about signing divorce papers, I feel no, yeah, it's okay. Right. Then again, no, yeah, it's okay. So what I'm trying to tell you is that when you finally complain to TCWG, all right, please ensure that you consider everything: size, nature, circumstances of uncorrected misstatements of current period. When I think about that final step, no, it's not only about the latest fight that I've had. I think about all the fights that we have. Look at this. Consider size, nature, and circumstances of uncorrected misstatements of current period plus the unresolved trauma of the past. Effect of uncorrected misstatements of prior period. One more time. What will I tell to TCWG? Size, nature, and circumstances of uncorrected misstatements of the current period plus the effect of uncorrected misstatements of the prior period. Am I clear with this? Yes. Wait. I need to tell to TCWG whether it is material or it is immaterial. Whether it is material or it is immaterial. You see, I've put double asterisk over here. Look at this. And when I go for that final signing of divorce papers, I like, no. What she did was cute. It was not that irritating. Look at this. So prior to evaluating the effect of uncorrected misstatements, you please think one more time. What do I have written? Re-evaluate. Come on, in one voice. If I'm giving so much time and I'm doing drama, then there is a question for this. Please understand. Re-evaluate materiality as per entity's actual financial results. That means one last time we will evaluate as per the actual results, whether it is material or not. Am I clear with this? Yes or no, sir? Yes. One more time. We are going to communicate with those charged with governance. Those charged with governance will require uncorrected misstatement and its effect on the financial statements. All right. But then how to evaluate the effect of uncorrected misstatements? All right. I need to consider size, nature, and circumstances of uncorrected misstatements of the current period. Plus, I need to also consider the effect of uncorrected misstatements of the prior period. And I need to finally re-evaluate the materiality. All right. And then I will decide whether it is material or not. And I will communicate with TCWG. All right. Everything I'll communicate with TCWG. Okay. I will request them to correct those misstatements. If misstatement is not rectified, now listen to me. Problem is, what? Students straight away modify opinion. Modify opinion. Your problem of your generation is you want to straight away come to climax. Okay. Bloody look at this. There is whole process. Okay, straight away don't say modify opinion. Look at this. If misstatement is not rectified, institute says wait, one last chance. Take a written representation from them. I went to management with TCWG. All right. I asked her to rectify. She's also saying no. Then I will say, okay, you fraudster. All right. No. What I will do is I will ask her to give me a written representation. Then madam, you please give it to me in writing. And according to you, misstatements are not misstatements. Or you give it to me in writing that according to you, misstatements are immaterial. See, I will embarrass her. Sometimes what happens, you also fight with your parents. I am 25 years, I have my life, I will take my own decision. Then parents will say, okay, live your life. That's not the solution. You will say sorry. All right, I just spoke sorry. Similarly, I'm trying to embarrass her. Madam, you don't want to verify, you don't want to rectify inventory value at cost and whichever is higher. All right, you are not showing legal cases as contingent liability. You give it to me in writing that it is immaterial. Do you think she will write that? No. So she will rectify. Please understand this English. I want to obtain either you sign that they are not misstatements or you give it to me in writing that they are. All right. This will be the last effort from my side to get it rectified. If still it is uncorrected, then I will evaluate the materiality of whatever is uncorrected. And then finally, if it is material, then I will modify my opinion. That is SF 450. Are you getting my point? Yes or no, sir? All right. This can be very nice MCQs. All right. This one page, all right, has entire essay 450. All right. Listen, everyone over here. Now I will straight away solve the questions. You are nearing completion of audit of a company. All right. On going through your working papers, it is noticed that finished goods inventory was overvalued by rupees 2 crore. It has also been noticed that freight of rupees 10 lakhs paid on import of machinery was charged to statement of P&L. Discuss how you should proceed, and you know what inter-CA students are doing? The moment this inventory overvalued, rate of qualified on adverse opinion. Bloody no one is asking your opinion. They are saying how you should proceed and communicate. Means the question is from essay 450. Any question about communication of misstatement? Any question about communication of misstatement? That question will be from essay 450. Tell me everybody. Chalo, fatafat 450. Is this misstatement above clearly trivial level? Are fast, yeah. Inventory overvalued. All right, one more time. Is this misstatement above clearly trivial level? Yes, you will come. You will accumulate such misstatement and communicate to appropriate level of management unless prohibited by law and regulation with a request to rectify. If management does not correct the misstatement, you will obtain the understanding of the results. If the results are invalid, then you will communicate with those charged with governance the effect of uncorrected misstatements on the financial statements with a request to rectify. Are you getting my point? So you have to bring that communication point over here. Yeah. All right. All of a sudden, do you see that I am energized? Yeah. Increase in energy because this chapter is getting completed. I'm as happy as you. Look at this. Feelings are mutual. All right. Up and High Private Limited. You don't want to see me. I don't want to see you. Up and High Private Limited has started its export business during the year. Joking. Huh? I want to see you at CA Finance. During the year 23-24. The company was catering to domestic market only in past years. CAH statutory auditor of the company is of the view that company has understated its revenue by rupees 50 lakhs by not complying with requirements of AS9 relating to revenue recognition. Discuss the responsibilities of statutory auditor. Some idiot in first 15 minutes he will think, oh, AS9 question. All right. Discuss the responsibilities of statutory auditor to communicate with management in the above situation in accordance with SA 450. All right. Okay. This is fine. Also explain the usefulness. The best usefulness of this communication is that management will rectify. If management rectifies, all right, it ensures that financial statements are free from material mistake. If management refuses, so do you understand my chart is enough? All right, for answering these questions. CA Sandeep has identified certain misstatements during the course of audit of an entity. Except two misstatements, all were corrected by management. He wants to obtain Return representation. One more time. What will be the content of return representation? That either you give it to me in writing, either you give it to me in writing, that these are not misstatements, or you give it to me in writing. All right. That the effect of uncorrected misstatement is immaterial. All right. Okay. Describe the matter contained in such written representation. MTP August 25, September 26. Also discuss documentation requirements regarding misstatements identified during the course of audit. Hello. What were the main points in SA 450? First, clearly trivial level. Then communication. All right. And then evaluation. Hello. That all that we will document. Clearly trivial, whatever you've accumulated, whatever you've communicated, whatever is your final conclusion. Whenever there is any question on documentation, just remember that particular concept. Whatever main points you recollect of that concept, say that document. All right. This question I was talking about for all that drama that I did. This is final say question copy pasted at Inter-CA level. While assessing the impact of uncorrected misstatements in the audit of Mini Builders Private Limited, Mr. Gautam encountered a significant issue relating to calculation of materiality on revenue. The initial materiality was based on estimated figures provided by the management to estimate full year extrapolated sales for 11 months to arrive at a figure for 12 months. This relax. Basically, they have set some kind of materiality level. They have set some kind of materiality level. Tell me, when you started Inter-CA preparation for your attempt, you would have decided what is important, what is not important, yes or no, sir? Hello? You would have done some analysis, yes or no, sir? But when you came closer to your attempt, tell me your materiality level changed, yes or no, sir? Yes. Exactly. So, listen, initial level, Gautam had set some kind of materiality level. But what happened, however, given the nature of mini builders on it, as a company in the construction sector where monthly sales exhibit substantial variation, unique challenge emerged. What happens with, what you feel is important at the start turns out to be not important at the end. Actual sales for the last month deviated significantly from the estimated sales. So earlier, what you thought was important, now that level is changing. All right. As a result, the last month's actual sales represented only 30% of estimated sales. Correct? Now, Mr. Gautam is confronted with a dilemma regarding the appropriate approach to evaluate the uncorrected misstatements using previously calculated materiality. So at the start of the audit, he had calculated a materiality. But what did I tell you? What did I tell you? That at the end, you will have to reevaluate the materiality as per actual financial results. Tell me, when you started Inter CA, you would have set some kind of materiality. Then when you wrote mock test papers, you realize that something is some other chapters are also important. So what you will do is you will reevaluate the materiality as per the actual financial results. Do you feel this point? Yes or no, sir? Yes, sir. All right. That is what they are trying to say. That what Gotham needs to do is he needs to reassess the materiality as per the actual financial results. You will see some references of SA 320 materiality, but that you can ignore in this answer. All right. As the audit progresses, materiality may be revised. All right. Then most importantly, they have discussed the case. Mr. Gotham must review and reassess materiality to ensure its continued validity as per the actual results. Don't worry about the entire answer. This is a CA final level question. I'm not expecting copy paste at Inter CA. All right. But if it is asked, I don't want my students to score zero. You should understand that as per the actual financial results, we have to reassess the materiality. Am I clear with this? Yes, yes. All right. That is your essay 450 evaluation of misstatements identified during the course of audit. Okay. With that, we bring chapter 7 to an end. All right. Everyone over here. We will now finish chapter 8 audit report. Okay. Chapter 8 audit report. Listen to me. When it comes to chapter 8 audit report, there are certain short questions that are asked from this chapter 8 and it is logically easily doable. All right. I will divide chapter 8 into three parts. One is SA 700 to SA 706, all right, which is the main part of chapter 8, the whole audit report format, qualified opinion, adverse opinion, disclaimer of opinion, emphasis of matter, other matter, all right. Okay. Then second part of chapter 8 is some small essays. SA 710, SA 600 and SA 299. And third part of chapter 8 all right, is the company audit reporting requirements, all right, which includes your section 143, subsection 1, subsection 3, subsection 12, and CARO 2020. All right. So, how much can you remember for this, and how much is actually required for exams? All right. So, everyone over here, when it comes to chapter 8, audit report, first and the foremost thing that we should be very clear with is qualified adverse and disclaimer of opinion. There should be no doubt over there. Unmet. Yeah. Okay. First and the foremost thing that we should be very clear with is qualified adverse and disclaimer of opinion. So we will first finish all the questions of SA 705. All right. Modification to the opinion in independent auditors report. See, I know that by the time you reach marathon session, obviously you know qualified opinion is financial statements show a true and fair view except for the following. Adverse opinion is financial statements do not show a true and fair view. Disclaimer of opinion is that we are unable to form an opinion. I'm not interested in such basic knowledge. I'm very much interested in directly the question and the answers. All right. So everyone over here, discuss the factors affecting the decision of the auditor regarding which type of modified opinion is appropriate. How do we decide between qualified, adverse, and disclaimer? How do we decide? First of all, we need to see whether we have obtained evidence or not. So the very first matter is whether we have obtained evidence or not. Second, if we have obtained evidence, what are the uncorrected misstatements? We need to see the effect of such uncorrected misstatement, whether the effect is material or not. There are two possibilities. Either the effect is material but not pervasive. What do you understand by pervasive? Major portion of the financial statements. All right, so effect is material but not pervasive. Then we will give a qualified opinion. But if effect is material and pervasive, then we will give an adverse opinion. All right. Like I had given questions over here. While auditing a company running coaching classes, you observed that admissions of the students and payment done to professors were wrongly recorded in the financial statements. In a coaching class, if admissions of students and payment done to professor itself is wrong, all right, that means the effect is material and pervasive. So we will say financial statements do not show a true and fair view, and we will give an adverse opinion. But in a coaching class company, all right, if the rent payments, all right, have not been properly recorded, in a coaching class company, if the rent payments have not been properly recorded, then in that case, all right, it is only 5% of total expenses. Is it material? Yes, but it is not pervasive. Then we will say financial statement show a true and fair view except for the following, and we will give our qualified opinion. Basically, we decide based upon whether evidence has been obtained or not, and then we decide based upon whether it is pervasive or not. All right, so everyone over here, the decision which the factors which help us to make the decision, nature of the matter, or inability to obtain sufficient and appropriate evidence, judgment about pervasiveness of the matter. And then if you just draw my chart, all right, they have given table. If you also draw a chart, all right, with this theory and then the chart, then you are done. All right. This is how we decide which type of modified opinion is appropriate. All right. Okay. But if you remember, I had such kind of examples also. All right. Where I gave you an example that there is a material misstatement in opening balances. All right. But they have not given the name of the company, nothing. All right. We are not able to understand that whether it is malaria or cancer. We are understanding that it is material, but we are not understanding whether it is pervasive or not. All right. So listen. You observe that there are material misstatements in opening balances which have not been rectified by the management. So focus over here. Evidence obtained, yes. Uncorrected misstatements, yes. Effect is material, yes. But we are not understanding whether it is material but not pervasive or material and pervasive. All right. If we are not understanding whether it is material but not pervasive or material and pervasive, all right, if the question is silent on pervasiveness, then we will say either qualified or adverse. All right, but listen, what if they ask in MCQ? What if they keep the question silent on pervasiveness and you want to write either qualified or adverse? And what if they ask in MCQ and they are forcing you to select? Then in that case, you will go with the qualified opinion. So formula is very simple. Listen, evidence is available. Yes. Uncorrected misstatements. Yes. Material. Yes. Material but not pervasive. Qualified. Material and pervasive. Adverse. But if the question is silent on pervasiveness, then either qualified or adverse. But if they are forcing you to select, then you will stay with a qualified opinion. However, if evidence is not available, then what is the English? All right. We need to evaluate the possible effect of undetected mistaking. If possible effect is material but not pervasive, all right, then we'll go with a qualified opinion. If possible effect is material and pervasive, then we'll go with a disclaimer of an opinion. So financial show and true except for the following, or we are unable to form an opinion. Again, look at this question. You observe that there is insufficient evidence to verify opening balances. Which balances we are not understanding? All right. So the question is silent on pervasiveness. Because the question is silent on pervasiveness, we will go with qualified or disclaimer of an opinion. But again, if they are forcing us to select, then we will go with a qualified opinion. Am I clear with this? Yes. Okay. So everyone over here. Question number next. Distinguish between an adverse opinion and a qualified opinion. Why I have kept such kind of a question here? Distinguish between adverse and qualified, that is fine. That you just copy my chart, it is done. All right. Also, draft and opinion paragraph. All right. For both types of opinion. English, drafting. Adverse opinion, how much you know? Financial statements do not show true and fair view. All right. But listen to me. Whenever there is an opinion, all right. In any opinion paragraph, first there is always an introduction. 1, 2, 3, 4 till here. First, there is always an introduction. In introduction, we have to find out each NP. We have to find out the entity. We have to say that we have audited. All right. We have to find out the title of each statement, balance sheet, P&L, cash flow statement. All right. We have to give a reference to the notes to accounts. All right. We also have to, give the period. So directly don't start opinion. All right. First give an introduction. What will be the introduction? We have audited financial statements of so and so entity. Even if it is broken English, fine, but give some introduction. All right. We have audited financial statements of Reliance Industries Limited, consisting of balance sheet, P&L, cash flow statement for the year ended 31st March, so and so. All right. Give some introduction. And then you will start with the opinion. Adverse opinion, what is the main line? Financial statements do not show a true and fair view. So, in our opinion and to the best of our information and according to explanation given to us, all right, the accompanying financial statements do not give a true and fair view. True and fair view of what? Of my face. True and fair view of the state of affairs as on year end. True and fair view of the means whatever is the position as on year end, and profit and loss and cash flows for the year ended. Everyone, if you want to see it very clearly, then look at this, how to draft an adverse opinion. This is just main opinion. All right. To the best of our knowledge and information available with us, financial statements of the entity do not show a true and fair view of the state of affairs as on year end, and profit and loss and cash flows for the year ended. But tell me, if you remember the audit report format, below opinion, there is always a basis for opinion. Below opinion, there is always a basis for opinion. So we have to say that due to the matters explained in basis for adverse opinion paragraph. All right. Okay. Qualified opinion, same. To the best of our knowledge, financial only show true and fair view, except for the matters explained in basis for qualified opinion paragraph. So everyone over here, drafting part. Okay. Then qualified opinion, again, if you see from here, it is introduction. All right. And then they are starting with opinion. If you just at least read once, no, this whatever questions I've selected for the revision. All right. Then you get a very good confidence. Okay, this is what we are supposed to do. All right. Next, while conducting audit of WPL Limited, you as an auditor are not only prevented in completing certain audit procedures, but also are not able to obtain evidence even by performing alternate audit procedures. How will you deal with this situation? Very nice question. All right. Everyone, there is a particular concept which I want to remind. There is a particular concept which I want to remind. All right. I don't have time to just surf through that particular concept now. Oh, I will not be able to control F over here. Wait. अरे यार एक तो हैंग हो रहा है. ठीक है चलो, I'll make the note only over here. All right. बहुत हैंग हो रहा है. Okay. Focus over here now. Everyone over here, very quickly. Oh, Baba, don't have time for all this. Right? Focus over here. Let us say that if sufficient and appropriate audit evidence is not available, all right. You tried performing alternate audit procedures. No, wait. I always tell you that when evidence is not available, you have to inquire for reasons. Whether there are valid reasons or there are invalid reasons. Okay. If there are invalid reasons, we discuss the matter with TCWG. We request them to remove the limitation. All right. But let us say TCWG refuses. TCWG refuses. All right. Now, this is an intentional limitation on scope of audit, which they are trying to put on me. This is a limitation on scope of audit imposed by management and those charged with governance. All right. Wait. If I'm going so slow in a marathon lecture, please understand this is very sensitive. All right. If sufficient appropriate audit evidence is not available, we ask for reasons. And if there are valid reasons, we will perform alternate audit procedures. All right. We perform alternate audit procedures, but after this also, if sufficient and appropriate audit evidence is not available, all right, then in that case, we call it as limitation. Do you remember this? Limitation on scope of audit due to circumstances. There are two types of limitations. One is limitation on scope of audit due to circumstances. One is they are intentionally blocking you So limitation on scope of audit imposed by management and those charged with governance. Now listen to me. If there is a limitation on scope of audit due to circumstances, let us say accounting records destroyed due to fire. Accounting records destroyed due to fire. All right. So you will see, focus over here. If there is a limitation on scope of audit due to circumstances, you will see whatever is the possible effect. Either possible effect is material but not pervasive, then you will give a qualified opinion. But if the effect is material and pervasive, then you will give a disclaimer of an opinion because evidence is not available. All right. But if there is a limitation of scope of audit imposed by management and TCWG, again you will evaluate the possible effect. You will evaluate the possible effect. There are two possibilities. Either possible effect is material but not pervasive, or possible effect is material and pervasive. If it is material but not pervasive, you will give a qualified opinion. But listen to me. If the possible effect is material and pervasive, first you will have to evaluate whether it is possible to withdraw. Whether it is, because it is pervasive, whether it is possible to withdraw. Practicable and possible to withdraw. Yes, then withdraw. Have some self-respect. If management is shutting the door on your face, not giving you purchase invoice, sales invoice, creating too many restrictions, you went to TCWG, they are also not cooperating, then we withdraw. Because possible effect is material and pervasive. Then you withdraw if it is possible. If it is not possible to withdraw, then you will give a disclaimer of an opinion. All right. It was a very special adjustment in the question bank. So everyone over here, limitation on scope of audit being imposed by management and those charged with governance. This is very special adjustment. Limitation on scope of audit being imposed by management and those charged with governance. Everyone over here, look at this. In this question, look at this. You are not only prevented in completing audit procedures, but you're not able to obtain evidence even by performing. All right, this is old course. Now, new course question. All right, CATA, while conducting audit of an entity is facing following issues. All right, look at this. He has not been provided with necessary support for attending inventory count. One, accounts manager is not providing him present address of customers as well as suppliers. Two, even mail IDs have not been provided. He was not able to verify revenue. He has been asking for bills on sample basis, but staff has been making lame excuses. Tell me, this is a limitation that they are trying to impose, yes or no, sir? Yes. The matter was brought to the knowledge of higher management, but of no avail. The auditor CATA has come to the conclusion that the possible effect, all right, would be material and affecting many aspects of the financial statements. In such a case, qualification will be inadequate, means the possible effect will be material and pervasive. You may have to give a disclaimer. No. First, you'll have to decide whether it is possible to withdraw. Because this is not a limitation due to circumstances. It is not like accounting records have been destroyed due to fire. No, 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 no. All right, this is very clear that they are trying to impose the limitation. So that full explanation is given. All right. Management has imposed limitation. It can lead to qualified or disclaimer. Request management to remove limitation. Management refuses go to TCWG. All right. If auditor is unable to obtain evidence, auditor shall determine if the possible effect is material but not pervasive, qualify the opinion. If the possible effect, all right, is material and pervasive, then first decide to withdraw. If withdrawal is PP, practicable and possible. If it is not possible and practicable, then you give disclaimer of an opinion. Oh, but this will happen only when the limitation on scope of audit is imposed by the management. If it is due to circumstances, then you don't have to think about all this. Then only qualified or disclaimer, whatever is the opinion, you have to give it. Am I clear with this? Yes. All right. Next question. Singh and Associates, while carrying out statutory audit of Rubber Industries Limited, observed that debtors are not making payment invoice wise, as the debtors constitute 60% of the total assets. Hey, debtors are not making payments invoice wise. Debtors are 60% of total assets. So auditor requested management to provide external confirmation of all the debtors outstanding for an amount exceeding rupees 1 lakh. However, management resisted and no external confirmation were made available. Auditor firm has decided to disclaim an opinion on the financial statements and seeks your guidance on amendments that should be made in the basis for opinion section and elements required by SS 700 which need not be included in the auditor's report. Guide them suitably. Listen to me. In a normal audit report, unmodified report where you are giving a clean opinion. Which opinion? Clean opinion. In the basis for opinion, there are total 4 points. I'm not talking about a disclaimer of opinion. In normal report, all right, basis for opinion has how many points? 4 points. All right. First, they have to give reference to essays. Second, they have to give reference to code of ethics that we have fulfilled our independence and all of that. Third, auditor has to give reference to auditor's responsibility paragraph, which is another paragraph in audit report. And fourth, all right, auditor has to say that evidence available with us is sufficient and appropriate. These are the 4 points which are included in the basis for opinion in a clean opinion. Which opinion? In a normal report, basis for opinion has how many points? 4 points. However, when you are giving disclaimer of an opinion, 2 points are removed. Which points are removed? Reference to auditor's responsibility paragraph, and the statement that evidence available with us is sufficient and appropriate. Look at this, everyone. They are saying auditor has decided to give. Then they are saying if auditor has decided to give disclaimer of an opinion, then they are saying that there are some points which are supposed to be amended in basis for opinion. Then tell them, first of all, the title will be amended. Basis for opinion will be changed to basis for disclaimer of an opinion. And then 2 points, auditor's report shall not include following elements. Reference to auditor's responsibility paragraph will be removed and evidence is sufficient and appropriate, that will be removed. So one more time, by heart this now. When it comes to disclaimer of an opinion, there are 2 points which will be removed from basis for opinion. Which points will be removed? Reference to auditor's responsibility paragraph, and then second, that evidence available with us is sufficient and appropriate. Normally, basis for opinion has how many points? 4 points. From that, 2 will be removed. Question number 3. Messrs. ABC and Associates, statutory auditors of OPEC Limited, are in the process of finalizing the audit report of the company. But in view of their inability to obtain sufficient and appropriate audit evidence, they would like to disclaim their opinion on the financial statements. Explain the reporting responsibilities of Messrs. ABC pursuant to SS 700. 700 means your audit report format. How will they address key audit matters audit as per SS 701 when they are expressing disclaimer of an opinion? Go slow. When it comes to disclaimer of an opinion, all right, this we will have to see practically only. All right. When it comes to disclaimer of an opinion, they want the list of all the changes in the audit report. So when it comes to disclaimer of an opinion, first the title opinion will change to disclaimer of an opinion. I am showing practically what if Reliance auditor had given disclaimer. So opinion title will change to disclaimer, because sometimes through visuals you can remember. Okay? So opinion title will change to disclaimer. Then this first line we have audited. This line will change to we have been engaged to audit. See, I can't say we have audited. In a qualified opinion, adverse opinion, unmodified opinion, I can clearly say we have audited. All right. But in disclaimer of opinion, we have not audited. We'll have to say we have been engaged to audit. So first change, title will change. Second change, we have audited will change to we have been engaged to audit. Then this main opinion will change. Are we going to write in our opinion we are unable to form an opinion? Very straight away say we are unable to form an opinion. All right. Then basis for opinion will change to basis for disclaimer of an opinion. In basis for disclaimer of an opinion, 2 points will be removed. One is reference to auditor's responsibility, and second, that evidence available with us is sufficient and appropriate. 2 points will be removed. All right. Then, when you have a disclaimer of an opinion, first of all, are you aware that a listed entity has to include key audit matters? Yes or no, sir? Yes. But when you have a disclaimer of an opinion, when you have a audit, there will be no key audit matters. There will be no key audit matters. One more time, one more time. When you have a disclaimer of an opinion, the title opinion will change to disclaimer of an opinion. All right. Then in the opinion paragraph, we will have to say we are unable to form an opinion. Basis for opinion will change to basis for disclaimer of an opinion. All right. Then in that, two references will be removed. One is auditor's responsibility and second one is sufficient and appropriate. All right. Then entire key audit matters will be eliminated. Then listen to me. There is one paragraph called as auditor's responsibility paragraph. All right, which has 9 points. How many points? All 9 points will be removed and they will be replaced by only 3 points. All right, they'll be replaced by only 3 points. These are the changes in the audit report when you give disclaimer of an opinion. I will go back and this has been questioned. What I don't like is that CA inter students are just qualified adverse disclaimer, qualified adverse disclaimer. All right, these are the questions. Look at this. So everyone, they have given the list of changes. All right. They have given the list of changes. Okay. And if you see over here, explain the reporting responsibilities. Okay. And most importantly, key audit matters will not form part of such a report. Are you clear with this? Yes, yes. Okay. All right. So these are the basic points which I want you to remember for essay 705. All right. That is modification to the opinion. At least this much should be clear. All right. There are more points, but obviously here we have also our inherent limitations. All right. 705 is done. All right. 706, emphasis of matter and other matter paragraph. Emphasis of matter and other matter paragraph. Come on. First tell me what do you remember for emphasis of matter and other matter paragraph? Emphasis of matter paragraph is used for accounting clarifications or auditing clarification. Accounting clarification. So as an auditor, whenever I feel that there is an important accounting adjustment which I want to highlight, then I will use which paragraph? Emphasis of matter. But as an auditor, whenever I feel that there is some very important clarification which I want to give with respect to my audit report, then I will use it in which paragraph? Other matter paragraph. All right. So everyone over here, emphasis of matter and other matter paragraph. Okay. So now English. Emphasis of matter is a matter which is presented or disclosed in the financial statements. Emphasis of matter is a matter which is presented or disclosed in the financial statement, for which auditor does not have a modified opinion on such matter. But as per auditor's judgment, matter is fundamental to the user's understanding of the financial statements. One more time, a matter which is presented or disclosed in the financial statements. Remember one thing, for which auditor does not have a modified opinion. All right, for which auditor does not have a modified opinion. If there is a modified opinion, then you write it in opinion paragraph and not in emphasis of matter. All right. So one more time, a matter which is presented or disclosed in the financial statements, for which auditor does not have a modified opinion, but as per auditor's judgment, matter is fundamental to the user's understanding of the financial statements. And most importantly, if you are conducting audit of a listed entity, you should be very clear that this is not a key audit matter. Only then you will write it in emphasis of matter. Give me four conditions one more time. A matter which is presented or disclosed in the financial statement, provided auditor does not have a modified opinion on such matter, provided auditor believes that disclosure of such matter is fundamental to the user's understanding of the financial statements. All right. And most importantly, provided auditor has concluded that it is not a key audit matter. Emphasis of matter you will write only if you are 100% sure that this is not a key audit matter. That is why, if you see my chart, which I give normally to all the batches, all right, if there is any accounting question, balance sheet, P&L, cash flow statement, or stock accounts, any item from accounts, you will have to see whether evidence is available or not available. If evidence is not available, then qualified or disclaimer of an opinion. If evidence is available, then we'll have to check whether ACPD is correct or not. If ACPD is correct, wait. If ACPD is incorrect, then qualified or adverse opinion. But if ACPD is correct, all right, then there is a fight between different paragraphs. Okay, wait. You are not ready for the full chart right now. All right. So emphasis of matter paragraph. Next, other matter paragraph. Other matter paragraph is for auditing clarification. Other matter paragraph is for auditing clarification. This paragraph is used as additional disclosure in the audit report. Wait. Other matter is not your sundry paragraph. You can't write anything over there. Other matter is only for your auditing clarification. So it is a matter other than the matter presented or disclosed in the financial statements, provided you should feel that this matter is very important, all right, for the better understanding of the audit that has been performed, to bring more clarity about the audit. I am the company auditor, you are the branch auditor. In my audit report, I have used your work. In my audit report, I have used your work. You are the branch auditor, I am the company auditor. I would like to write in my audit report that there are 15 branches audited by another auditor whose work I have used. For such kind of things, you will use which paragraph? Other matter paragraph. All right. I have written as an example also. But you will use other matter only if it is not prohibited by law. And most importantly, it should not be a key audit plan. So give me the four conditions for other matter. A matter other than the matter presented or disclosed in the financial statement, provided auditor believes that disclosure of such matter, all right, is important for the better understanding of the audit that has been performed, to bring more clarity about the audit, auditor's responsibility, audit report, all right, provided it is not prohibited by laws and regulation, and most importantly, provided that auditor has concluded that it is not a key audit matter. All right. Am I clear with this? Yes. Wait. So if there is any matter related to audit procedures, scope of audit, auditor's responsibilities, that is auditing matter, first we will check whether it is covered in auditor's responsibility paragraph, which is 9-point paragraph. Yes, then auditor's responsibility paragraph. No, then we'll have to check, we'll have to confirm between key audit matter and other matter. All right. If it is a key audit matter, then we'll write it in key audit matter paragraph. If it is not a key audit matter, then we'll write it in other matter. You don't try to see the whole chart. All right. Just try to get the theme, the scheme of the things over here. All right. Don't try to get into the whole chart. So let us see now whether we are able to solve the questions or not. Lomax Limited is a company engaged in the business of manufacturing of candles. CA Kamalnath is the statutory of the company for financial year 21-22. During the year under audit, there was a fire in the company's factory, as a result of which some of the company's plant and machinery was destroyed. The same was disclosed by the company in the notes to accounts attached to the financial statements for the year ending 31st March 22. Hey, the same was disclosed by the company in the notes to accounts. Okay. CA Kamalnath decided to communicate this matter in the auditor's report, as he is of the view that the matter is of such importance that it is fundamental to the user's understanding of the financial statements. Help CA Kamalnath to deal with this situation. All right. First of all, tell me, is this an accounting matter or auditing matter? Accounting matter. Is it properly disclosed in the financial statements? Yes. Now you can use which paragraph? Emphasis of matter. But tell me, just don't copy the answer and just vomit. Don't you think it is a listed entity? Lomax Limited. If they write Lomax Limited, don't you think it is a listed entity? Yes or no, sir? No. This is what you will feel in exams. Okay. Control your emotions. If they just say limited, it means it is a public company. Listed has to be given in the question. Am I clear with this? So all of a sudden you will feel emphasis matter, but no, there seems to be some hidden adjustment. I think no one has understood. Only I have understood. All right. So don't no overacting. Listed entity, key audit matter, these concepts you will think only if they have given in the question. Otherwise, you will not think about them. Am I clear with this? Yes or no, sir? Yes or no, sir? Wait, currently you are tired. There are more things in this question. There is the fire. All right. There is a fire. Can I say fire will damage the going concern? Yes or no, sir? अभी लाइटर है मेरे पास करूँ फायर मर जाएगा all right, several of us sorry. So tell me, I don't have a light. That's all. Sorry for the confession. What I'm trying to say is, if there is a fire, Some of the company's plant and machinery was destroyed. All right. Some of the company's plant and machinery was destroyed. What going concern? Going concern? No, no. There's no problem of going concern over here. Are you getting my point? Yes or no, sir? So currently you are just copying and you're doing like this. Huh? All right. Acting karte karte sachi mein. So what I'm trying to tell you is think about different things that you will think in the exam. This is only emphasis of matter. There is no other adjustment. Am I clear with this? Yes or no, sir? Now listen to me. When you are drafting emphasis of matter paragraph, you have to give reference to the notes to accounts and you have to clearly say that our opinion is not modified. Understood? Yes. All right. Now focus over here. Question. A service is limited is into the litigation relating to some legal action initiated by the industry regulator. The matter has reached jurisdictional high court, keeping in view uncertainty related to future outcome of the matter. Statutory auditor of the company has decided to include everything given in the question. Emphasis of matter. Briefly discuss the considerations to be taken care by the auditor when emphasis of matter is included. Hello, my 4 points of that theory. Full theory you will have to write. State any two examples of circumstances where auditor may consider it necessary to include an emphasis of matter. One example you can write about subsequent event, adjusting event. One example of that question number one only you can write fire away. Hello. Right. So just write any two examples from notes to accounts, but good examples. Right? Okay. So that is your emphasis of matter. Other matter paragraph questions are covered in essay 710 and essay 299. So that is why I have not covered it over here. Other matter paragraph questions. All right. Now essay 701. What is that? Communicating key audit matters in the independent auditor's report. All right. We will finally finish this concept of key audit matters. Everyone over here, listen to me. First of all, when it comes to key audit matters is a concept which is mandatory only for audit of financial statements of listed entities. All right. When it comes to exams, if there is a listed entity, key audit matter concept you must use. But if it is other entity, apply key audit matter only if, because even in unlisted entity, auditor can voluntarily apply. But you don't voluntarily apply. All right, don't take flying arrows in different places. All right, so in listed entity, key audit matter is must. In other entities, apply key audit matter only if question specifies. Correct. Now, what is the meaning of key audit matter? Which matter will be a key audit matter? Tell me. Key audit matters are selected from matters communicated with those charged with governance. One more time. Key audit matters are selected from Wikipedia? No, no. Selected from matters communicated with those charged with governance. And most important line is this line. Key audit matters are those matters that in auditor's professional judgment are of utmost significance in the audit of financial statements of the current period. One more time, what is the theory of key audit matters? Key audit matters are those matters that are selected from this, which is fine. But key audit matters are those matters that in auditor's professional judgment were of utmost significance in the audit of financial statements of the current period. In exams, how to find out which matter is a key audit matter? In exams, how to find out which matter is a key audit matter? Significant read. All right. Factors to be considered in determining which matters could be key audit matters. All right. Significant read. Significant read. R for risk of material mistake. If there is any area of significant risk, if there is any area of significant risk, then it will be a key audit matter. I have some examples of significant risk in chapter 3. All right. But it's okay. They will tell you that this area is an area of significant risk. We will consider it as a key audit matter. If then E for estimates. If there is any area of significant estimate, not your shitty provision for doubtful debts. All right. I'm talking about significant estimate like valuation of unlisted securities, all right, like complex legal cases, whether to show it as contingent liability or provision, such kind of estimates, like estimation of oil and gas reserves in Reliance Industries Limited. All right. So significant estimates with high uncertainty. Tell me, significant estimates with high uncertainty. So significant R for risk of material misstatement, E for estimates with high uncertainty, and then ET, significant events and transactions. All right. So if there is a significant read matter, if there is a significant read matter, all right, then in that case, we will be very clear that we should include it in key audit matter paragraph. But first, you have to check whether key audit matter is applicable or not, and then you have to check significant read. Tell me, first you have to check whether key audit matter is applicable or not, and then you have to check significant read. All right. Now, how does this help you? How does this help you? How does this help you? If there is any matter related to auditing matter, first check whether it is covered under auditor's responsibility paragraph. That no student remembers, that is fine. So basically, you have to do this only. Key audit matter versus other matter. For key audit matter, first check whether SA 701 is applicable. Yes. Whether it is covered under significant read. Yes. Then key audit matter. If SA 701 is not applicable, then straight away other matter. If SA 701 is applicable, but it is a very basic matter, then again other matter. And am I clear with this? Yes, yes. So in a listed entity, by default, don't include everything in key audit matter. You will include only if the question gives you hint of significant read. All right, only then you will include it. Okay, okay, okay. Wait, let us see how much we are able to solve from this. Communicating key audit matter is not a substitute for disclosure in the financial statements. Rather, communicating key audit matter is in the context of auditor having formed an opinion. Tell me, everyone, if I write something in key audit matters, can management start deleting their notes to accounts? No. So one more time, key audit matter is not a substitute for disclosures. Key audit matter is not a substitute for modified opinion. And in SA 570, I told you na, even if it is a listed entity, for going concern also, key audit matter is not a substitute for MURG. So even in a listed entity, going concern material uncertainty is in MURG only. Okay. Then key audit matter is not a separate opinion. Key audit matter is not a separate opinion. Opinion is always there in opinion paragraph. Okay. So key audit matter is not a substitute. Alright, for disclosures, modified opinion, and going concern paragraph. Alright, and key audit matter is not a separate opinion on individual matters. Alright, I want a confirmation. Are you clear with this? Yes. Okay. An auditor of a listed company. What are the matters that auditor should keep in mind while determining significant read? Significant read. Alright. SA 701 deals with auditor's responsibility to communicate key audit matters in the auditor's report. It is intended to address both the auditor's judgment as to what to communicate in auditor's report and the form and content of such communication. In the above context, explain the purpose of communicating key audit matters. Here, if you just write definition, you will not get marks. Why the concept of key audit matter has been introduced? To increase the value of the report, communicative value, to bring more transparency, to bring more to make the readers of audit report understand the significant matters. This is full psychology. Look at this. To enhance the communicative value of the auditor's report, 1 mark. To provide greater transparency, 1 mark. 2 marks done, 0. No. Then it provides additional information to the users. Yeah. All right. So this is the purpose of key audit matter. So you can write the definition and then you write this, you will get your marks. Am I clear with this? Yes. All right. So we don't see nice, very good questions for key audit matters. All right. It seems like they've asked very basic questions for key audit matters. All right. Okay. Now everyone over here, that is your 701. So I'm done with 701, 705 and 706. Now main SA 700, SA 700, that is your audit report format. SA 700 is your audit report format. All right. I don't think you will struggle a lot over here because we have discussed a little bit. Look at this. SA 700, forming an opinion and reporting on the financial statements. All right. Messrs. Amitabh and Associates are the statutory auditors of Ringston Limited, which is a company engaged in the business of manufacturing of pen drives. The auditor has started drafting the audit report for financial year 21-22. CA Amitabh engagement partner is of the view that financial statements of Ringston Limited represented true and fair. Give the draft of the see 700 best thing is to solve maximum questions only. Right? Draft of the opinion paragraph. Now tell me, he wants to write that financial statements give a so modified opinion or unmodified opinion? Unmodified opinion, clean opinion. All right. Again, you will have to give introduction. First introduction. Then you will say, in our opinion, and to the best of our information, according to explanation given to us, the aforesaid financial statements give the information required by the act. That is right, and they give a true and fair view. All right, as per accounting principles generally accepted in India. Right. So if you are able to write this, then fine. But in broken English also, right, at least maintain few lines. All right. Don't just write in your mother tongue over. CA Ayush has recently qualified and has joined a CA firm. On going through various audit reports, he observed that this was a very technical question, actually. He observed that there were that different phrases were used to express an unmodified opinion. All right. On the financial statements. On inquiring with the senior, he got to know that all those phrases can be regarded as being equivalent. Which phrases are appropriate and which phrases are inappropriate while drafting an unmodified opinion? Focus over here. For unmodified opinion, you will say, in our opinion, the financial statements present fairly in all material respect, dot, 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 dot. See, they have also used dot, 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 as per AFR. Instead of present fairly, you can write. So listen to me. Give a true and fair view of dot, 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 dot. Present fairly in all material respects, dot, 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 dot. Tell me. Give a true and fair view of dot, 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 dot. All right, then present fairly in all material respect, dot, 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 dot. Apart from dot, 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 are you understanding it? All right, give a true and fair view or present fairly. Both of them are same. Are you getting my point? Whether I write give a true and fair view or present fairly, both of them are same. That is what they are saying, that there are some phrases which can be regarded as equivalent. We gave them that example. Right? Either you write true and fair view or present fairly, both of them are same. But tell me, which while expressing unmodified opinion, while expressing, can I write subject to verification of fixed assets? Financial statements are showing a true and fair. Eh? Subject to notes to accounts. Financial statements showing a true and fair. Subject to full audit. Financial statements showing a true and fair. Tell me, can I write such phrases? No. So what I'm saying is inappropriate phrase. Subject to with the foregoing explanation. All right. These are the inappropriate phrases. Means you are trying to add too many conditions. You are trying to add too many conditions. All right. Are you getting my point? Subject to exercise, I am Ritik Roshan. All right. Too many conditions. Are you getting my point? Okay. Now you understood. This is inappropriate. Okay. Question. Messrs. Kite, Wright and Associates are the statutories of Prime Deluxe Limited. At the time of finalizing the audit report, one of the engagement team members, Mr. Robin, asked the engagement partner CA Kite as to what all should be included. Included in, I told you, basis of opinion will have 4 points. Reference to essays, reference to auditor's responsibility, reference to code of ethics, all right, and 1 point that we have obtained sufficient and appropriate audit notice. Help Mr. Robin to draft basis for opinion. So what is it? We have audited reference to sunset, reference to essay. We have audited as per standards auditing issued by the ICI. We have fulfilled our responsibilities as explained in auditor's responsibility paragraph. We have complied with the requirements of independence as per code of ethics. We believe that evidence available with us is sufficient and appropriate. So whatever you recollect, just say we. And that will be your drafting. But there is something more over here. That's fine if you don't recollect. All right. Basis for opinion should basically have 4 points. Am I clear with this? Yes. Okay. Question. Diamond Shine Limited is a company engaged in the manufacture of detergent. Messrs. Bright and Associates are the statutory auditors of the company. Explain how the paragraph related to management's responsibility will come in the auditor's report. Listen. Many students are writing very general line for this. Prepare a presentation of financial statement is the responsibility of management. Design, implementation, maintenance of internal control is the responsibility of management. Prevention, detection of fraud and error is responsibility of management. Providing access to the information, that is precondition. Section 210, Chapter 11. They are asking management responsibility paragraph in the audit report. In audit report, there are main 3 points for management responsibility paragraph. That is GIF. Alright. First, there is one point on going concern. That management is responsible for assessing the entity's ability to continue as going concern. Then there is one point on internal control system. That management is responsible for design and implementation of internal control system. Right? Then the basic point I think everyone writes, management is responsible for preparation of financial statements. I am not saying that you by heart everything, but at least something. That management's responsibility paragraph, I need to include GIF. G for going concern, I for internal control, and F for financial statements. All right. Next, Messrs. Ajay, Vijay, and Associates are the statutory auditors of Sarovar Limited for financial year 21-22. The company is engaged in the business of manufacturing of water bottles. At the time of finalizing the auditor's report, one of the audit team members asked CA Ajay, the engagement partner, to advise as to how auditor's responsibilities can be shown in an appendix to the auditor's report. Draft the auditor's responsibility paragraph so as to advise the audit team member. So many students have WhatsApp this question to me, sir. They are asking us to draft auditor's responsibility paragraph. In auditor's responsibility paragraph, sir, there are 9 points. How many points? Then they are saying the answer. Sir, answer is incomplete. Listen, wait. First, what they're asking, listen. There are 3 ways in which auditor's responsibility paragraph is presented in audit report. I repeat, there are 3 different ways in which auditor's responsibility paragraph is presented in audit report. Where those 3 ways are bar, where I will go today after the lecture. Look at this. One is within the body of auditor's report. Body of report means inside the audit report. Normally, all the auditors, they write it inside the audit report only. Second option is as an appendix, annexure. Means you will attach it behind the audit report. Right? Third option is you give a reference to the website. Which website? Sir, so many websites. Sorry, wait. Website of a legal authority where the responsibilities are prescribed. For example, if it is a government authority, you can give reference to CNAG website. Hello? So listen to me. There are 3 ways of including auditor's responsibility paragraph. That is bar. B for body of auditor's report. A for appendix, all right, and R for reference to the website. They are saying that what if I want to include it as an appendix? Now, when you want to include it as an appendix, all right, basic 4 or 5 lines are written, and then we give reference to the see, only few lines are written, and then we say further description of our responsibilities is included in the appendix X of this audit report. Are you getting my point? Are hello? All right, only 4 or 5 lines are written, and then we say for further responsibilities, please refer appendix. And that also, if you see now, these lines are from chapter 1 only. So what you can do is you can cut down even this. You can just write 4 lines. Our objectives are to obtain reasonable assurance whether financial statements are free from material misstatement, whether financial are materially prepared in accordance with applicable financial reporting framework. Reasonable assurance is a high level of assurance. We cannot provide a guarantee because auditing suffers from inherent limitation. Our further responsibilities. Don't watch in Forex. Right. Our further responsibilities are described in appendix X. Am I clear with this? Yes. Okay. Question. Messrs. TUV and Associates are the statutory auditors of Venus Limited for financial year 21-22. At the time of finalizing the auditor's report, one of the audit team members asked the engagement partner, CA Tarun, to explain as to how auditor's report will be signed. All right. How auditor's report will be signed. Then don't just sign and come. This is how it will be signed. Today I am manifesting. All right. All right. So you will have to write the name of the firm. All right. You have to say chartered accountants. Then, I mean, the name of the firm includes that word. Then firm registration number, signature, name of the partner or proprietor, designation that okay, this person is a partner, membership number, then don't write mobile number, membership number. Then UDIN. What is UDIN? Unique document identification number. Tell me. Unique document identification number. It is like an OTP which is generated from the ICI website only, which every practicing CA has to compulsorily, all right, put it in the any report or certificate signed by him. Any report or certificate, not only audit report. UDIN is required in all types of reports or certificates which are signed by chartered accountants. It acts as an authenticating number. It acts as an authenticating number to trace the original member who has signed. All right. Then place of signature and date. You didn't got printed original. Place of signature and date. All right. Place of signature is the name of the city, town where the report is signed, not exact latitude, longitude. Question. All right. So listen. These questions were on audit report format. These questions were on audit report format. All right. Sometimes there can be a theory question like this. I am worried about this question, not the answer. I feel that the moment students look at this question, they will start explaining different types of opinion. Auditor shall form an opinion. And so many times it has happened that this has been asked in exams, all right, and students have just written opinion. Auditor shall form an opinion on whether financial statements are prepared as per AFRF. By heart this question. By heart this question. Auditor shall form an opinion whether financial statements are materially prepared as per AFRF. All right. Then they will just say, explain. Right. It feels like they're asking full subject. All right. Here they are very clear. Guide him about the factors he should consider to reach such conclusion. Tell me, what are the factors that we consider in forming the conclusion? First, whether evidence is available or not. Second, whether misstatements are corrected or not. Correct? Yes, that is what they are saying. Conclusion shall take into account whether sufficient and appropriate audit evidence has been obtained, whatever are the uncorrected misstatements, whether they are material, and they are saying you have to do some specific evaluations. Sometimes there are such theory boring questions, correct? Which will be there, and you are ready with the whole report format, and they have asked such question. All right. All right. Next, in considering qualitative aspects of entities accounting practices, auditor may become aware of possible bias in management judgment. Wait. When do you feel that your parents are getting partial towards you and they are not focusing on you? When they are focusing on my brother, sister, and treating me like garbage. Correct. So whenever management also does some kind of selective correction of misstatements. Whenever management does some kind of, you did the mistake, you got two slaps from your father. Same mistake done by your brother, he got a chocolate. All right. So tell me, selective correction of misstatements. If management also does selective correction of misstatements, can I say we will start developing doubt that management is lacking neutrality? Yes or no, sir? And there is a bias in management judgment. So one is whenever they do selective correction of misstatements. All right. Second, whenever they are recognizing in accounting estimates, there is always a chance of management getting partial. All right. So S for selective correction of misstatements and E for estimates. These are the areas where management can turn out to be biased. Now look at this. An auditor is required to make specific evaluations while forming an opinion. I am so sure that students will end up explaining there are two types of evaluations. One is whether evidence is available, evidence is not available. Evidence is available, material but not privacy material. Zero. Not because you are wrong, because their English is poor. Right. This is not a case of difficult question. This is a case of dash type of English used. Look at this. An auditor is required to make specific evaluations while forming an opinion. This question has been killing the careers for many years now. Many a times they've asked this question and students end up writing different types of opinion and everything. Right. And this is the answer. Check the accounting policy, accounting estimate, presentation, disclosure, terms used in the finance system. I don't know why, but they are doing this. And they are doing this since 10 years now. All right. Even old course, grand old course, forefather courses, new course, all right. Everywhere they are doing this. So by heart this question. All right. It is there in my question bank also. Don't worry. That's small question bank. Like this. So which you have never studied. So SA 700. So we understand 700 forming an opinion has audit report format. All right, questions and some theory questions. 705 qualified adverse disclaimer of opinion. 701 key audit matters, and 706 emphasis of matter and other matter paragraph. I told you that this chapter is divided into three parts. All right, one is 701 to 706. Second is 710, 600 and 299. And third is company audit reporting requirements. All right. That second part, 710, 600 and 299. Huh? It's a very short part. Let me finish it so you will feel confident that this chapter, at least all essays are done. All right. So everyone over here. Hey, Chapli. Okay. 710. You are spoiling my YouTube video here. My essays were 710. You think I'm teaching this for you? All right. So 710. And it please. Comparative information, corresponding figures, and comparative financial statements. All right. Just few minutes and you will be done. Focus over here now. 710. Comparative information, corresponding figures, and comparative financial statements. Listen to me. When will you understand, first of all, that the question is from 710? All right. There are two columns in the financial statements. Whenever there is a question from, whenever there is a question from previous year column, that means question is from 710. Right? Because previous year column is called as comparative information. Right? Previous year column is called as comparative information. Right? Now listen to me very carefully. There are two ways in which in India comparative information is prepared. Right? One is corresponding figures. Second one is comparative financial statements. Very easy. Listen to me. What is corresponding figure? In India, you download financial statements of Reliance, Tata, Adani, anyone. Current year has detailed disclosures. Previous year has only limited disclosures. So previous year is presented only to support the current year. So when I say corresponding figures, means current year detailed disclosures and previous year limited disclosures. So previous year column is just a figure. Previous year column is just a so corresponding figure. Previous year column only figure. Hello, yes. Corresponding figure. All right. Look at this. Comparative information where amounts and other disclosures for the prior period are included as a very important part of the current period. They are intended to be read only in relation to the amounts of current period. The level of detail presented in that previous year column is dictated primarily by its relevance to current period. Tell me, auditor's opinion is on current period or both the columns? Audit report format is done. Yes. Audit report format is audit report opinion is always on current period. Auditor's opinion on the financial statement refers to current period only. Corresponding figures are not discussed in the audit report unless the need arises. So corresponding figures is also previous year column only. But when I say corresponding figures, means previous year column will have only limited disclosures and my opinion will be on current year. In India, this is what is followed. Okay. So listen to me. If you get a question, if you get a question on if you get a question on corresponding figures, how you don't have a case study based question over here. Yeah. All right. If you just get a question X limited, something of previous year column and stuff, then relax. You have to assume that they're talking about corresponding figures. This is completely different. What is it? Comparative financial statements, where current year as well as previous year, both of them will have equal detailed disclosures. All right. So previous year column is not just figure. Previous year column is comparative financial statement. Previous year column is comparative financial statement. That means the level of information in the previous year column is comparable with the financial statements of the current period. All right. That means auditor's opinion will refer to each period, not only current year. Auditor's opinion will refer to current year also, as well as means there will be two opinions in the same audit report. One opinion on current year and one opinion on previous year. This is not seen normally in India. In India, this is seen only when company applies for listing. Only in that case, SEBI compulsorily requires 3 years in the same financial statement, all right, and three opinions in the same audit report. Otherwise, you will not see this in India. In India, normally they follow which one? Corresponding figures. Am I clear with this? Yes. Now let us see what are the questions. NG Limited appointed CA head as the statutory auditor for financial year 21-22. Previous year's auditor gave a qualified opinion on the comparative financial statements for the year ended 31st March 21. What will be the reporting responsibility casted on CAN when he forms an opinion and prepares audit report on comparative financial statements? Listen, they are talking about, but there is one point which is common in this entire essay, and that is the only point which they have repeatedly questioned at Inter level. All right, listen to me. If previous year is audited by someone else, and it is your first year, then you have to compulsorily write in the other matter paragraph of your audit report that previous year was audited by another auditor. You also have to mention the date of that auditor's report. And if previous auditor gave a modified opinion, then you also have to explain the reasons. All of this you will explain in which paragraph? Other matter paragraph. This is very repeatedly asked at Inter level. All right, look at this. If SS7, sorry, as per SS710, if the fine, so I'm not asking you to by heart the entire essay, but main points. All right. If the financial statements of the prior period were audited by predecessor auditor, in addition to expressing an opinion, auditor of the company shall state in an other matter paragraph that prior period was audited by predecessor auditor. What was the opinion expressed by him? And if it was a modified opinion, then you also have to give the reasons. All right. Then date of the report. DOP. Date of the report, opinion expressed by predecessor auditor, and P for you have to state that previous year was audited by predecessor auditor. This is a compulsory requirement in which paragraph? Other matter paragraph. So we discussed other matter today, no? So I wanted to cover this. All right. Next, I just want you to finish these questions. When corresponding figures are presented, the auditor's opinion shall not refer to the corresponding figures except in some circumstances. Listen to me, relax. This is a very nice discussion. All right. They are saying that if corresponding figures are presented, then you don't have to talk about corresponding figures in the audit report because we don't keep on talking about previous year. Our audit report is on current year. So we don't talk about audit previous year in our audit report unless the need arises. Now they want you to explain when that need will arise. All right. So listen to me. There are 3 points which you are supposed to write over there. Either prior period financial statements were audited by existing auditor, or prior period financials were audited by predecessor auditor, or prior period financial statements were unaudited. I will straight away explain from there. First, the shortest is this. If prior period financial statements are not audited, then you have to write that in other matter paragraph. That prior period financial statements are not audited. All right. If prior period financial statements are audited by a predecessor auditor, that's why I explained that you have to give a reference to that predecessor auditor's report. However, if you have only audited previous year, look at this. If auditor's report on prior period included a qualified opinion, disclaimer of opinion or adverse opinion, very simple. If you have audited previous year and in previous year you give a modified opinion, then we have to see whether in the current year that matter is resolved or not. If the matter is resolved, fine. But if the matter is not resolved, then if it remains material, all right, then in that case, we will have to give a modified opinion on the current year. But why we are modifying? Because of the matter of the previous year. So listen. If previous year was modified, current year matter remains unresolved, then we will give a modified opinion on current year if the matter remains relevant and material. But why we are modifying? Because of the previous year. So, in the basis for modified opinion paragraph, we will give a reference to corresponding figures. Don't buy it everything. Just simple. If I have not audited previous year and previous year was audited by someone else, then I have to write in other matter paragraph DOP, date of the report, correct? Opinion expressed, and previous year was audited by predecessor auditor. If previous year was not audited, if previous year was, then was still I'm supposed to write in other matter paragraph that previous year was not audited. If previous year was audited by me, by the existing auditor, and if I gave a modified opinion in the previous year, if I give a modified opinion in the previous year, if the matter remains unresolved, if the matter remains unresolved in the current year, all right, if it remains relevant and material, then in the current year I will modify opinion with a reference to basis for previous year figures in basis for modified opinion paragraph. Am I clear with this? Yes. These are the situations that you will explain. All right. Next, the nature of comparative information that is, listen. They want you to explain theory, the difference between comparative information and corresponding figures, right? That they want you to explain. Now listen to me. That is my theory, which I explained at the start. Difference between corresponding figures and comparative financial statements. All right. When they're also asking you to write, they're also asking you to write audit procedures. All right. They're also asking you to write audit procedures. If they ask you to write audit procedures, I'm just giving you 2, 3 basic points. You will cover 1 point on applicable financial reporting framework. You will cover 1 point on classification. You will cover 1 point on whether it agrees with the previous year, all right? And you will cover 1 point on return representation. I don't want to write too many points. If they talk about audit procedures, if they talk about audit procedures, you talk normally about applicable financial reporting framework, classification, presentation, disclosure, whether the amount agrees with the previous year or not, and you take a return representation. All right. That is 1 point. Achha, today we did that return representation. Tell me, return representation is taken for all periods which are referred in the auditor's report. Return representation is taken for all periods which are referred in the auditor's report. But tell me, in comparative financial statements, not in corresponding figures, in comparative financial statements, can I say we are giving opinion on each column, yes or no, sir? Yes. So we will take return representation also for each column. All right, for current year also as well as previous year also. Otherwise, normally we take return representation only for current year. All right, that is 1 point regarding the procedures. Okay. See, they have also written very limited procedures. Okay. So everyone over here, 710, don't try to prepare too much. All right. Just solve these questions. It will be done. All right. Now, there is one question, only one question on SA 600. What is SA 600? Using the work of other auditor. Tell me, using the work of other. Listen, I am the company auditor, you are the branch auditor. I am using your work. Or I am the holding company auditor and you are the subsidiary company auditor. Again, I am using your work. Only one question in this inter CA level. All right. They will ask you to just tell them what are the procedures to be performed by the principal auditor. What are the, I am the principal auditor, you are the other auditor. I am holding company auditor, I am the principal auditor, you are the other auditor. I am the head office auditor, I am the principal auditor, you are the other auditor. Then very simple question on what are the procedures to be performed by the principal auditor to be satisfied that the work of other auditor is adequate. All right. For this, I have a very simple code. For this, I have a very simple code. Hey, this is my final CA chart. All of these points are not there in your. Look at this. Principal auditors audit procedures. All right. Although I discuss these things in the lectures, but when it comes to module only, this procedural part is there. All right. So principal auditors audit procedures. Listen to me. If I am the principal auditor, you are the other auditor. I can't direct you. Huh? Oh, you are not my article. I can't give you instructions. Look at the English. Advice, arrangements. Look at this. I'll give you code word. Return special advice, plan and arrange timetable for accounts and audit. Tell me. Return special advice, plan and arrange timetable for accounts and audits. All right. Written. I can take a written declaration from the other auditor. That other auditor, you please bloody give it to me in writing. Okay? Then you have fulfilled significant accounting auditing requirements. Then advice. I can advise other auditor on how his work and report will be used. Okay? Then plan and arrange. I need to start the arrangements from the planning stage itself. I need to start the arrangement from the planning stage itself. On a timetable, I need to ensure that we also discuss the timetable for completion. All right. And then whatever are the significant accounting and auditing requirement, for that we will coordinate. Right? So such kind of soft answer is to be written. Principal auditor can give instructions to other auditor. Principal auditor. Principal auditor can do only this much when it comes to other auditor. Tell me, yesterday we have discussed this. Can principal auditor establish his right over the working papers of other auditor? No. All right. Okay. So that is one answer. Next, joint audit. Joint audit, I just want to know some basic things whether you're clear or not when it comes to joint audit. All right. Tell me when it comes to joint audit. Joint auditors, same company being audited by more than one auditors. All right. What is expected from them? That at the end they will give a joint audit report in which they will form a joint audit opinion. All right. Important parts of joint audit. Joint auditors are separately responsible for the work which is divided. Hello. If both of us are joint auditors, if I am looking after purchase and you are looking after sales, am I supposed to check your work? One more time, answer this. If I am, both of us are joint auditors. I am looking after purchase, you are looking after sales. Am I supposed to check your work? No. Are you supposed to check my work? No. For the work which is divided, for the work which is divided, joint auditors have their individual responsibility. But for the work which is not divided, for the work which is, there we have a joint responsibility. All right. That is the main point which I wanted just to understand. Secondly, joint auditors are supposed to give a joint audit opinion. Joint auditor is supposed to give a joint audit opinion. All right. If joint auditor is supposed to give a joint audit opinion, but let us say there is a difference in the opinion. There is a difference in the opinion. Then in that case, let us say there are three joint auditors, JA1 and JA2. You are saying qualified opinion. I am saying clean opinion. So JA1 and JA2 will give one audit report, and I will give one audit separate. All three don't have to give separate report, but both of us have to give cross reference to each other's audit report. So you will give a reference to my report that Mr. Pragnesh I issued separate report, and I will give a reference to your report that JA1 and JA2 have issued a separate report. This cross referencing that we are supposed to give, if there is a difference in the opinion, this cross referencing that we are supposed to give, that cross referencing we will give in which paragraph? Other matter paragraph. All right. Now listen. Sometimes they will ask you question of joint audit plan and strategy. Joint audit. Yesterday we did that. Chapter 2 audit strategy. And character of reporting team resulted in resources. That same code word you have to use. Right? No other code word. Same code word you are supposed to use. Secondly, hello. Yesterday we also did engagement letter. Joint auditors will obtain common engagement letter. Even if there are four joint auditors, they will get common engagement letter. Right? Then we also did this now. Today, written representation. Joint auditors will get a common written representation. All of us will not give separate, will not take separate written representation from the management. Joint auditors will get a common written representation. And there is no majority rule when it comes to joint auditor. Even if there are five joint auditors and one joint auditor has a different opinion, he can issue a separate report. Am I clear with this? Yes. You know, sometimes you are ready with such kind of questions. Yes, I know the concept. And they are in the mood of become. Can you give advantage of joint audit? They've actually asked this. Look at this. Are you getting it? Advantage of joint audit. Sharing of expertise. Mutual consultation, lower workload, better quality of performance. What is disadvantage? Sharing of fees. Sharing of fees. There can be difference of opinion. There can be confusion between the liabilities. Right? And who will be liable for what? All right. So there can be advantage also as well as disadvantage also. All right. So they will be ready for such kind of questions. This is jointly responsible for what? And if there is a difference of opinion, issue separate report, give cross reference in other matter paragraph. Done. All right. So your essay 700 to 706 is also over, and your essay 710, essay 600, and essay 299 is also over. Now we will start with the discussion of reporting requirement under companies. over rupees. Okay, so we are continuing our discussion in the marathon revision. We were in chapter 8 audit report, which is talking about, and we were on this point, reporting requirement under Companies Act 2013. Now, when I say reporting requirement under Companies Act 2013, it is nothing but the reporting responsibilities which are given under Companies Act 2013. I will go very quick. First, I'll give you a little bit of briefing. There is this section 143 subsection 1, duty to inquire upon certain matters. First, understand why we are studying this. All right, there are certain sections in Companies Act which says that auditor has to comment. All right, so these comments are given in a separate paragraph in the audit report. These comments are given in a separate paragraph in the audit report, and the name of that paragraph in the audit report is report on other legal and regulatory requirements paragraph. Report on other legal and regulatory requirements paragraph. All right, now there is this section 143 subsection 1, duty to inquire upon certain matters. It has 6 clauses, A, B, C, D, E, F. Listen, on these 6 clauses, auditor has to conduct inquiry. After conducting inquiry, only if there is a negative remark, I repeat, only if there is a negative remark, then auditor has to write it in the audit report. If there is no negative remark, then auditor is not supposed to write it in the audit report. All right, I have a code word for this. These 6 clauses are dealing with some 6 specific matters. All right, so A for advances, B for book entries, C for company other than investment and banking company, D for deposits, E for expenses, all right, and F for fake booking of cash against shares allotted. All right, so A for advances, B for book entries, C for company not being an investment company or a banking company, D for deposits, E for expenses, and F for fake booking of cash against shares allotted. Now listen to me. In clause A, if company has given loans and advances, then we have to check whether these loans and advances have been properly secured. All right, and the terms on which they have been made, means rate of interest security, whether it is proper or not. If company has given loan of 10 lakh rupees at only 1% interest per annum, all right, then it is against the interest of the company. So there will be a negative remark which will come over here. B for book entries, whatever transactions are represented merely by book entries. All right, let us say only depreciation entry, provision entry, adjustment entry. So the transactions which are represented merely by book entries, all right, we have to check whether those book entries are genuine or not. If there is an entry which has no logic, all right, just it is a nor fake entry or something like that, then there will be a negative remark over here. C for company not being an investment company or a banking company. So this clause is only for such companies which are not an investment company or a banking company. That means imagine a manufacturing company or a coaching class company, something like that, not an investment company or a banking company. This clause wants to know whether there is a loss on sale of securities, whether there is a loss on sale of securities, whether there is a loss on sale of securities. All right, so if the securities have been purchased at a price but they have been sold at a lower price, all right, there is a loss on sale of securities, so there will be a negative remark over here. D for deposits, if the company has given loan, all right, but company is trying to show it as deposits on the asset side instead of loan, company is trying to show it as deposit, then it is a negative remark which will come over here. E for expenses, if the personal expenses of the employees, or the directors are charged to the company's P&L account, then again there will be a negative remark which will come over here. All right. F for fake booking of cash against shares allotted, if company has allotted shares against cash, all right, but that that company has not received the cash, okay, then again there will be a negative remark which will come over here. Just broadly you should know, no need to by heart the entire clause over here. No need to by heart the entire clause over here. Just broadly, you should know these points, as simple as that. Okay, that there will be a negative remark which will come under report on other legal and regulatory requirements paragraph. That is 143 subsection 1. Then we have 143 subsection 3, which is duty to report upon certain matters. So if you see, there are certain matters given over here. These are questions asked by company law. And again, there is a separate paragraph, that same paragraph, report on other legal and regulatory requirements paragraph. Report on other legal and regulatory requirements paragraph, all right, where these comments will be given. So if you see clause A, B, C, D, E, F, G, H, I, J, and under J there are certain matters. All right. Don't worry, everything you don't need to buy it. You should know this. All right. I have a shortcut for this also. Don't worry. A for audit evidence. So this clause is just trying to ask whether you have whatever information you have asked from the company's employees, officers, whether you have received that information or not. If not, then you have to give a comment over here. All right. But if you have received the information, listen. If you have received the information, still you have to give a comment over here. In 143 subsection 1, you are supposed to comment only if there is a negative remark. But in 143 subsection 3, all right, auditor's report shall state. That means you must comment upon all matters. I repeat, you must comment upon all matters. So A for audit evidence, B for books of accounts. All right. Whether in his opinion proper books of accounts as required by law have been kept by the company as per section 128 of company law, whether proper books of accounts have been kept or not. And C for, I will call it in Hindi, chota auditor. Chota means small. All right. So if I am the company auditor and you are the branch auditor, so I have to comment over here whether I have used your report and how I have dealt with that report. All right. Then D for disagreement. If there is any disagreement between the balance sheet P&L on one side and the books of accounts on the other side. All right. If there is any disagreement between balance sheet P&L on one side and books of accounts on the other side, that needs to be commented. If there is no disagreement, I repeat, if there is no disagreement, all right, still we have to comment that there is no disagreement between balance sheet P&L and the books of accounts. All right. E for accounting standards. Sir, how come E for accounting standards? Everyone wants E for exemption in accounts. Yes or no, sir? And if you want exemption in accounts, all right, then you should know accounting standards. All right. So it is whether in his opinion the financial statements comply with accounting standards or not. All right. F for financial transactions with adverse effect. I repeat, financial transactions with adverse effect. Sir, what is this financial transactions with adverse effect? If let us say a company has entered into some transactions like forex transactions or something like that, and it is not complying with laws and regulations, correct? So that is a financial transaction or matter which has adverse effect on the functioning of the company that we are supposed to comment over here. Then G for guilty director. As an auditor, I have to check whether directors of the company are disqualified under Companies Act. There is a section for director disqualification, which is there at financial level. But at least you should know that there are directors which are disqualified. If disqualified, then comment is required over here. If the directors are not disqualified, then we have to say that none of the directors are disqualified. All right. All right. H for they want healthy accounting system. They want healthy accounting system. So they want you to comment whether there is any negative remark, whether there is any qualification, reservation or adverse remark, basically whether there is any negative remark relating to maintenance of accounts and other matters connected therewith. So if there is any negative remark with respect to the accounting system, let us say that the company is not maintaining backup of accounts or something like that. If there is any negative remark with respect to accounting system, then it will come over here. So I repeat, A for audit evidence, B for books of accounts, C for chota auditor, D for disagreement, E for exemption in accounts, accounting standard, F for financial transaction with adverse effect, G for guilty director, and H for healthy accounting system. All right. Now clause I. Clause I. This is very, 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 very important for exams. Please understand what they are trying to say. Whether company has adequate internal financial controls. So first of all, please understand that clause I is focusing on internal financial controls with reference to financial statements. You need to understand what they are trying to say with this. Internal controls is a very big word. There are admin controls, operational controls. There are too many different types of controls. They are worried only about accounting controls, all right, like authorization of expenses, like stock reconciliation, something like that. Only accounting controls, like controls over journal entries or something like that. So, as an auditor, you are requested, you have been asked, as an auditor, you have been asked whether there are adequate internal financial controls with reference to financial statements and the operating effectiveness of such controls. So remember, I will give you one formula. So basically, you have to comment upon IFCFS OA. IFCFS OA, whether internal financial controls with reference to financial statements are operating effectively and whether it is an adequate system. Now listen to me very carefully. This report is given as an annexure to the main report. So this is your main report and this is your annexure. Everyone knows that CARO is given as an annexure. Similarly, even this report is given as an annexure to the main audit report. But you know what? IFCFS is not applicable to some companies. Yani, that means I'm going to say some companies. IFCFS is not applicable to these companies. Okay, IFCFS is not applicable to which companies? Okay, IFCFS is not applicable to one person company. IFCFS is not applicable to small company. Small company, please ensure that you know the revised definition. You would have heard about this paid up share capital turnover 10 crore, 100 crore, whatever you have studied in your law subject. All right. So one person company and small company, IFCFS auditors don't have to worry about IFCFS. Then, if there is a private limited company, if there is a private limited company, I repeat, if there is a private limited company, okay, then there are two conditions that they have given. If private limited company fulfills two conditions, how many conditions? Two conditions. All right, then in that case, IFCFS is not applicable. That means the auditors of these private limited company are also not supposed to worry about IFCFS. Now, what are those two conditions? What are those two conditions? All right, for that, I always ask students to remember in this manner. All right, what, when, and how much? What, when, and how much? Please understand, in a marathon lecture, if I'm taking this much effort for this point, it is very important. All right, so two conditions. What are those two conditions? First, you will have to see turnover. Okay, turnover should be less than 50 crores as per the latest audited financial statements. Okay, so it should be less than rupees 50 crores. But as per what? As per latest audited financial statements. So if you're conducting audit of financial year 26-27, all right, then you will see the turnover of financial year 25-26. It should be less than 50 crores. And second condition, which has aggregate borrowings from banks or financial institution or any body corporate at any point of time during the financial year less than rupees 25 crores. Okay, so basically total borrowings from banks, financial institution, body corporate, addition, total from banks, financial institution, and body corporate when when at any point of time during the financial year, at any point of time, at any point of time during the financial year. So if you are conducting audit of financial year 26-27, even for a single day is also covered over here. At any point of time during the financial year should be less than rupees 25 crores. All right. So even for a single day, if it goes 25 crores, then IFCFS will be applicable. For non-applicability, you have to fulfill two conditions. I repeat, for non-applicability, you have to fulfill two conditions over here. All right. So that is your A, B, C, D, E, F, G, H, and I. I am repeating one more time. Internal financial controls with reference to financial statements. You have to express an opinion on adequacy and operating effectiveness. It is not applicable to one person company, small company, and it is also not applicable to private limited company, which are fulfilling two conditions. Which conditions? First, turnover less than rupees 50 crore as per latest audited financial statements, and second, aggregate borrowings from banks, financial body corporate less than rupees 25 crore at any point of time during the financial year. All right, then you have this clause J, which says such other matters as may be prescribed. But which matters? All right, in that there are too many points. Okay, now you don't have to worry about all of these points. You don't have to worry about all of these points. We will cover these points only to the extent it is covered in the past questions. All right, so section 143 subsection 1 done, section 143 subsection 3 done. Now I also request you to go through section 143 subsection 12 of Companies Act 2013, which is duty to report fraud to the central government. I know that this is covered in the law subject. All right, so I am not going to a very big extent, but little bit at least we will be very clear with. 143 subsection 12 of Companies Act 2013 talks about duty to report fraud to the central government. All right, now when it comes to fraud reporting to central government, okay, first you have to see, you are an auditor, right? First of all, you should have reasons to believe, you should have convincing evidence, all right, that there is a fraud, which is current fraud, past fraud, whatever fraud is committed in the company by its officers or employees. If a fraud has been committed by supplier or customer and none of the employees officers are involved, then 143.12 is not applicable. So by heart this much, auditor of a company during the course of performance of his duties as an auditor has reasons to believe that an offense involving fraud is being or has been committed against the company by its employees or officers, all right, which involves or is expected to involve individually an amount of 1 crore or above. So amount of 1 crore or above, then you are supposed to report to the central government. But sir, how you are supposed to report to the central government? That full line I have given over here, that how you are supposed to report to the central government. Wait, I will draw one diagram. So let us say here you come to know about the fraud. Within first 2 days, within first 2 days, you have to report to the board of directors audit committee. Okay, You will have to ask board of directors audit committee to give their reply and observations. Then you will wait till 45th day. So this is 0 to 45, not 2 plus 45, 47. All right, you will wait till 45th day for the board of directors or audit committee to give their reply observations. If board of directors audit committee submit the reply observation, let us say they submit the reply observation over here, then from here within next 15 days you will report to central government. But if they submit the reply observations on 45th day, then within next 15 days you will report to the central government. But if they fail to submit the reply or observations till 45th day, then immediately on the next day, that is 46th day, you will report to the central government. All right, whatever information you have, you will report to the central government, and that is form ADT4 where you are supposed to report. All right, Baki you can study from your law subject also. But listen to me, if the fraud amount is less than rupees 1 crore, if the fraud amount is less than rupees 1 crore, then you don't have to submit a separate report to the central government, but you have to report NAP, nature of the fraud, amount involved, and parties involved. Nature of the fraud, amount involved, and parties involved. All of this you have to report, all right, to both the board, to the audit committee, if any, otherwise to the board of directors within 2 days. Then it is the audit committee and the board of directors who have to report this in the director's report. But there are two possibilities. Let us say you found a fraud of cash misappropriation by cash share of 75 lakh rupees. You report it to the audit committee and the board of directors. All right, your duty is over. Now let us say audit committee, board of directors took some action against it. Audit committee, board of directors took some action against it. If they have taken action against it, that means remedial action has been taken. Then in the director's report, the board of directors audit committee will not expose the name of the party. All right, so be very careful. Board of directors need to provide following disclosure in the board's report. If remedial action has been taken, then only NAR, nature of the fraud, amount involved, remedial action taken. If remedial action is not taken, then NAP, nature of the fraud, amount involved, parties involved. I hope I have made myself very, very clear. Yes, sir. Yes, sir. Yes, sir. So this chart you should read a couple of times to get the clarity. After that, we have CARO 2020. CARO 2020 is very sensitive, all right, but very, very important. But first, what I will do is, I will try to solve the questions, all right, which we see over here. So look at this. CA student Manoj is studying. You see this September 25 question. On exemptions available to private limited company in respect of certain reporting requirements, you are required to guide Manoj on the following. All right. First, IFCFS. All right. So IFCFS, one person company, small company, private limited company, two conditions. Okay. And then CARO. Okay. CARO. Wait for some time. Let us finish questions other than CARO for reporting requirements, because everyone feels that only CARO will be asked, but that's not the case. There are sometimes other questions also that are asked. All right. Then we have put concepts of CARO over here. Now look at this. This is MTP 24, August 24 and July 25. So these questions are also there. Section 143, subsection 1 of Companies Act 2013 states that every auditor of a company, all right, shall have access to books of accounts and stuff. But section 143, subsection 1 also wants auditor to inquire upon certain matters. What are those matters? I told you, na, A, B, C, D, E, F. A for advances, B for book entry, C for company other than investment company, banking company, loss on sale of securities, D for deposits, loans and advances shown as deposits, E for expenses, and F for fake booking of cash against the shares allotted. All right, so these are the matters which we see over here. CARO questions are there. Obviously, CARO questions are always there, one of their favorites. But then apart from CARO also, we can see few things, all right, that are there in this particular question bank. Otherwise, CARO questions are always going to be there. Okay. All CARO questions, 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 still CARO questions, CARO questions, CARO questions. All right. Look at this. Fraud amounting to rupees 5 lakhs. Okay. Again, CARO question. In CARO also there is a point of fraud, and again CARO questions. All right, so we have certain CARO questions over here. All right, and apart from that, there can always be a question of fraud reporting to the central government, which is also one of their favorite question. Yes, now look at this. There is a fraud. All right. There is a fraud of about 75 lakhs or so. You see this reporting to the audit committee, board of directors. This is from section 143, subsection 12. So obviously CARO questions are there, but apart from that also there are certain questions, or at least the important points which I have covered right now. Okay. Now, when it comes to CARO 2020, as of now, what I can do for CARO 2020 is, all right, in this particular session, I can give you a very, very quick revision of CARO 2020. All right, which I think should be enough, more than enough. I have a code word for CARO 2020, the clauses to be remembered, that I will share separately with you in this YouTube comment section also. I will share, not a problem. All right. Now, when it comes to CARO 2020, for the students who are not at all aware, CARO 2020 is Companies Auditors Report Order. It is issued as an annexure. It is issued as an annexure to the main audit report. All right. However, when it comes to CARO 2020, when it comes to CARO 2020, all right, so this is also part of audit report. Inter-CA students should be aware about two things. First is the applicability of CARO, and second is the reporting requirement. First is the applicability of CARO, and second is the reporting requirement. All right, these are the two things that an inter-CA student should be aware of. Okay. Now, when it comes to applicability of CARO, CARO 2020 is not applicable. CARO 2020 is not applicable. It is not applicable to whom? It is not applicable to BSO 8 private. It is not applicable to banking company. It is not applicable to I for insurance company. It is not applicable to small company. It is not applicable to one-person company. It is not applicable to Section 8 company. All right. And it is not applicable to private limited company which fulfills four conditions. It is not applicable to private limited company which fulfills four conditions. How many? Four. Condition number one, that private limited company should neither be a subsidiary nor a holding of a public company. That private limited company should neither be a subsidiary nor a holding of a public company. First condition. Second condition, the paid up capital and reserves and surplus. The paid up capital and reserves and surplus should not be more than rupees 1 crore as on the balance sheet date. Just don't by heart 1 crore, focus on other things also. All right. So first of all, if you are conducting audit of financial year 26-27, when I say balance sheet date, this is nothing but 31st March 27, not the previous year. Paid up capital, reserves and surplus will include all types of reserves. All right, add everything that is given over there. Don't exclude any reserve, including revaluation reserve. All right, it should not be more than rupees 1 crore. So exact 1 crore is fine, but it should not be more than rupees 1 crore. All right, so this becomes the second condition. The third condition, which does not have total borrowings exceeding 1 crore rupees from any bank or financial institution at any point of time during the financial year. All right. So again, they are talking about total borrowings, but only from bank and financial institution. Whereas in IFCFS, they were talking about aggregate borrowings from bank, financial institution, and body corporate. Here, they are talking only about total borrowings from bank and financial institution. All right. At any point of time during the financial year, that means full financial year, even for a single day, it should not exceed 1 crore. So again, this is within 1 crore. Okay. Borrowings limit also include all types of borrowings from banks and financial institution. And fourth condition, which does not have a total revenue. All right, as disclosed in Schedule 3 to Companies Act, exceeding 10 crore rupees during the financial year as per the financial statements. So total revenue should not exceed 10 crores. All right, so it should be within 10 crores. All right, during the financial year means financial year 26-27 as per the financial statements if the question is of 26-27. So 1110, 1110, 1110. All right, 1110, one paid up capital, reserves and surplus, one total borrowings from banks and financial institution, 10 total revenue, not just turnover, revenue from operation plus other income, total income. All right, total revenue, 1110, 1110, 1110. All right, for paid up share capital, reserve surplus, balance sheet date, for total borrowings at any point of time during the financial year. And again, total revenue also you have to see of the financial year under audit. All right. These companies, if private limited company fulfills all four conditions, then CARO 2020 is not applicable. Otherwise, CARO 2020 will be applicable even if one condition is not fulfilled. So tell me, CARO 2020 is not applicable to BSO 8 private. All right. This is one thing that you need to understand. There is one more thing that you need to understand. Before I go to that, let us see this question. All right. Achha, this was just a theory question on IFCFS and private limited company, CARO. So you write the theory, you will get your marks. Okay. Now, there is one more point of applicability of CARO which you need to understand very, very clearly. There is one more point of applicability of CARO which you need to understand very, very clearly. Listen to me very, very carefully. CARO has total 21 clauses. All right. Out of that, 20 clauses are applicable to audit report on standalone financial statement. And 21st clause is only made for consolidated financial statements. That is why for consolidated financial statements, we say first 20 clauses are not applicable. All right. So let us say if Alpha Limited is holding S1 Limited S2 Limited and S3 Limited. All right. Alpha Limited will prepare two financial statements, standalone financial statements and consolidated financial statements. For the standalone financial statements, we have 20 clauses. All right. And for consolidated financial statements audit report, all right, we have only 21st clause that you need to understand. So what we will do is we will first finish 21st clause of CARO 2020. We will first finish 21st clause of CARO 2020. All right. 21st clause of CARO 2020. Everyone over here. What does the 21st clause say? Obviously, I'm not going to revise every single line, but I will tell you very quickly. I am the auditor of the holding company. You are the auditor of subsidiary company. In your CARO, all right, whatever are the negative remarks, okay, whatever are the negative remarks in your CARO, okay, I need to give a reference of that in my audit report. Listen to me. I am conducting audit of the holding company. Holding company will also prepare two financial statements, standalone financial statements and consolidated financial statements. In standalone financial statements, first 20 clauses are there. In any of those first 20 clauses also, if there is a negative remark, all right, I need to compile it over here. So let me give you a very simple formula. All right. So consolidated financial statements is made up of standalone financial statements of parent entity plus the subsidiaries. Yes. So in their standalone financial statements, CARO, wherever there are negative remarks in any of the clauses, only CARO negative remarks, not the negative remarks of the entire audit report. All right. Only CARO negative remarks. All right. That will be included in the CARO of CFS. Okay. Let me read. Whether there have been any qualifications or adverse remark by the respective auditors in the CARO reports, all right, of the companies included in the CFS, not only subsidiaries, all the companies included in CFS. So standalone financial statements of parent entity, first 20 clauses also, if there is a negative remark, that will also be given reference over here. If yes, indicate the details of the companies and paragraph numbers of the CARO report containing the qualifications or adverse remark. Yes, sir. Yes, sir. Yes, sir. All right. Now listen to me very, very carefully. All right, there are about 20 clauses over here. 21st is done. It is for CFS. Now we are talking from the angle of standalone financial statements. All right, there are 20 clauses over here. So what we will do is quickly we will just take a briefing of the clause. All right. Now clause 1 is talking about property, plant and equipment. Okay, which will, and it is not only talking about property, plant and equipment, it is also talking about intangible assets. Now in clause 1, they are worried about whether company is maintaining proper records. They are worried about inspection, physical verification. All right. They are worried about ownership of the immovable properties. Then they are worried about revaluation. And then they are worried about Benami property proceedings. All right. So what we will do is Rio, RB or BR. All right. Records, inspection, ownership, revaluation, all right, and Benami property proceedings. First, the head points. Okay. Proper clause 1A is very simple. Proper records of fixed assets, proper records of intangible. Clause B talks about physical verification, whether the property, plant and equipment have been physically verified by the management at reasonable intervals. Reasonable intervals will be at least once in 3 years. So we have to comment that at least once in 3 years, whether management is physically verifying the inventory or not. And in that physical verification, verifying fixed assets or not. I'm so sorry. Physically verifying fixed assets or not. And in that physical verification, if there is any kind of material differences, all right, whether it has been rectified in the books of accounts or not. Then C, that is ownership of immovable properties. Okay, whether title deeds or title documents of all immovable properties which are disclosed in the financial statements, whether they are held in the name of the company or not. All right. Then D, they are talking about revaluation, whether property, plant, equipment, intangibles, whether they have been revalued or not. That is fine. If they have been revalued, whether they have been revalued by registered valuer or not, which is a certified valuer under Companies Act, whether they have revalued from that registered valuer or not, that is also fine. What is important over here is the amount of change. So let us say if there is a building, there are 3 buildings, B1, B2, B3. The carrying value is 100, 100, 100. All right. And the revalued amount is 115, 100, 100. So here there is 15% change. But if you compare the whole block of asset, there is only 5% change. So which percentage we have to take into consideration? The block of asset. Look at this. If change is 10% or more in the aggregate of net carrying value of each class, means the whole block of property, plant and equipment or intangible asset, then that needs to be specified over here. I hope I have made myself very clear. And clause 1E is just talking about whatever are the legal cases with respect to Benami property, whether they have been disclosed in the financial statements. All right. If we just have to comment upon that, and if there are any cases going on of hidden properties, Benami properties, properties holding in the name of some stranger, all right, then hidden properties basically. If there are such cases going on, then we have to comment that whether they have been disclosed in the financial statements or not. All right. So REO, RB, when it comes to clause 1, property, plant and equipment. Clause 2 talks about inventory. Inventory, there are two discussions. One is regarding physical verification. Second is regarding working capital loan sanctioned. All right. When we talk about physical verification of inventory, we have studied that properly in SA 501. Even in marathon revision, I have covered it. So I am only interested in the CARO points over here. We want to know whether physical verification of inventory has been conducted at reasonable intervals. So when I say reasonable intervals, it is nothing but at least once in a year, physical verification should be conducted by the management. For property, plant and equipment, at least once in 3 years. And in that physical verification, in that physical verification, whether the coverage and procedure of that verification is proper or not. And most importantly, if there is a difference, if there is a difference of 10% or more in the aggregate for each class of inventory were noticed, then whether it has been rectified in the books of accounts or not. So let us say when the physical verification was going on, all right, at that point of time, if there was a difference of 10% or more in the aggregate of class of inventory, so let us say that there is product 1, product 2, product 3, all right, all products under finished good, all right, 100, 100, 100, all right, there is a difference, let us say of 110 here, here it is 100, here it is 100. So total 10, 300, this is 310. But this difference, if you see, we have to compare this class. This difference is not 10% or more. Then in that case, we are not supposed to be worried. Okay. So physical verification conducted at reasonable intervals. If yes, what is the coverage and procedure of such verification? Are you satisfied with that? If yes, if there are differences of discrepancies of 10% or more in the aggregate of each class of inventory, then whether it has been properly dealt with in the books of accounts or not. Then clause 2B is about working capital loan sanctioned. Be very careful whether during any point of time of the year, the company has been sanctioned working capital limits in excess of 5 crore rupees or more in aggregate from banks or financial institution on the basis of security of current assets. Relax. All right. You know what? If there is a manufacturing entity, it can go to the bank. This is done in bank audit also. It can go to the bank. It can show its inventory and trade receivables, and bank will sanction a loan. All right. So that is called as working capital loan. Okay. Now they are worried about such kind of working capital loan on the security of current assets. But listen to me. Let us say bank has sanctioned working capital loan of 2 crores. Then there is one more bank which has sanctioned of 3 crores. Then there is one more bank which has sanctioned of 1 crore. So three banks from three different banks you have taken working capital loan, and total comes to 6 crores. All right. Then you have to consider it more than 5 crores because they have used the word in aggregate from banks and financial institution. All right. So I will read one more time. Whether during any point of time of the year, the company has been sanctioned working capital limits in excess of 5 crore rupees in aggregate from banks or financial institution on the basis of security of current assets. In this video, just focus on revising CARO. Don't think about by hearting everything. 2-3 times you will see solve questions. It will be done. All right. And CARO code word I will give you separately in the comment section. All right. Now listen to me. There is a requirement where manufacturing entity has to file once in 3 months. They have to file the statement of current assets with the bank. So CARO wants to know whether that statement was properly filed with the bank and whether there is any difference with the books of accounts. Whether quarterly returns or statements filed by the company with such banks or financial institutions are in agreement with the books of accounts of the company. If not, then please provide the details. All right. So one CARO clause 1, property, plant and equipment, REO, RB done. All right. 2, inventory. Again, it is when it comes to inventory, it is PW, that is physical verification and working capital loan sanctioned. Okay. Now clause 3, investment made, loans or guarantees given. Investment made, loans or guarantees given. All right. Now I call it as LIGS, LIGS, LIGS. All right. Focus over here. Little bit technical clause. All right, but be patient. Whether during the year the company has made investments. I am not showing any fancy notes for CARO. because you have to read line by line. All right, Caro. That is, I'm not showing fancy notes to you. This is not the time. You have to ensure that you are going through the wordings. Whether the company has made investments in or provided any guarantee or security or granted any loans or advances in the nature of loans, secured or unsecured, to companies, firms, or LLPs or any other parties. Wait, that means they are talking about if the company has given leaks to any person, all right, loan, investment, guarantee, security. So they are talking about companies asset side, all right, asset side, loans and investments. Okay. Then in that case, first of all, they want a breakup of loan given. Okay. They want to know how much loan was given to subsidiaries, joint ventures, associates, how much was given to others, what was the amount of the loan given, and what is the amount outstanding as on year end. All right, to subsidiaries, joint ventures, associates, and to others. But if you see for 3A, they have clearly said that it is not applicable to companies whose principal business is to give loans. All right, so there are so many companies whose main business is to give loans like NBFCs and stuff. So 3A is not applicable to such companies, not applicable to loan giving companies, not applicable to loan giving companies. All right. 3B, whatever leaks company has done, whatever leaks company has done, whatever LIGS company has done, all right, whether it is prejudicial to the company's interest, means it should not be biased to the company's interest. All right, let us say company has given a loan of 1 crore, all right, at 1% interest per annum. It is against the interest of the company. All right, company has made investments in such a company has made investments in a company which is going to default. All right, but company is going to make investments over there. They are making lots of investments. Again, it is against the interest of the company. Then when it comes to 3C, all right, repayment schedule and recovery, whether the repayment schedule has been decided and whether the recovery is regular. 3D is worried about total amount overdue for more than 90 days. If the amount has been due, all right, and if it becomes overdue, if the borrower is not paying it, if the amount is overdue for more than 90 days, then D is worried about it. D also wants to know whether the company has taken reasonable steps for the recovery. All right. E, listen to me. E is worried about loan RER, loan renewal, extension, and replacement. Loan renewal, extension, and replacement. Let us say you are the borrower, I am the company. All right, you are the borrower, I am the company. You are supposed to make the repayment in this year, but either I replaced your loan with a fresh loan, all right, or I extended your loan, all right, or I extended your loan, or what I did is I just passed a journal entry, I closed your old loan and passed a new loan. So either renewal, closing old, passing new, all right, extension, extending the same loan period, replacement, giving fresh loans to settle the earlier loans. If there is a loan RER, then whatever is the total amount of loan RER done during the year, that needs to be specified over here. All right. F, demand loans or without defined repayment schedule. I call it as demand loans. So DL, demand loans. What is demand loans? That listen, I am giving you loan of 2 crores. Whenever I demand the repayment, only then you make the repayment. So there is no repayment schedule. It's a demand loan. If I demand the repayment, then you give me the repayment. Or without defined repayment schedule. So no repayment schedule. So either company has done DL, demand loans, or no repayment schedule. All right. Then in that case, CARO wants to know about it, that if there are such loans which have been sanctioned. CARO also wants to know whether such loans were given to promoters, directors, all right, and related parties. Then that also amount CARO wants to know. So let us say if the demand loan and no repayment schedule, if the total demand loans plus no repayment schedule is 100 crores, all right, out of that 80 crore has been given to promoter, then this 100 crore should also be shown, and 80 crore to the promoter, that also needs to be shown over here. All right. So that is your clause 3A, B, C, D, E, F. One more time. 3A is breakup of loan given to SJs and others. 3B, whether there is any LIGS which is prejudicial to the company. 3C, D, E, all worried about loans, whether there has been any repayment schedule or recovery, whether it is regular, whether recovery is regular. 3D, overdue for more than 90 days, reasonable steps taken for recovery. And E for extension, renewal, extension, replacement. And F for fraud loans, I will say, or like demand loans or without any defined repayment schedule. I understand clause 3 is little heavy, but you have to go through this once. All right. Clause 4 And clause 5, I am not expecting at inter C level to be asked separately. Clause 4, just knowledge you should have. Clause 4 is just dealing with whether section 185 and 186 have been complied or not. Those are company law, directors, and related party sections. All right, so that is not there at inter C level. Just that you should know that clause 4 deals with section 185 and 186. Clause 5 is your full deposits chapter from company law subject, that is section 73 to section 76, whether it has been complied or not, that you study very well in law. Here we just have to comment that whether these sections have been complied or not, and if the sections have not been complied, then we will write the nature of violations. All right. Clause 6, this is also there in company law, section 148 of Companies Act 2013, where the law professor would have taught you that which company needs to maintain cost records. All right. Clause 6 just wants to know that if you are auditing a company which is covered under section 148, all right, then whether they have maintained their cost records or not. You don't have to check whether they are properly maintained or not. Don't write the word properly. We just have to check whether the cost records have been maintained or not. All right. Clause 7, if you want me to tell you the important clauses at inter C level, it will be clause 1, clause 2, clause 7. All right. These are the clauses which can get their attention. Clause 7, statutory dues. Now listen to me. If there is any taxation due, all right, or GST due, income tax, sales tax, whatever it is, all right, such kind of dues to appropriate authority, then the CARO clause 7, CARO clause 7 wants to know that whether as on the balance sheet date, that is the last day of the financial year, whether it has been paid or it is unpaid, all right, if it has been paid, whether it has been regularly paid or not, and let us say if it is unpaid, then we have to ask why it is unpaid. There are two reasons: either it is disputed or it is undisputed. Disputed means legally disputed. Just sending a letter to the income tax department is not dispute. If it is disputed, then we have to mention the details of it. First I will show that disputed. 7b, all right, 7b, disputed, where the statutory dues given above have not been deposited on account of any dispute, then the amounts involved and the forum, means whatever is the amount involved, and the forum means that income tax appellate tribunal or whatever it is, amounts involved and the forum where the dispute is pending shall be mentioned. All right. But writing a letter to the department is not a dispute. It has to be a proper legal dispute. But listen to me. If it is undisputed and unpaid, means they are genuinely outstanding. All right. If they are outstanding for more than 6 months from the date they became payable, then again that details need to be mentioned. Let me read this. Whether the company is regular in depositing undisputed statutory dues, all right, including, then they have given names of different dues, and if not, means the company is not regular, all right, in depositing undisputed statutory dues. The extent of arrears of outstanding statutory dues, very important line. The extent of arrears of outstanding statutory dues as on the last day of the financial year for a period of more than 6 months from the date they became payable shall be indicated. One more time. Extent of arrears of outstanding statutory dues. Tell me, extent of arrears of outstanding statutory dues as on the last day of the financial year concerned for a period of more than 6 months from the date they became payable shall be separately indicated. Yes sir, yes sir. Clause 8. Acha, you know now that in income tax there are so many scrutinies which are done by income tax officers. So let us say that there is a particular company on whom the scrutiny was going on. You are the auditor of that company, and that company has surrendered the income. That sorry, income tax officer. The company has surrendered the income. All right, they had hidden some income. That company has surrendered and disclosed it in the income tax proceedings. Then Ministry of Corporate Affairs says that okay, company has surrendered the income in front of income tax department, but they should also pass the rectification entry in the books of accounts. So they are worried about it. Whether any transaction not recorded in the books of accounts has been surrendered or disclosed as income during the year in the tax assessments under Income Tax Act. If so, whether the previously unrecorded income has been properly recorded in the books of accounts during the year. All right. So that is the point. Okay. So if you have surrendered in front of income tax department, but whether it has been properly recorded as income, all right, in the books of accounts during the year. Clause 9, again one of their favorites, whether it is inter C or final C level. default in repayment of dues. All right, stay connected, don't quit. All right, clause 9, I know that you want to see CARO 2020 in 5 minutes. That's not the case. You have to stay connected. All right, clause 9, default in repayment of dues. Okay, 9a, whatever borrowings you had taken from any lender, if you have defaulted in the repayment, then in that case there will be details over here. Whether the company has defaulted in repayment of loans or other borrowings, or in the payment of interest thereon to any lender. If yes, the period and the amount of default is to be reported as per the format given below. Try to remember the format if possible. But let me tell you, in case of bank, financial institution and government, in case of bank, financial institution and government, if the lender was the bank or financial government, then lender wise details will be given. So you have defaulted to Kotak Bank, SBI and other Bank of Baroda, then Kotak, SBI and Bank of Baroda, separate names will be given over there. All right, for other lenders you can club the name. All right, let us say there are n number of deposit holders to whom you have not paid, something like that. All right, then you can just write deposit holders or debenture holders, and accordingly you can write it over here. All right, next, if the company has been default, if the company, B for beggar, willful defaulter. All right, if the company has been declared willful defaulter, what is willful defaulter? That you have the money to pay but still you are not paying, that is called as willful defaulter. If the company has been declared willful defaulter by any bank or financial institution, then that also needs to be mentioned. C and D, very important. C talks about any kind of misutilization, if you had taken loan for plant and machinery. All right, but you went on a world tour. Look at this. Whether term loans were applied for the purpose for which the loans were obtained. If not, the amount of loans so diverted and the purpose for which it is used may be reported. But D is very specific. All right. D is saying that whether you have used short-term loans for long-term purposes. All right. Whether you have used, all right, short-term loans for long-term purposes. If you have used short-term loans for long-term purposes, then in that case it will be specified. Let us say you took a working capital loan. All right, you took a working capital loan, but you have utilized for purchase of plant and machinery. Then you have used short-term loans for long-term purposes. That will be given in 9D. I don't know how many of you will relate or connect with this, but it is my duty to tell you that if short-term loans have been used for long-term purposes, it also indicates doubt over going concern. It is one of the official indicator mentioned in the module for going concern. In the last session, I took SA 570 where I described about indicators over going concern. It is one of the financial indicators. So they can try to mix this short-term loans used for long-term purposes. All right. Any other misutilization? Clause C. All right, plant and machinery you used for, let us say, buildings. Clause C. All right, it is long-term loan, long-term purpose. Long-term loan, short-term purpose, clause C. Only short-term loan, long-term purpose is clause D. All right. Then 9E, loans taken to meet obligation of component. If the company has taken loan, but not for its own liability, it has taken the loan to meet the obligations of the component subsidiaries, joint ventures, associates, then again it will be mentioned over here. Clause F, securities held in the components pledged. Let us say I am the auditor of a holding company. Let us say I am the owner of the holding company. But I am also holding shares in the subsidiary company. All right. So what the company will do, holding company is holding shares in subsidiary company. Alpha Limited is holding 60% shares in S1 Limited. So Alpha Limited will go to the bank and say, bank. I have the shares of S1 Limited. I have the shares for S1 Limited. So they will keep that as a security and try to get the loan from there. All right. Again, that is wrong. Okay. Whether the company has raised loans during the year on the pledge of securities held in SJS, then report if the company has defaulted and repayment of such loans. All right. So you have to report about these details also if securities held in the components have been pledged. All right. So clause 9, again very sensitive. If you want me to give the sensitive clauses for Inter CA, 1, 2, 7, 9. All right, very sensitive. Now comes clause 10, which is again equally sensitive. Public offers and private placement. I will be very clear, very fast with this. All right, 10A, if you have raised money by IPO, FPO, all right, of shares and other public instruments, and if you have misutilized it, You raised money for one of the project and you have misutilized it. All right, then it is 10A. So tell me, students, quick fire round. If you have taken a loan from the bank and if you have misutilized it, loan from the bank and misutilized it, 9C. Short term loan from the bank, long term purposes, 9D. Shares from the public, all right, you have raised the money by shares and you have misutilized it, 10A. But let us say you have raised the money by private placement. So you have issued shares to private equity holders, Shark Tank India and stuff. All right. And whatever money you have raised that you have misutilized. All right. Then that is 10B. Company has made any preferential allotment of private placement or shares or other convertible debentures, whether it was used for the purposes or not. So come on, everyone, misutilization of loan, 9C. Short-term loan, long-term purposes, 9D. Misutilization of IPO, FPO money, 10A. Misutilization of private placement of shares money, 10B. All right. Yes, sir. Yes, sir. Yes, sir. Clause 11, fraud reporting. In this session itself, we have discussed. That fraud amounting 1 crore or more is reported to the central government, but less than 1 crore is not reported to the central government. But when it comes to CARO, very, very, very important. When it comes to CARO, A for any fraud. All right. Any fraud, whether employee officer was involved, anyone else was involved, fraud against the company, by the company, fraud on the company. All right. Any amount, 5 lakh, 2 lakh rupees also has been noticed or reported during the year. If yes, the nature and amount involved is to be indicated. So A for any fraud. B for Bharat central government. Okay. So that for reporting to central government, whatever you have done, section 143 subsection 12, whatever report you have submitted to the central government, all right, that reference will be given over here. That fraud also details need to be given over here. Form ADT 4 if you have filed. C for city. All right, city, Visilpudu. All right, C for Chennai Super Kings, Visilpudu. Whether auditor has considered whistleblower complaints. Whistleblower complaints are the complaints where the insider, employees, or anyone anonymously, without disclosing their identity, reports the fraud, complaints about the fraud. So A for any fraud, B for Bharat central government reporting to central government, and C for city, whistleblower complaints. Clause 12, Nidhi company. All right, Nidhi company concept is covered in company law, but I will tell you very quickly what they are trying to say over here. Whether Nidhi company has complied with net own funds to deposits in the ratio of 1:20. So in front of 20 rupees deposits, Nidhi company should at least have 1 rupee. You know the business of Nidhi companies that it will take deposits from the members. It will also give loan to the members. All right. So in front of 20 rupees of deposits, at least Nidhi company should have its own fund of 1 rupee. All right. Next, whether Nidhi company is maintaining 10% unencumbered term deposits as specified in Nidhi Rules 2014 to meet out the liability. Sir, what is this? Listen to me, everyone. If members have paid deposits with Nidhi company, all right, of 100 rupees, then out of this 100, 10 rupees, that is 10%, Nidhi company has to keep it as an FD with one of the bank. All right. And then from this FD can't be used as a security for loan. Huh? This FD can't be used as a security for loan, so it has to remain unencumbered. Unencumbered means not available to be given as security. It should be free from any other obligation. So that is what they are trying to say, whether Nidhi company is maintaining 10% unencumbered term deposits. Next, 12C. Whether there has been any default in payment of interest on deposits or repayment thereof for any period, and if so, the details thereof. So if Nidhi company has defaulted, in the repayment of deposits, all right, if Nidhi company has defaulted in the repayment of deposits or interest on the deposits, then it will be reported in 12C. So tell me one thing. If you get a question of Nidhi company, and let us say Nidhi company has defaulted, in repayment of bank loan. Tell me, Nidhi company has defaulted in repayment of bank loan. Then it will be reported under which clause? If you get a question on Nidhi company, and if it is defaulted in repayment of bank loan, then it will be reported under which clause? Sir, it will be reported under 12C. No. It will be reported in 9A only. Hello. Just because looking at Nidhi company, don't jump to clause 12. 12C is for default in payment of interest on deposits. All right. So if it is a Nidhi company, but if it has defaulted in repayment of bank loan, it will still remain 9A. All right. Students, be very clear. Default word is separate. Misutilization word is separate. Default, I am not paying the installment. Misutilization, I'm using money somewhere else. So listen to me, guys and the girls and everyone. All right. If there is a default in bank loan 9A, default in bank loan 9A, Nidhi company defaulted in payment of deposit holders money 12C, misutilization of bank loan 9C, short term loan for long term purposes 9D, IPO FPO money is misutilized 10A, private placement of shares being misutilized money 10B. Yes, sir. Yes, sir. Yes, sir. Yes, sir. All right. Clause 13, it is just dealing with related party transactions, whatever are the related party transactions, whether they are complying with sections this 177 and 188, that will not be questioned, but the next line can be questioned to you, that they want to know whether related party transactions details have been disclosed in the financial statements as required by applicable accounting standards. So AS 18 disclosure, whether it has been made or not, and for final C, Ind AS 24 disclosure, whether it has been made or not. Next, clause 14. Clause 14 talks about internal audit system. So if section 138 is applicable to the company internal audit section, then whether the company has internal auditor, and more importantly, whether that internal auditor is sufficient, commensurate for the company. Now, if Reliance Industries Limited has just one person acting as internal auditor, all right, that's not good. They should have a full internal audit team. Whether the company has an internal audit system commensurate with the size and nature of its business, commensurate means sufficient. All right. Second, whether the reports of internal auditors for the period under audit were considered by the statutory auditor. So if you are the statutory auditor, whether you have considered the reports of internal audit or not. Already we did this in chapter 4 SA 610. Okay, so clause 14 is for internal audit system. Clause 15 will not be asked at inter-CA level. All right, final C also less chances, because final C also these sections are there in SPOM. Compliance with section 192 of Companies Act 2013. All right, whether a company, but at least you should know this, whether company has entered into any non-cash transaction. So what is non-cash transaction? All right, director giving building to the company giving land to the director, non-cash transaction. All right, then there are lots of provisions to be complied with, so they are just giving reference to section 192 of Companies Act 2013. Again, clause 16 is one of the favorites, but at CA final level, not at CA inter level. If the company is satisfying the definition of NBFC, then whether it has obtained registration license from RBI or not. All right, that much at least inter CA students should know. Beyond that, not required that knowledge. Okay. Clause 17, cash loss. What is cash loss? Tell me everyone. If you see in the PNL net loss of 20 lakhs, but you also see that I have passed a provision entry of 30 lakhs, then actually 20 lakhs, you add back 30 lakhs, then actually I had a 10 lakh profit. It is because of this provision entry of 30 lakhs that I am showing net loss of 20 lakhs. So I actually did not have any cash loss over here. Correct. So when I say cash loss, means net loss, and you will add back non-cash expenses. One more time, net loss and you will add back non-cash expenses. You have to report whether company has incurred cash losses in the financial year and in the immediately preceding financial year. If so, you have to state the amount of cash losses. Clause 18, resignation by the statutory auditor. Whether there has been any resignation of the statutory auditor during the year. If so, whether the auditor has taken into consideration the issues, objections or concerns raised by the outgoing auditor. All right. So one more time, you have to talk about resignation by the statutory auditor. If you have appointed as an auditor, previous auditor resigned, then you have to say that whether you have considered whatever the issues, objections and concerns were raised by that particular auditor. Clause 19 is worried about whether the company will be able to meet the liability which in the foreseeable future, which arises in the next 12 months from the balance sheet date. In 19, when you are writing the English, don't write the word going concern. I will tell you what you're supposed to write. In 19 clause, if you read the entire clause, there is no word called as going concern. Clause 19 wants to know whether auditor is of the opinion that no material uncertainty exists as on the date of audit report, and that company is capable of meeting its liabilities existing at the date of balance sheet as and when they fall due within a period of 1 year from the balance sheet date. All right. So that is your clause 19. Clause 20, CSR activities, corporate social responsibility activities, section 135, that you do it at CA inter level, you already have it. All right, but what I would like to just add to it is that this clause is worried about only unspent amount. There is a requirement that unspent amount is supposed to be transferred to a separate special account, all right, within 6 months from the end of financial year. That requirement they are testing, all right, whether CSR is applicable or not, that they are not checking. They will assume that CSR is applicable. We have to just check whether the amount is remaining unspent with respect to any project. All right, then we have to comment whether it has been transferred to a special account as per section 135 or not, but not one of their favorites at CA inter level. All right, so that those are your 20 clauses. Now listen to me, couple of tips when it comes to CARO, all right, that when it comes to CARO, whenever you are writing the answer, clause number obviously important, that I will write in the YouTube comment section, the whole code word, don't worry about it. All right, very important to understand. First of all, the important clauses 1, 2, 7, 9, 10, 11. All right, at least these clauses are very, very important. Balance clauses, whether they will ask, not ask, they do ask, but these clauses are though very, very sensitive. Now, when you're writing the answer, you have to always start in this manner, according to clause dash under paragraph 3 of statement on CARO 2020. Tell me, according to clause dash under paragraph 3 of statement on CARO 2020, that will show to the paper checker that you have ensured that you are writing as per the bare CARO. Sir, every single word of CARO do we need to by heart? That is not humanly possible. In broken English also, if you write, it is fine, but the clause number should be proper, and try to be as near as possible, but don't take the pressure of by hearting every single word of this clause. All right. Now let us see what are the questions that they're asking. Remember, in entire CARO, if there is any negative remark, you have to give all the details possible with respect to that negative remark and the reasons for that negative remark. And in any of the clause, if management has not given you the data, then you will say that, okay, for this clause, management did not give me the data. All right, now everyone over here, when we go to the question bank and we solve the question, look at this. Fraud of came across payments made to various creditors, 75 lakhs. All right, fake invoices of 25 lakhs. So fraud reporting to board of directors audit committee because it is less than 1 crore. But under clause 11 also it will be reported. Under clause 11 of CARO 2020 also it will be reported. Right, in 11A, A for any fraud, B for Bharat central government, and C for city bajao whistleblower. All right. Next, yes. CA Ravi Patnaik is conducting audit of a company for which reporting requirements under CARO 2020 are applicable. He finds that cash credit facility amounting to rupees 4 crores were released to the company by a branch of a bank for meeting its working capital requirements. He finds that out of the above funds, rupees 1 crore have been used by the company for installing effluent treatment plan. Okay, it was for working capital requirements, so short-term loan being used for long-term purposes. Short-term loan, long-term purpose, clause 9D. Sir, in the answer, if you write only 9 and 9D, less chances they will deduct your marks. They will not give 0, but they will for sure deduct the marks. All right. That is why for the important, very sensitive clauses, it is important that you remember with subclause. Okay. Try to make some code, try to remember with subclause, but don't just ignore subclauses completely. All right. Then then you have to also give the case study and the conclusion, reporting obligation. Okay. Discuss the reporting requirements with respect to monies raised by the company by way of IPO, FPO, preference also 10A and 10B. Okay. I told you that these are all very sensitive clauses. Then this was a very big controversy in May 22. If you see, it is a private limited company, paid up capital reserves 1.2 crores. All right. So actually it is, if you actually see 1.2 crores means it is within the limit of small company. All right. And if you also see that company has incurred losses to the tune of rupees 25 lakhs. All right. Turnover of 850 lakhs. So if you actually focus on paid up capital and 850 lakhs turnover, all right, then it is within the limit of small company. But the entire angle of small company has been ignored because for small company, we need the details of the previous financial year, all right, and complete details are not available. So let me tell you that the entire angle of small company has been ignored. I request you, please don't bring the angle of small company. They have to give you clear hints of it being a small company, all right. Otherwise, you will ignore the angle of small company in case of a private limited company. And the moment you see over here, paid up capital, reserves and surplus, all right. So 1.2 crore minus 25 lakhs of this accumulated P&L, so it comes to 95 lakhs. turnover is 850 lakhs, which is within 10 crore. But if you see, the borrowings are 55 lakh each from a bank and financial institution. All right, so 55 lakh into 2 comes to 110 lakhs. So borrowing limit is getting violated, and therefore CARO 2020 will be applicable, because for CARO 2020, even if one limit is violated, it is applicable. But they have completely ignored the angle of small company. In law subject, please do whatever law professor has told you. But in my subject, please follow these instructions. This was a very big controversy in May 22 attempt also. All right. Then next, working capital limits. TA Limited, a biopharma company and global manufacturer of selected critical care medical products, has been sanctioned working capital limits of rupees 5.99 crore. Working capital limits of 5.99 crore, clause 2B. Working capital limits are exceeding 5 crores. All right. From a nationalized bank on the basis of security of current assets. During the year-end audit, the statutory auditor considers that inventory is material to the financial statement and performs audit procedures over the company's final inventory records to determine whether they are accurately reflect actual inventory count procedures. What are the reporting requirements under CARO 2020? So clause 2A, physical verification of inventory at reasonable interval by the management, and clause 2B about working capital limits. All right. Money Limited is a listed company engaged in the business of manufacturing. During the financial year 24-25, the company has given loans means clause 3, to the subsidiary and provided a corporate guarantee on behalf of a related party. State the reporting responsibilities of the auditor. So clause 3, all right, whatever are the loans, investments, guarantee, security, they should not be prejudicial. All right, and whatever loans have been given by the company, all right, that how much it is given to subsidiary, joint venture, associate, how much it is given to others, all that breakup is required. It's a very detailed clause, so we will try to write as much as we can. They have written whole clause 3. All right. Deposits accepted by the company, that is clause 5. That is company law knowledge. Then you can see clause 7, statutory dues. You can solve this. It is very easy. Don't worry about it. All right. I'm just giving you a briefing. Default in repayment of loans and borrowings. Again, clause 9. Full reporting they want over here. Full reporting they want over here. All right. Now see this May 24, they tried to question on clause 3, all right, that demand loans and without any defined repayment schedule loans given to promoters, directors, related parties, all right, 3F. They tried to question that. Okay. So clause 3 also we will add in our important list, but it is too lengthy. Okay. Then again this IPO, FPO, private placement of shares, clause 10A, 10B. All right, this is fully convertible debentures, means 10B. Read that properly. All right. I think that should be it. This is just exclusions of CARO. Chalo. So everyone over here, I request you that you should be very careful and you can solve these many questions. All right. But when it comes to CARO 2020, just don't by heart the clause headings. Please ensure that you are reading properly. So as promised to you up till now, we have covered entire chapter 8 audit report. All right, we first did 700 to 706, then we did small essays like 710, 600, 299, and now in the last 65 minutes or so we are done with our reporting requirements, section 143 subsection 1, 143 subsection 3, 143 subsection 12, and CARO 2020. All right, at this moment in the video, all right, you should pause for at least 5-10 minutes and then come back and finish the last chapter of standards. Yes, if you have reached up till here, don't quit now. Last chapter of standards which is pending, and that is chapter 3, risk assessment and internal control. Yes, we will now go to chapter 3, that is risk assessment and internal controls. Okay, but we will take a break of 10 minutes and then we will continue. We are continuing with chapter 3, risk assessment and internal control. All right. Now, when it comes to this chapter, most of the students have left this chapter in option, but trust me, the kind of questions that we are going to do, all right, you will feel very much covered. I cannot say we can cover 100% over here, but you will feel very much safe when it comes to risk assessment and internal control. All right. I will also keep my notes very handy. All right, for risk assessment and internal control. So I think all of us can nicely prepare it. Okay. Now, when it comes to this risk assessment and internal control, first of all, what is risk assessment procedure? Whereby SA 315, all right, this is SA 315, whereby auditor first All right, understands the entity and its environment. Auditor evaluates the accounting system and related internal control system. He does not test anything. He just understands and evaluates so that he can find out the risk of material misstatement. All right, what can go wrong, how much can go wrong and stuff. Now, I have divided this chapter into about 6 to 7 parts. As you can see over here, first is a very, very sensitive part for exam, that is components of audit risk. But at least few things, if you do, you will feel very much covered. 80-90% probability that the questions will be from what we are discussing right now. All right. But for at least for 3-4 minutes, all right, we should be clear about what we are discussing in the concept of audit risk. So I will take you to the notes. Listen to me. Audit risk is risk of expressing inappropriate opinion when financial statements are materially misstated. Just focus on this much. All right. So listen to me very carefully. The reality is that financial statements are materially misstated, and in the report you wrote that financial statements are free from material misstatement. All right. This is the fear in the mind of the auditor, that he may end up writing financial statements are free from materially misstated when actually the reality is that financial statements are materially misstated. If you look at the definition, risk of expressing inappropriate opinion when financial statements are materially misstated. All right, give me few minutes. Okay. But if you think the reverse, that reality is that financial statements are free from material misstatement, and in the report you are writing that financial statements are materially misstated, this is just not possible. All right, because if actually financial statements are free from material misstatement, then how come you are writing that financial statements are materially misstated? In that case, management will defend themselves, all right, because they are good and you're trying to say that they are bad. They will defend themselves. So this is not possible. All right. That is why don't put a full stop over here. Otherwise, if you put a full stop over here, you are talking about both the possibilities, which is wrong. You have to see the entire definition. Risk of expressing inappropriate opinion when financial statements are materially misstated. All right. Now listen to me. When will this happen? Just simple English. When will this happen? When will this happen? When auditor fails to detect material misstatement. When auditor fails to detect material misstatement, that is when this will happen. That is why it is a combination of two risks. One is risk of material misstatement, that means financial statements are materially misstated, and detection risk, that means auditor fails. All right, relax. Okay. Now, when will the financial statements be materially misstated? All right, when the transaction balances and disclosures, some error or fraud happens, and when the company's internal control fails. So let us say one of my employee committed a misappropriation of 3 crores and my system could not detect it. All right. So then financial statements will be materially misstated. So that is why risk of material misstatement is a combination of two risks. Now, this probability of error or fraud in the transactions, balances and disclosures. Any transaction balance or disclosure, all right, is exposed to error or fraud. Salary, clerical error, inventory, overvaluation, investment, overvaluation, contingent liabilities not disclosed. Any financial item, every single financial item is exposed to some kind of error or fraud. That risk is unavoidable. So that is inherent risk, unavoidable risk. However, in order to reduce this, management implements internal control. So if the control fails, all right, so that is your control risk. So everyone over here, inherent risk multiplied by control risk. When both the things happen in combination, then there is a risk of material misstatement. I am explaining the logic. If you're not able to understand the logic right now, this is the moment that you buy heart, please. All right, so inherent risk multiplied by control risk. All right, will lead to risk of material misstatement. All right, and risk of material misstatement. When auditor fails, so risk of material misstatement into detection risk will lead to audit risk. Okay, will lead to audit risk. Yes. Okay. So now listen over here. Very logical thing. DMART employee fails. DMART internal control system fails. And DMART auditor also fails. All right. Then auditor will end up expressing wrong opinion. Therefore, inherent risk multiplied by control risk multiplied by detection risk is equal to audit risk. Please by heart this now. I am explaining the logic, but there are limitations in this video. All right. So inherent risk multiplied by control risk multiplied by detection risk is equal to audit risk. Okay. Now listen to me. Auditor wants to keep audit risk as low as possible. So tell me, if that is why auditor first performs risk assessment procedure. Only then auditor moves ahead. Na? So if risk of material misstatement is high, when you are understanding the entity and its environment and stuff, you came to know that risk of material misstatement is high. Okay. Then obviously you will become more alert and you will perform more procedures. You will increase the nature, timing and extent of your procedures. Yes, sir. So therefore, what will happen that you will reduce the chance of your failure. So detection risk will go down, and therefore ultimately your audit risk will also go down. So risk of material misstatement and detection risk, they have an inverse relationship. Risk of material misstatement and detection risk, they have an inverse relationship. All right. Logically, I hope you have understood this much. Now I will straight away go to the questions. XYZ Limited is engaged in the business and running several stores, dealing in variety of items such as ready-made garments for all seasons, shoes, gifts items, watches, etc. There are security tags on each and every item. Moreover, inventory records are physically verified on monthly basis. Discuss the types of inherent risk, control risk, and detection risk. Inherent risk, just think what can go wrong. In inherent risk, don't think anything else. Inherent risk means what can go wrong if there are no internal control system. Can I say employees can steal, customers can steal, there can be misappropriation? Yes or no, sir? Yes, that is inherent risk. Okay. Now, control risk, where the controls can fail. See, they have security tags, but what if someone removes the security tags? Plus, inventory records are physically verified on monthly basis. It is a very less frequency for such kind of a store. All right. So it is a very less frequency because there are small items. So reconciliation, physical verification needs to happen on more frequent basis. All right. That is your control risk. Okay. Then detection risk, auditor may fail. Remember, if you have attended my session, sampling and non-sampling risk, detection risk, listen, detection risk is a combination of two risks, sampling risk and non-sampling risk. Sampling risk, what if your sample is wrong? So you selected wrong sample only as an auditor. Out of 100 transactions, you selected 10 useless transactions in your sample. All right. Then your sample is wrong. That is sampling risk. But let us say your sample is proper, but you did not apply proper audit procedures. That is non-sampling risk. All right. So everyone, detection risk is that auditor may miss out on the transactions, auditor may select wrong sample, auditor may apply wrong procedure. All right, that is your detection risk. Okay. So practically, we just have to tell them the inherent risk, control risk, and detection risk over here. If such a practical question is asked, I don't think you will struggle. Next, Wear and Tear Private Limited is a startup engaged in providing holistic solutions to the problem of paddy stubble burning, mainly catering to the needs of farmer of northwestern India. Due to importance given by government to this issue, companies have entered in the market in the past few years. Many of these companies have not been successful and have gone bust. As an auditor of the company, can you spot the component of ROMM when they say component of ROMM? So ROMM is combination of inherent risk and control risk. Control risk will come into picture only when the internal control system fails. If you apply even 2% of your brain, tell me, is the internal control system failing over here? No, the question is not dealing with internal control only. All right. The question is clearly dealing with the risk involved due to the entity's business environment. What can go wrong? So it is inherent risk. A company has devised a control that its inventory of perishable goods is stored in appropriate conditions in a controlled environment to prevent any damages to the inventory. Responsibility is fixed on two persons to monitor the environment using sensors and to report on deviations. Identify the component of ROMM. So again, ROMM is equal to inherent risk into control risk. Now, is this talking about the risk due to the business or something? No, it is purely talking about internal control system. So the controls may fail. What if the device is not functioning? What if the device is functioning but the persons who are monitoring it are not paying attention? All right, so control may fail. So that is your control risk. A partnership firm of chartered accountants HT and Associates was appointed to audit the books of accounts of Wind and Ice Limited for financial year 2021. There was a risk that HT and associates would give an inappropriate audit opinion if the financial statements are materially misstated. Risk of expressing inappropriate opinion when financial statements are materially misstated. All right, this is which risk? Audit risk. Jojo Limited is planning to list on Bombay Stock Exchange next year. As an auditor of Jojo Limited, identify any one reason of increased audit risk due to listing of the company. Tell me if the company is planning to list. All right. This shows that the company may go for overvaluation, may try to overstate their revenues, understate the expenses, overstate the amount of assets, understate the amount of liabilities so that they can get a favorable listing price. So risk of material misstatement increases because of this, and therefore ultimately, all right, if auditor does not pay attention to this, then even audit risk will increase because there is a risk of entire financial statements being materially misstated. Satranga Foods Private Limited is engaged in manufacturing of pickles. The auditors of the company have planned audit procedures in respect of recognition of revenue of the company. Despite that, there is a possibility that misstatements in revenue recognition are not identified by the planned audit procedures. So tell me, here they are talking about auditor's failure. All right, the risk that the audit procedures may fail to detect misstatements. That means they are talking about which risk? Detection risk. They want you to identify this risk and explain the risk in detail. Now, as I told you, detection risk can be either due to sampling risk or it can be due to non-sampling risk. All right. Sampling risk is that auditors' conclusions based on a sample may be different from the conclusion if the entire population was subjected to the same procedure. Basically, sample is not representative of the population, so your sample selection is not proper. Non-sampling risk is the risk that auditor reaches a wrong conclusion for any reason not related to sampling risk. All right. Because of that, it could lead to detection risk. Next, one of the team members of Auditors of Highly Capable Limited was of the view that materiality and audit risk are only considered at planning stage. See, listen to me. Materiality and audit risk are such concepts which we need to consider throughout the audit, at planning stage, testing stage, execution stage, at all the stages. All right. So that is your, these are the questions on audit risk. Now I can understand you may not know in technical English what is inherent risk, control risk, and risk of material misstatement. That much risk you can take rather than just being exposed, all right, to completely leaving chapter 3 in option. But just one line control risk, that control fails to PDC, prevent, detect, and correct misstatement. Risk of material misstatement, that financial statements could be materially misstated. It is because of inherent risk and control risk. Detection risk, that audit procedures may fail to detect the misstatements. Frankly speaking, control risk, ROMM, and detection risk have very simple definitions. Only inherent risk has a little bit of tough definition. So inherent risk means what can go wrong if there are no internal controls. All right, that is simple English. But inherent risk over here means, all right, in technical English, susceptibility. Susceptibility means you are exposed to. Like students, as of now, you're looking at video, you are susceptible to sleep. All right. Similarly, salary, clerical error, inventory, overvaluation. All right. So susceptibility of an assertion. Wait. To a misstatement before consideration of related controls. If you can remember this much, susceptibility of an assertion to a misstatement before consideration of any related controls. All right. So this much will help you. Acha, what is not included in audit risk? What is not included in audit risk? My dear friends, reality is that financial statements are free from material misstatement, and in report you write that financial statements are materially misstated. This can be done only if you are on drugs. Right? So obviously this combination is not included in the concept of audit risk. Look at this. Audit risk does not include the risk that auditor might express an opinion that financial statements are materially misstated when they are not. This risk is ordinarily insignificant. Financial statements are materially misstated when they are not. Okay. And audit risk is a technical term related to audit procedure. Audit risk does not mean auditor's business risk. You know, what if client does not pay and stuff. So it is not your normal English meaning of risk involved in audit business. No, that is not the audit risk. All right. So at least this much will really help you to cover your audit risk. All right. Now there are some specific questions on risk assessment procedure. See, when it comes to risk assessment procedure, all right, there is one very general question which has been very repeatedly asked. All right. So look at this, everyone over here. For the purpose of identifying and assessing ROMM, auditor shall identify risk throughout the process of obtaining an understanding of the entity and its environment. Explain in detail. Okay. Steps to be taken. Okay. specific activities for identifying and assessing ROMM. So if the question somehow deals with how to identify and assess ROMM, if you see three different English wordings used, but at the end all three dealing with how to identify and assess ROMM. All right. So if the question deals with this, then in that case, remember, for identifying the risk involved, first I should understand the entity's environment. I should evaluate the entity's internal control system. Then I will come to know what is risk of material misstatement, what can go wrong, how much can go wrong, where there are chances of error and fraud. All right, so few basic words: understanding the entity and its environment, including relevant controls. All right. Then I can find out the risk of material misstatement. But now I will explain two more points. Okay, very simple. When you are analyzing risk of material misstatement, there are two levels. One is risk of material misstatement in overall financial statement level, where there is a possibility that many transactions can go wrong. All right. Sir, for example, we just did that question of Jojo Limited. In Jojo Limited, they were planning to list on Bombay Stock Exchange. Because they are planning to list on Bombay Stock Exchange, there is a risk of material misstatement at overall FS level. So they are saying that, hello, check whether the risk relates to more pervasive, means major part, to the FS level. All right. So first they are explaining normal risk assessment procedure. Then they are explaining risk of material misstatement at overall financial statement level. All right. Then listen to me. There is something called as risk of material misstatement in assertion level. Let us say there are just manual records over inventory. If only this much is given in the question, then this shows that there is a risk of misappropriation in the inventory. All right. So that means what can go wrong at the assertion level? ROMM at assertion level. So understanding the entity and its environment, evaluating the accounting system and relevant controls, identifying the ROMM at overall FS level and ROMM at assertion level. Yes, sir. Yes, sir. Okay. Next, risk of material misstatement may be greater for significant non-routine transactions. Okay. Risk of material misstatement may be greater for significant judgmental matters. Okay. They want you to explain this in detail. Very simple. So two concepts that they are covering: risk of material misstatement in non-routine transactions, and risk of material misstatement in judgmental matters, estimates and stuff. Yes, in both of these are very unusual things and they may have high risk. All right. First, let me explain for non-routine transactions. For non-routine transactions, imagine one transaction, example, amalgamation transaction. This does not happen every day. All right. Now, in this such kind of transactions, there is a possibility of M2C. All right. What is this? There can be management intervention. The top management will be involved. We are taking over that company. Ensure that it looks like if it's a good company that we have taken over. Okay. Okay. Management intervention. Or there can be manual intervention because these are non-routine transactions. They cannot have automated system, manual entries and stuff. All right. And obviously there can be C for complex calculations for such kind of transactions. And if you want to write full all the points, then MC nature. The nature of such transactions is such that it is very difficult to implement an automated system. All right. Then judgmental matters. Whenever you talk about estimates, provision for doubtful debts, depreciation, impairment, provisions, different types of provisions. All right. Then in that case, it is subject to differing interpretation. So D for differing interpretation. My interpretation, your interpretation can be different. All right. Then it can be very subjective. All right. So it can be very subjective. First is interpretation issue, and second is the subjectivity element of assumptions and stuff involved in that. So because of DS, all right, there is a possibility of high risk of material misstatement in judgmental matters. Okay. In exercising the judgment as to which risk are significant risk. All right, significant risk. Okay, listen to me. Very easy. If they ask you to give me the factors of significant risk. All right, factors for significant risk. Then again, significant risk, explain the factors. So how do we decide that which risks are significant risk? All right, that I will give you a simple code word. We decide based upon fraud Oscar, that which risks are significant risk. Focus over here. If there is a risk of fraud, it is very significant risk. Now I will give you Oscar. O for outside the normal course of business, like manufacturing entity giving loans. Listen, if you are seeing the full lecture, Then just before this chapter, I did audit report chapter. You remember key audit matters, significant risk. All right. In that also, first point was significant risk. So do you understand that these fraud Oscar matters? All right. They can be key audit matters also in a listed entity. Second, if I am the external auditor, you are the internal auditor, I cannot give you the work with respect to significant risk. So these things I will not give to the internal auditor. I will not rely upon the work of internal auditor. Just giving you practical aspect of it, that why we are learning this. So fraud Oscar, O for outside the normal course of business, S for subjectivity, wherever there is high subjectivity involved. All right. Wherever there is high complexity involved. Then if there are recent accounting developments, like let us say new Ind AS or new framework, new accounts framework, or economic developments, income tax act changes, GST changes, all right. And then obviously significant transactions with related parties. So fraud Oscar, they are called as significant risk. In other words, they are also called as areas requiring special audit considerations. They are also called as areas requiring special audit considerations. All right. See, these are points for risk of material misstatement. Now, risk assessment procedure techniques. All right. I'll show you one very basic chart first for risk assessment procedure techniques. For risk assessment procedure techniques. All right. Remember one code word IAO, IAO, IAO. All right. There are three techniques for risk assessment procedure. One is I for inquiries, A for analytical procedures, and O for observation. I for inquiries. If I want to conduct risk assessment procedure, I will have to conduct inquiries of management and others within the entity. Example of others, just tell them Tamil. We will ask questions to TCWG. What kind of questions we will ask? How TCWG is supervising the management. All right. Then A for accounts department. We will ask accounts department about how they are processing some very material transactions. All right. Who is responsible for transaction processing and stuff. M for marketing department will try to understand their marketing and sales strategies so that we can understand the impact of that on the financial statements. I for internal auditor. We will conduct inquiries of internal auditor who will help us to understand whether there is any problem with respect to their internal control system. All right. And L for legal counsel, whether there are litigation or claims, all right, through which I can understand the risk of material misstatement in the financial statements. All right. Then listen to me. A for analytical procedures. I have said this in my revision of SA 520. Also, I am repeating. Analytical procedures, ratios, comparisons, and trend analysis, all right, are used at planning stage, are used at testing stage, and are used at completion stages. When you use the technique of ratio analysis for testing and completion, it is SA 520, not SA 315. But I solved one question in SA 520 where one of the auditor was using risk assessment, was using analytical procedure at the planning stage, starting stage of the audit for risk assessment. All right. So when you use analytical procedure for planning stage, all right, then it is called as using analytical procedure as risk assessment. This is not SA 520, this is SA 315. So if you use analytical procedures like trend analysis of past profits, I do a trend analysis of last 3-4 years. I come to know, oh my God, all right, there is a very unusual trend. So I may find out some unusual transactions, events, which can have an impact on my audit. But you know what? When I'm performing analytical procedures, I have explained this in SA 520 also. I use financial as well as non-financial information. Salary is financial information. Total number of employees is non-financial information. Sales is financial information. Number of units sold is non-financial information. Both the information will help us. But you know what? The biggest problem of analytical procedure is that when you are doing trend analysis, you are just doing at a very macro level, at an aggregated level. Here is the ground reality, and you are performing trend analysis. All right. Now, if I do a trend analysis of last 3 years, I see that, oh my God, all of a sudden sales dropped. And it was because of Strait of Hormuz, yaar, that there was some issue with respect to supply chain. So what I'm trying to tell you is, all right, that when you are using analytical procedures at an aggregated level, it can only give you an indication about ROMM. Analytical procedures plus other procedures can give you proper information about ROMM. Otherwise, analytical procedures can give you only an indication about ROMM, not the exact analysis. You have to explain this. Okay. Wait, I will come to the last technique later on. First, focus over here, the kind of questions that are there. Inquiries of management. Give 3 examples. This was old course material. New course, the same question was asked. All right. in this manner, whereby they gave you the name of the person and you are supposed to tell what kind of questions you will ask. That is why I just did not write the full form of Tamil. I told you also about what kind of questions we will ask. Then if you see, this is your analytical procedure being performed. All right. Through this, you can easily understand what are the different risks over here. All right. Then look at this. This is also analytical procedure. On perusing the financial statements of Jojo Limited put up for audit, it is observed by the auditor that current ratio has improved from 1 is to 20 is to 1 to 1.75 is to 1. Jojo Limited is planning listing. All right. And Jojo Limited auditor saw that, oh my God, from last year to this year, all of a sudden current asset ratio has improved. All right, current assets have increased. Identify what kind of risk assessment procedure being performed by the auditor. Do you think it has any relation with the listing of the company? The company is going to the company is planning listing, so company will go mostly for overvaluation. So there is a risk of material misstatement over there. And the trend analysis, that is the analytical procedures used as risk assessment procedures, are confirming this risk over here. All right. Okay. So these kind of practical things. Now this is a very theory question. How analytical procedures can be performed as risk assessment. First, you will explain the meaning of analytical procedure, which I have explained earlier also. Then you will tell them that analytical procedure can be used at the planning stage for risk assessment to help identify existence of unusual transactions events. Analytical procedures will use financial, non-financial data both. Analytical procedures can give you a broad initial indication of ROMM because they use data aggregated at a high level. When analytical procedures are supported by other procedures, all right, then it will give you proper analysis of risk of material misstatement. All right. So these are the different techniques. I will explain the last technique also. The last technique is observation and inspection. We don't do a lot of inspection of invoices and stuff during risk assessment, but yes, we will go for observation and inspection of drop. All right. We will see the documents, basic MOA, AOA, such kind of documents. We will see internal reports prepared by the management because we want to understand more and more about the entity. We will visit and just try to observe their operations, and we will also visit their plant and premises. All right. So everyone over here, we are done with risk assessment procedure techniques. All right. See, it's easy going. At least you should know something. All right. What if they give you a surprise of chapter 3, 12 marks or so? We should be ready for that. Now, there are some concepts of internal control which I obviously want you to know. Not all the concepts, but few concepts very, 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 very sensitive. All right. Everyone over here. First of all, for the internal control answers, you should know the definition of internal control. Internal control, normal English, yes, it is a process which is implemented by the management, yes, to prevent, detect fraud and error, yeah, all that is fine. But internal control system, we say that it is a process which is designed, implemented and maintained by management and TCWG so that they can give you trust, all right, to provide reasonable assurance that we are doing our job about achievement of entities objectives in regards to FOLA. Management wants you to trust their financial reporting. Management wants you to trust their financial reporting. Management wants you to trust their efficiency and effectiveness of operations. Management wants you to trust compliance with that don't worry, we are complying with laws and regulations. Management itself also wants to trust that their assets are safeguarded. Okay. So any system which is implemented to provide trust on FOLA, all right, that is nothing but what? Internal control system. Okay. All right. Then we are doing the first question only, don't worry. They can ask you such a question, objective, that is purpose of internal control with respect to accounts, that as a CEO, CFO, as management, why do we implement system over the accounts? Because any business owner, when it comes to their accounts, would like to Tata. So Tata, yes, if I am an owner of a business, I want my transactions, all right, to be properly authorized. I want my assets to be safeguarded. I want my transactions to be properly recorded, timely recorded. I want my assets to tally with the existing assets. I don't want unauthorized use of my assets. All right. Books of accounts and actual assets should tally. So you have to write 4 points. That is Tata. All right. So everyone over here, if you see, they are talking about internal controls over safeguarding of assets and against unauthorized use. Disposition may include internal controls relating to both financial reporting and operations. Explain stating clearly the objectives of internal control. The moment they say objectives of internal control, you say Tata. All right. And there was one specific point on assets. You don't need to get into too much detail for that. See, if there is an inventory, then there are financial controls also, plus there are physical operational controls also. All right. Auditor is more worried about the financial reporting controls. Okay. Auditor is not going to check the fire extinguisher everywhere. Next, the division of internal control into 5 components provides a useful framework for auditors to consider how different aspects of an entity's internal control may affect audit. Mention those components of internal control. Very, very sensitive question. Components of internal control, one of their favorites. All of this is with respect to components of internal control only. So please understand, hear me out once, please. All right. When I say components of internal control, I have changed the code word, crick monitor, 1 minute. Okay. When I say components of internal control, means different parts of the system which come together and makes the internal control system. When I say components of human body, means hands, legs and stuff. All right. So components means different parts of internal control system. Now there are total 5 components, 1, 2, 3, 4, 5, and there are practical questions on it. So don't mess up. All right. Crick monitor. C for control environment. Control environment is nothing but the work culture which is set up by the management and DCWG. That is a basic foundation of the whole system. Then R for whether entity itself has any kind of risk assessment process or not. That means entity should be able to find out the risk of material misstatement, that where things can go wrong. Entity should have some kind of risk assessment procedure. All right. Then their accounting system, that how they have implemented their information system. That means how the transactions are initiated, recorded, and then finally reported in the financial statements. All right. Information system relevant to financial reporting. Tell me, information system relevant to financial reporting. So C for control environment, R for risk assessment process of the entity, I for information system relevant to financial reporting. All right. Then C for control activities. Control activities are nothing but different techniques used by the management for implementing internal control, like dividing the duties, authorization, and all of that. All right. And at the end, someone from the company, CEO, CFO, someone should monitor the entire internal control system. So they should have some monitoring techniques also. So crick monitor, please ensure that you maintain the sequence also in the answer. Crick monitor, C for control environment, R for risk assessment process of the entity, I for information system relevant to financial reporting, C for control activities, and then M for monitoring. All right. Now everyone over here, crick monitor, crick monitor, crick monitor. I will just solve the questions which they have asked. Okay. Z Limited is a manufacturer of ready-made garments. During the year 25-26, they have opened 2 new branches and there is a substantial increase in their sales. The management has appointed CAR to review the internal control system as they feel that there are lapses in control environment. What is included in control environment and what will the auditor evaluate in order to obtain an understanding of the control environment? Oh, so everyone over here, listen to me. When it comes to control environment, as you can see this page, there are total 1, 2, 3 questions when it comes to control environment. First, what is included in control environment? It is nothing but work culture which is set up by management and DCWG. All right. So it is nothing but attitude, action, awareness, approach of management and DCWG. All right. That how they are functioning. It is nothing but governance and management functions. All right. It is the control environment will set the tone of organization. Culture of honesty, ethical behavior. Try to write all Satyug English over there. Look at this. Culture of honesty, ethical behavior, governance, management function, attitude, awareness, action. All right. Control environment will set the tone of organization. So at least now when you're seeing this lecture, you know, boss, you are not getting 0 in this chapter, but we will try to score maximum. All right. But this chapter has a risk of 0. First, we need to remove that. All right. Don't worry. There are no ghosts in this chapter. Okay. So that is one question of control environment. Second question, how many things will come together to make a control environment? Elements of control environment. All right, you get this. Human philosophy is to commit, communicate, participate, and organize. This is my code word. How do you judge work culture of an entity? By their human resource policies. If they're taking care of their employees, then good. Otherwise, it can be a toxic culture. All right. Then also by management's philosophy and operating style. There is no better example than Honorable Ratan Tata sir. I get goosebumps when I think about him. All right. So philosophy and operating style, that also shows their work culture. All right. Then commitment to competence. They should be committed to competence. All right. And not like Air India pilots. Then they should communicate ethical they should communicate ethical values to their employees and get it. They should also enforce ethical values. Then the highest level TCWG should also involved in some of the activities. All right. And then there's structure, organization structure, who is reporting to whom, which you study in your SM subject. All right, middle level, lower level, high level, whatever level. All right, that should be very clear and there should be no confusion in that. So this creates a very good work culture in the entity. All right. Now, why I solved this? Focus over here. Why I solved this? Focus over here. Look at this. CS Smriti is the auditor of a company. As part of audit, she is going through company policies and practices regarding employee recruitment, training, orientation, and related matters. She seems to be very much interested in finding out whether company hires best candidates or not. Identify what she is trying to do, how it will be useful. So if the auditor is trying to understand the human resource policies and procedures, all right, that means auditor is trying to understand the control environment of the company. I hope, am I clear with this? Yes, 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 sir. Yes, sir. Okay. So these are the kind of questions that you see on control environment. Look at this, one more question. Spare Parts Limited received an input from the internal auditors that the internal controls implemented by the company appear to be reasonable, but not so strong that any fraudulent activity can be prevented or timely detected by such controls. Accordingly, a qualified person should head the internal control department. CA Raj has been appointed as an internal control head of the company. His scope of work includes development of internal controls in various department areas of the company. On his joining, he studied various verticals and after identifying the important areas, implemented strong controls in those areas. In his meeting with senior management and statutory auditors, he assured that satisfactory control environment exists and fraud cannot happen. Now listen to me. Just because there is a satisfactory control environment, it is just a work culture. It is an indirect control. It is an intangible thing. Right? Just because there is a satisfactory work culture, that does not mean that fraud cannot happen. All right. Even when Honorable Ratan Tata was leading the Tata Enterprises, all right, even though being the most gem of a person, still some employees here and there were committing fraud. So, whether existence of satisfactory control environment can be considered as an absolute stoppage to deterrent to fraud? No. So, if now see what kind of answer you will write. The existence of a satisfactory control environment for sure can be a positive factor. It can reduce the risk of material misstatement. It can reduce the risk of fraud, but it cannot act as an absolute deterrent of fraud. Because at the end of the day, control environment is an indirect control. All right. A control environment itself cannot prevent, detect, or correct misstatement. But yes, if there is a deficiency in control environment, if control environment is not proper, then for sure it can increase the risk of fraud. But even though if it is satisfactory, it cannot act as an absolute deterrent to fraud. All right. So there is a question clearly on that also. Explain what understanding an auditor should obtain regarding an entity's risk assessment process. Hello, Creek monitor, C for control environment, done. All right. R for risk assessment process. If I want to know whether the entity that I'm auditing, is actually having some kind of risk assessment or not, I should understand that, hello, hey CFO, hey CFO, hey CFO. All right. Do you have any process for identifying the business risk? All right. What if there are cash transactions not reported and stuff, business risk? All right. Which can affect the financial statements. Okay. CFO, do you know how big that risk is? Have you thought about it? Estimating the significance of that risk? CFO, all right. Have you done the probability analysis of how many times this error and fraud can happen? Hey, CFO, don't sleep. All right. Have you decided about actions to address those risks? This has to be written in a sequence only. Now, what is my biggest concern? Let me tell you. I feel that they may ask a question on entities risk assessment process, all right? But I feel that students will end up writing auditor's risk assessment procedure, understanding the entity and its environment, evaluating the accounting system, internal control. No, 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 no. Entities risk assessment process, whether entity has a process for identifying business risk, estimating the significance of the risk, assessing the likelihood, and deciding about the action. All right. So entities risk assessment process forms the basis for the risk to be managed. If that process is appropriate, it will help the auditor. If it is not, then it shows an increased risk of material misstatement. One more time, identifying the risk, estimating the significance of the risk, assessing about the likelihood of the occurrence, and deciding about the actions. Do not create the code word idea. IDEA. No, deciding about actions has to be at the end. So if you want to create the code word idea, then identifying risk, then you say determining significance, all right? Then estimating likelihood. I don't mind that. All right. Then deciding about, then actions to be decided. Okay. But it has to be identify business risk, significance, likelihood, and actions. Yes, sir. Yes, sir. Yes, sir. So isla you can create. All right. Sila bila bhi nahi, asli basli bhi nahi, और लीजा बीजा भी नहीं, isla. The auditor shall obtain an understanding of information system relevant to financial reporting. Hello, click monitor, C done, R done, now I. Information system relevant to financial reporting. If I want to understand their accounting system, all right, I will give you a very simple code word. Write down SP records capturing of finance journalist. SP records capturing of finance journalist. All right. If I want to actually understand their accounting system, then I need to see what are the significant transactions over there. S. Then I need to see that how they are recording those transactions. In a coaching class company, admission is very significant. Now, how they are recording those transactions. So P for procedures by which those transactions are initiated, recorded, processed, corrected, and reported. Then records. I want to see what kind of accounting records they are generating at each stage. I want to see that whether they have a system which captures the events and conditions which are important, all right, like changes in law and stuff, whether that system is able to capture. SP records capturing of finance, all right. I want to see that how do they finalize their financial reporting process of the financial statements, how do they finally prepare their balance sheet, PNL and stuff, and what are the controls over their journal entries, so journalist. So SP records capturing of finance journalist, all right. This you will write when they are questioning about information system relevant to financial reporting. I hope I have made myself very clear. Yes. All right. Wait. We are still in the component. So C done, R done, I done. All right. Now one more C. That is control activities. Control activities, one of their favorite for MCQs. Control activities are nothing but different techniques used by the management to implement internal control. You go to any organization, you will see this authorized IPS to perform. You will see that management at some stage will set some kind of authorization. Management at some stage will come up with information processing, or like that how the information will be processed. Management at some stage will implement physical controls, ID card, all right. Then segregation of duties, dividing the duties in a manner that work performed by one person automatically checked by another person, all right. Then management will also go for performance reviews. Sir, what is performance reviews? Whether the targets have been achieved or not. Listen to me very carefully. There is one more point: monitoring and performance reviews are different, all right. Let us say I'm talking about performance reviews of Chroma. This salesperson was given X target. Whether he has achieved that target or not, performance review. But in achieving the target, whether he has followed our system or not, let me check whether he has followed my system or not. That after customer buys phone, you have to show the phone to him. That is monitoring. All right. So performance review is purely based at whether the targets have been achieved or not. Monitoring is whether my system is being followed or not. All right. So everyone over here, you see why I'm teaching this. During the audit of the same company, CA Smriti is keen to find out whether there exists a proper system of segregation of duties. She wants to be sure that the person responsible for recording a transaction is different from the person authorizing it. Discuss what she is trying to do and how its understanding is very significant to her as an auditor. If she is trying to understand segregation of duties, that means she is trying to understand the control activities. Because if the control activities are properly implemented by the management, it will increase the confidence on the internal records of the entity, and the chances of error and fraud will be less. Look at this. Next, auditor shall obtain an understanding of auditor shall obtain an understanding of major activities that entity uses to monitor. For this also, I'll give you very simple code word. Listen to me. If I am the CEO or CFO of the company, all right, and I want to ensure that my entire system is being properly followed, I want to monitor that. Then there are three techniques which I can use. Look at this code word. Separately evaluate X. Separately evaluate X on ongoing basis. Separately evaluate X on ongoing basis. Sir, what is this code word? First of all, what I can do is I'm the CFO. I will set up a separate department only for monitoring. All right. Internal audit department. Okay. So internal auditors can act for separate evaluation. They can act for separate evaluation. All right. They can be my separate evaluation. Then X, what I can do is I can directly talk to external parties. Hello, student, you took admission, na? You got free receipt today? You were given the bill for this? All right. Directly talk to external parties, communication with external parties. Then what I can do is on daily basis in normal recurring activities, I can include monitoring. That X will perform, Y will check, Y if X has not done properly, report to Z, Z you report to me. All right. Ongoing activities are built into normal recurring activities. All right. So separately evaluate X on ongoing basis. Everyone over here, look at this. Separately evaluate X on ongoing basis. You will see over here. All right. In case of small entities, the owner himself can be the manager. All right. And he can effectively exercise monitoring over there. All right. But what is the main benefit of monitoring? That management can always check the RAW of the system. Sir, what is RAW of the system? Relevance, adequacy, operating effectiveness of the system. All right. That management can check on its own. That is the best benefit of monitoring. So if you see entire components of internal control, click monitor, there are questions on bloody every single component. All right. CA Amit is the auditor of LMN Limited. While conducting audit, he wanted to analyze the different components of internal control of the company, identify and explain which component of internal control he is trying to understand in the following two cases. Whether controls in LMN Limited are operating as intended, they are modified as appropriate for changes in conditions. RAW. If I am checking the RAW of the controls, that whether controls are operating properly and whether changes have been made, that means I am talking about monitoring. I am talking about monitoring. All right. Whether there exists proper segregation of duties, that means I'm talking about control activities. Proper segregation of duties, I'm talking about control activities. All right. So see, so many questions on components of internal control. This I've selected from more questions. All right. So please understand, this is very sensitive. All right. Now next, no internal control system is foolproof, even though it can be the system of Reliance Adani. No internal control system is foolproof. There are always some limitations of internal control. All right. There are always such limitations of internal control. And what are those limitations? Look at this, everyone over here. I will give you one code word for this. Limitations of internal control. High Court judge likes samosa. High, this is just to remember first letter. Huh? All right. High for human error. H for human error. All right. There is always a possibility of human error which can cause system breakdown. What we have been discussing this since long, collusion, secret understanding between employees, all right, and third party, they can always defeat the system. Then there can always be judgmental errors by the management. Tell me everyone, management is the one which implements the internal control system. So management can always, trust someone more than what was required. So there can be judgmental errors by the management. All right. Then there can be lack of understanding. Today if I implement, all right, a completely new system, all right, and my employees don't understand how to operate the system, then it will be of no use. And in case of small entities, the biggest problem is that the owner himself is the manager. So yes, it helps him to monitor, it helps him to implement things faster. But then what if owner himself is fraudulent? Plus small entities have fewer resources. You don't have a lot of opportunity to divide the duties. All right. So that is the problem. Okay. So we can, if you see all the points, you will see over here in the answer. Human judgment, lack of understanding, collusion amongst employees, judgment by the management, limitation in case of small entities. All right. Then now listen to me. These were the concepts of very sensitive concepts of internal control which were required. We can talk about more concepts, but then this much is okay. All right. Now auditor needs to understand the internal control system. All right. Now there are two questions with respect to understanding of internal control. One is how to understand internal control. All right. And second one is benefits of understanding internal control. All right. Look at this. Explain the meaning of internal control. Meaning FOLA. Right. The process design implemented and maintained by the management to provide reasonable assurance on FOLA. Benefits of understanding the internal control. Look at this. It will help me to identify the risk of material misstatement. It will help me to design my nature, time, extent of procedures. It will help me to find out the error, chances of errors and fraud. So you talk a little bit like that, all right, logically about benefits of understanding the internal control system. Okay. Next, if you see over here, now there are some questions on how to understand internal control system. If you see, there is one separate topic in the module of evaluation of internal controls, different techniques. Yes, I am very proud of you that you are still in this video. All right, come on, chapter 3, you will conquer it. You will conquer it. Evaluation of internal control, different techniques. All right. So everyone over here, evaluation of internal control, different techniques. Yeah. So there are total 4 techniques, very much favorite of the institute for MCQs and stuff. Narrative record. Narrative record is nothing but description. Hey, listen, I am understanding the system. Okay? Yes, tell me. Okay. And I am writing it in paragraph form. That is narrative record. But tell me, such kind of narrative records will be useful only in small companies and unorganized system. If there is a huge big company which has n number of software systems and stuff, then narrative record is not useful over there. It is difficult to record it and understand that. No? All right. Checklist is nothing but an internal document for the audit team. All right. Checklist is something which is only broad areas are covered in point form. It can also be in question form, but only broad areas are covered, and it is only for an internal reminder to the audit team for the task that they are supposed to do after understanding the internal control. All right. Questionnaire is on one single area. There will be n number of questions, series of questions that auditor will frame, like who prepares the purchase order, how the purchase order is prepared. But listen to me. Who prepares the purchase order, how the purchase order is prepared? You will get 0 if you write such questions. Because in a questionnaire, it is very important that the answer should be in the form of yes or no. Now listen to me. Is there a designated person for preparing purchase order? Yes. Do you have a software for purchase order? Yes. Is there a person defined to use that software? Yes. All right. Do you have a purchase order policy? Yes. All right. This is internal control questionnaire. So look at this series of questions concerning internal control. And the biggest difference between checklist and internal control questionnaire is that checklist covers only broad areas, which is for internal reminder to the audit team. Whereas internal control questionnaire will have n number of questions on a particular area, and it is emailed to the client, and client will fill it up and give it to us. Oh, series of questions, most widely used technique. Questions are framed for each stage. Answer can be in yes, no, not applicable. All right. It is issued to the client who should get it filled up from their employees. Flowchart is just a graphic presentation, diagrammatic presentation. All right. So best presentation in flowchart. Most widely used technique, questionnaire. Small company, unorganized system, narrative records. All right. There it is used. And a document which is used for internal purpose of the audit team, that is checklist. Are you clear with this? Yes, sir. Yes, sir. Okay. Look at this, everyone over here. In this question, all right, small company and yeah, small company systems are unorganized. All right, description of control. Description means paragraph, narrative record. All right. In order to evaluate the control of your and my limited, a team member of the auditors used a method according to which number of questions relating to internal control were required to be answered. After obtaining the answer, there was a discussion relating to those answers between the team members and the employees for a clear understanding. It is internal control questionnaire. Internal control questionnaire is a comprehensive series of questions concerning internal control. A company is engaged in the business of manufacturing of chemicals. It has 2 plant locations in city A and 1 plant location in city B. All right. Involving huge value of assets. Building at 3 locations is owned by the company. The company earns handsome profits and does not want to suffer losses due to the business interruptions. It has a dedicated department for looking after insurance matters. As an auditor, prepare an internal control questionnaire concerning this department for obtaining staff responses. Okay, so it is internal control questionnaire only for this department. All right. Looking after insurance matters. All right. Answer should be in the form of yes, no only. Are competitive quotes obtained from insurers? Is there is a comprehensive insurer? Are all 3 locations covered? Are all assets covered? Is there a policy? Is there a system for reminding the insurance payment dates? Is there an official who decides on which policy to be taken? Look at the questions. Don't frame big questions. Small questions, and all the questions should be such that the answer should be in the form of yes or no. All right. They have already asked this in the new syllabus. Be careful. All right. Now, automated environment. Only last 2 parts pending. Only last 2 parts. All right. I know automated environment, you hate it like anything. I also don't want to discuss everything. But listen to me. If if you are at all interested, all right, then I have this full page which is dedicated to automated environment. You can see all the code words, everything over here. All right, these are the only questions which are asked. All right, so I will just look at the questions over here. At least if this much you cover, I'll be very happy. You are appointed as auditor of a company manufacturing paints. The company has a robust system of internal control. Most of the controls in the company are automated and they are working effectively. However, in certain situations, manual elements in internal controls are more suitable. What are the circumstances where manual elements in the internal control, may be more suitable? See, every single time, we don't want to just go behind automated controls. Sometimes, if you are the management, you will implement manual controls, especially if it is an unusual transaction. All right. If it is a transaction which is heavily governed by law, all right, such kind of transactions, you need to be very careful. Judgmental elements in the transactions are more. So look at this. If judgment is required, if it is very difficult to define, all right, if there are lots of changes every single day, there are changes in laws and business environment, all right, which is very difficult to continuously keep on changing the software. And no matter how much ever you try to implement a software, but to monitor the software, you will need a human only, no? And there are large, unusual or non-recurring transactions. Listen, I'll give you a code word. Unusual changes are difficult to predict. All right, unusual changes are difficult to predict. Okay, so you can unusual changes and difficult to predict. 3 points at least you can remember, where manual controls will be more suitable. All right, now look at this. Understanding the automated environment. Understanding the automated environment. All right. Understanding the automated environment. If you get a question on understanding the automated environment, all right. You see this, I've used one code word. Inform the architect that its key purpose is to locate the package latest version. One more time. Inform the architect that its key purpose is to locate the package latest version. Or you can create a code word of 2-3 points. All right. Now listen to me. Inform. I want to understand understand logic also. I want to understand the softwares used by the entity and the whole automated environment. All right. All right. Okay, we are back. I want to understand the software used by the entity and the whole automated environment. All right. Then first, let me see what kind of information system they are using. What kind of architecture, whether they have developed homegrown systems, all right, or whether they are using some cloud-based system, whether it is connected with the clouds, okay, cloud, or whether it is locally connected. Who are the key persons in this entity who are responsible for the system? What is the purpose of the system? What is the location of the system? Local means local network. Global means connecting straight away to the world internet. All right. Package system. Have they created some, they have just bought the software for some package system, or they have created their own in-house system? And then what is the version of that system? So inform the architect that its key purpose is to locate the package's latest version. If you can remember this code word, I'll be very happy for understanding the automated environment, or else you can create your own code words also. And if you are not happy with all the points, you can remember 3 points, not a problem. All right. Like LAV, love, or something like that. All right. Lavi, Vali, all right. Something like that also you can create. Okay. Given below is a table containing column A and column B. Column A contains description of certain controls in an automated environment. Complete column B by stating appropriate type of controls. Superb. One of their favorites. All right. You see over here, and there are more questions like this. Yeah, even this question. One of their favorites. Listen to me. All right. When it comes to types of controls in automated environment, there are 3 types of controls. Guy. All right. G for general IT controls. General IT controls are such controls which are common for all the applications, like IT policy of the company, like let us say control over database, control over server. These kind of controls are for everyone. If you want to buy a new system, what should be the system or policy of the company? All right. How the changes will be made to the softwares. These are common controls, which are common systems, common policies for the all applications. All right. That is your general IT control. Okay. Code word is PADA. Program change controls, access security controls, data center, database server and stuff, and application system. So what is application system? I am worried that application system, students will mark in application controls. Application systems are common policies to be followed in designing and implementing any application. All right. Okay. 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 General IT controls. Now, application controls are controls in a particular application, like salary application. If I'm writing the name of the employee, it requires the date of birth of the employee. If I don't write date of birth, it will not allow. These are all application controls inside the salary application. It can be automated controls, it can also be manual controls, but only for that particular application. All right. Okay. IT dependent controls. See, listen, system generates a report, manager takes action based upon that report. So manager is dependent upon the system. So IT dependent controls are actually manual controls. It's a proper manager manual controls that make use of some form of data generated from IT system. So tell me everyone, if general IT controls are not functioning properly, then application controls will have error. So application controls will be dependent on general IT controls. And if general IT controls and application controls are not functioning properly, then this manager will take wrong action. So IT dependent, it is also dependent on these controls. The relationship between application controls and general IT control is such that general IT controls are needed to support the functioning of application controls, and both are needed to ensure that IT dependent controls function properly. All right. This content will be very, very helpful over here. Now look at this. This is still not the full content, but at least to the extent we can. Access security, you know, it is general IT control. Pada code word. Sequence number check. It is there in a particular application, number check and stuff. Application control. Data center, general IT control. In a particular form, there are certain mandatory fields to be fulfilled. All right, application control. Okay, we'll solve one more such question. All right, look at this. Whether any data is reasonable or not, reasonableness check means the data is reasonable or not, application control. That is there in every application, has its own reasonableness check. Controls over data center, general control. Application system acquisition and stuff, which is common for all the application, general IT control. Program change control, pada, P for program change control. All right, that is also general IT control. Okay, so they can ask you such questions. Now, what are the other questions over here? This was asked in Jan 25. Same question was repeated in May 26 also. In an automated environment, there are generally 4 types of audit tests available. As a senior auditor, it is crucial to guide your team in selecting the appropriate audit test based on the situation. Explain the types of audit tests commonly used in automated setting and provide insights on how to determine when and which test to apply. Wait, listen to me. All right. There are basically 4 types of tests in an automated environment: inquiry, observation, inspection, reperformance. Inquiry is the easiest to do because you can ask questions, get the answer. It is most efficient. Efficient means less time, less resources. Reperformance means doing everything from start to end on your own. All right. Reperformance gives you the best evidence. It is most effective, but it takes a lot of time, so it is least efficient. Inquiry is most efficient, but does not give you the relevant evidence. All right, it just gives you supporting evidence. So most efficient but least effective. So what to do? Best combination: ask the questions and test some system. So inquiry plus inspection gives you the best evidence. All right, that is your answer. All right. Okay, which audit test is matter of professional judgment, but normally inquiry plus inspection will give you the best evidence. Am I clear with this? Yes. Okay. This is also done. Then look at this, how many times this has been asked. At least few questions we can always do, right? This is a question on data analytics. Data is the new oil. Data analytics is basically computer assisted audit techniques, also called as CATs. Data analytics, computer assisted audit techniques, how it can help you in audit. It can help you to do everything in audit here: sample selection, calculation, evaluation, completeness of the data, accuracy of the data. It can help you for everything. All right. Look at this. Just pick up any 3, how it can help in audit: completeness of data, selection of sample, recalculation, fraud investigation. All right. This exam insights was just an extra comment. There are 2 software examples which they have given: IDEA, Intelligent Data Extraction Analysis, and ACL, Audit Command Language. All right. If you can replicate this, data analytics, CATs and stuff, this is the answer to be written. All right. Then this also has been asked very repeatedly, that if you are an auditor, all right, and in an automated environment, don't quit now, don't quit, we are almost through with this. If you are an auditor and in an automated environment, if you find certain weaknesses, all right, then in that case, what are the points to be considered at the end? Look at the question. At the end of the audit, you find certain findings. Okay. Man, you need to consider something. Now, when you find certain findings, first of all, is there a weakness in the IT control system? What is the impact of this weakness? Let me report it to management TCWG. All right. To memo, internal control memo or management letter means to management. Right. And then if there is significant deficiency, we'll go to those charged with governance. Hey, this was done in SA 265 also. Weakness, impact, report to management. All right. Report to TCWG, but TCWG only in case of significant deficiencies. All right. The last part of this chapter, that is test of controls. All right. Now listen to me very carefully. There are some questions, and in recent attempts, these questions are increasing. Only few questions. All right. Tell me, as an auditor, I want to perform test of controls. This is SA 330, auditor's responses to the assessed risk. Let me just read the question and explain the answer. Not all the points will not cover, but at least the questions which are given over here. SA 330 states that auditor shall design and perform test of controls to obtain sufficient and appropriate audit evidence as to operating effectiveness of relevant controls. Correct. Briefly discuss when such tests are to be designed and performed. If auditor intends to place greater reliance on effectiveness of a control, state its likely effect on audit evidence to be obtained as a result of such test of controls. Why higher level of assurance may be sought by an auditor about the operating effectiveness of controls. Listen to me very carefully. Today, if you're conducting audit of a bank, then that bank ATM software, what if it does not function properly? Can I say there will be too many errors? Yes. That means as an auditor, you are dependent on that software. You want that software to function effectively. So I will test that software at least once. Because if that software functions effectively, then the crores of transactions which are operated through that software, I don't need to test them separately if the software is functioning properly. So when I am conducting test of controls, I know that I'm dependent on that system. And I know that just by test of details, I will reach nowhere over here. So listen to me. When auditor expects the controls to operate effectively, I'm expecting you to operate effectively. When will I start question a student when I'm expecting the student to clear? When will I shout at a student when I'm expecting the student to score marks? Exactly. So when we expect something to operate effectively, we will test. All right. Second, I know that only by test of details, I will not get the relevant evidence. For example, in case of inventory verification, only by just, inventory cost, NRV, whichever is lower, you will not get the evidence. You'll have to go for physical verification, check the inventory, count the inventory, see the system over that inventory. So two reasons: when I'm E for expecting the control to function effectively, and when I know S for substantive procedures alone will not provide evidence. But tell me, that means I will have to test the controls in detail. If I get good evidence about internal controls, then automatically it will reduce the sample size for test of details, because I can now confidently rely on the internal control system. All right. Next, during the audit of Apex Limited, auditor plans to rely on internal control system. This is a straight away theory question. I will just underline that point. Discuss the matter the auditor may consider in determining extent of test of controls. Chalo, when I will test the controls, understood. How much time I will give? All right, till what extent I will test? I will just give you one clear code word. FD's length is reliable. Okay. First of all, it all depends upon how frequently that system is used. If that system is used very frequently, I would like to test it in detail. Then it also depends upon what will happen if that system does not function properly. Deviation. If the deviation happens, all right, then it will create a lot of problems. So it is better to test that system. Expected rate of deviation, how much damage the control can do if it is not functioning properly. Then I am dependent on that system for the entire year. Means every single day that system is being used by the management. So I would like to test it in detail. Length of time period during which auditor is going to rely on that system. All right. Then I know that I will keep on testing till the point of time I don't get a relevant and reliable audit evidence. So if you want to remember only FD's length, fine, but by heart the question, extent of test of controls. Next, CAB, see, you see, it is being asked in recent attempts, the frequency has increased of such questions. CAB was the auditor of Star Limited. He wanted to ensure that the company had correctly reconciled its bank accounts and also want to understand whether and how far the internal control system was operating in the company. What kind of test of control was CAB, performing? Hey, hello. If you are trying to understand everything, whether it is done correctly or not from start to end, that means you are doing reperformance. This I have discussed in SA 500 also. All right. What are the other procedures that can be applied while undertaking test of controls? I will give you a simple code word. CORI. So what is CORI? This is code word is for test of controls. Whenever they ask you on test of controls, what are the different techniques for test of controls? C for you can check controls in computerized application, whether computerized application are functioning properly or not. You can go for observation, you can go for inspection, and you can go for reperformance. So CORI. All right. Next, discuss various points which auditor needs to consider in determining whether it is appropriate to use audit evidence about operating effectiveness of controls obtained in previous audit. If so, the length of time period that may elapse before retesting a control. Hello. In financial year 25-26, you conducted test of control. In financial year 26-27, will you retest this control or will you rely on the prior period evidence? It depends. Depends upon what? Write down over here CDE. It depends upon characteristics of the control. Whether that control is a manual control or automated control. Because if it is a manual control, I would like to retest. Automated control, only if there are changes, I will retest. Then it also depends upon the deficiency that you have identified. All right. The deficiency that you have identified, whether there were deficiencies over there or not. Look at this. Effectiveness, 1 minute. Deviations. All right. The deviations that you have identified. In the past, if you have identified lots of deviations, all right, then in that case, you would like to retest the control. And it also depends upon effectiveness. That creek monitor components, whether they are effective or not. All right. If they are effective, then I will not keep on retesting. But if they are not, then I would like to retest. So CDE decides, all right, whether you want to retest the control or you can rely on the evidence obtained in the prior period. All right. So students, have I covered everything? No. But looking at the recent attempts and ICM module, I have tried to cover maximum possible questions, and this should give you good confidence. If you have liked this entire revision, I expect you to share it ferociously, aggressively with your friends, and all the very best, my dear. All right, you will come to see a final very, very soon. All the very best. All right, drop some love, drop some comment in the comment section. It really motivates us. Thank you so much. All right, so welcome to the last part of the revision. Whereby we will be covering all the non-asset topics. Chapter 9, audit of different types of entities. Chapter 10, audit of banks. And Chapter 5, audit of different items of financial statements. Now, when it came to standards, the kind of revision that we did was completely through the question bank. But when it comes to these non-essay topics, the questions are not that tricky. It is just that students don't have knowledge only. Okay. So that is why I will be taking help of these charts more often. All right, to cover the entire revision. I have also kept my question bank open to show you some very critical questions. Otherwise, mostly through charts, we'll be able to do it. All right. Now, when it comes to audit of banks, first of all, this topic is divided broadly into three parts. First, some basic banking thing that they are explaining. Second, most important, very important, all right, is the audit of advances and the discussion of non-performing assets. Mostly we see question from there. We are expecting 8 to 10 marks question from audit of banks. All right. And the third thing that we see in audit of banks chapter is some audit procedures related questions. All right. So the first basic banking questions and the third basic audit procedures related question, the chances are less. All right. Most of the times they are asking questions from the second part that I will be taking up. That is your audit of advances and non-performing assets. Without wasting time, because it is a revision very close to the exam, so we will focus only on critical points. All right. But yes, these notes are very comprehensive. So there are different types of banks in India: commercial banks, regional rural bank, cooperative bank, payment bank, development bank, and small finance bank. For these different types of banks, you are learning since your basic commerce levels. All right. So I don't think there is any issue over there. You can just read my notes, and that will be more than enough. Then there are dedicated questions on Reserve Bank of India, RBI. All right. There are dedicated module questions also. There is one big question for which we need to prepare. When it comes to RBI, everyone understands that it is the central bank, and RBI is responsible for, that is one question. And what are the important functions of RBI? All right. So RBI is responsible for RIP. RBI will regulate the activities of commercial banks, other banks, in fact, NBFCs also. All right. Then RBI is responsible for Indian financial system development and supervision. And RBI is also responsible for policy determination. All right. That means whatever are the monetary policies, CRR, SLR, all of that. So regulation, Indian financial system, and policy determination, RIP. Next, important functions of RBI are CCB, currency issuance, currency regulation, currency issuance, and also regulating currency. And obviously, RBI acts as a banker to the central and the state government. All right. Next, uh, as I told you, this I will take it as the last part. Okay. So these are some banking, basic banking things that were there. Apart from that, the most important terms that I want to discuss over here, all right, for which I think you're looking at this lecture, is the entire discussion on audit of advances. Okay, entire discussion on audit of advances. Basic other things we'll cover later on. When it comes to audit of advances, very quickly, there are two types of advances that the bank will give. One is funded loan, second is non-funded loan. Funded loan is where there will be an actual transfer of funds from the bank to the borrower. Example, term loans, demand loans. Non-funded loans will be where there is no actual transfer. Bank is just giving a guarantee on behalf of the customer. All right. So if I am the bank, I'm giving guarantee on your behalf to someone. It is a non-funded loan. Okay. Then there is a separate discussion that different types of advances comprises of, all right. When I say funded amounts, the actual funded loans that are given, all right, for that I have created a code word. That topic, this classification you cannot change, you cannot write your own word. If they tell you that please explain different types of advances, then you have to write this. All right. Topic of bill and demand. All right. Topic, term loans, overdraft, CCOD. All right. Overdraft, cash, P for participation on risk sharing basis, term loans, overdraft. P for participation on risk sharing basis means multiple banks giving loans. All right. Then I for interest bearing staff loans, and C for cash credits. These are all short term credits which are given. All right. Interest bearing staff loans given to the staff. Then bills discounted and purchased, and demand loans. What is demand loans? I am transferring the loan to you. I'm giving the loan to you. You please repay to me whenever I demand. All right. Now, legal requirements of disclosure in the balance sheet of the bank. In the balance sheet, in the notes to accounts, in the balance sheet, in the notes to accounts, there is a mandatory disclosure which is required in the case of a bank's balance sheet. All right, that disclosure can be seen from three different angles. One, RBI wants to know in the notes to accounts the nature of advance. Second, RBI wants to see the same advances but based upon security. All right. So let us say bank has given total advances of 100. So first 100 will be shown as nature of advance. How much is topic of bill and demand. All right. Then again 100 will be shown based upon secured, non-secured, secured by tangible asset, secured by intangible asset, all right, or secured by government guarantees. Then 100 will be again shown based upon geographical, that is advances in India and advances outside India. All right. So this is how broadly there will be a legal requirement of disclosure in the balance sheet of the bank. Next, classification of advances. Okay. Now RBI, what RBI has done is that RBI has described certain priority sectors. All right. Like agriculture sector. Okay. Micro, small, medium size entity, education sector, and housing sector. So HEMA. These are given in the module. This is prescribed as priority sectors. So bank has to compulsorily give certain amount of loans to these priority sectors. So that is why RBI wants to know sector wise advances also. So if you see over here also in advances in India, they wanted to see how much is given to priority sector, public sector, to other banks, and to others. Okay, so that is sector wise classification. If there is at all 2 to 3 marks question on sector wise classification, you should be able to write. Then RBI sees advances based upon security wise classification also. Now there are two types of security: primary security and collateral security. Primary security is the main security for an advance, the one against which the advance has been given, the one against which the advance has been given. So if I say home loan, all right, then home becomes my primary security, that is the principal security. And my father has also given guarantee to the bank. My father's guarantee to the bank for my home loan becomes the collateral security for the bank. So collateral security is basically an additional security. Very basic concepts. Now This is now whatever I'm discussing for the, I mean, since last 5 minutes and for the next 15, 20 minutes, 30 minutes also is going to be very, very sensitive for audit of banks topic. Now, mode of creation of security, mode of creation of security. All right. Now, there is how do I create security? All right, if I'm giving you my home, all right, I'm going to stay in my home. I'm just going to give you title deeds of my home. So what have I created? It is called as mortgage, right? So similarly, wait, I will go slow now. So mortgage, pledge, hypothecation, assignment, and set off. All right, and lien. Let us see the examples which I given. Mortgage is home loan, means it is only for immovable property. Mortgage is always for immovable property. Remember this, mortgage for immovable property. Home loan, who will remember through example, home loan, who will stay at home? I am going to stay at home. So ownership will be of the borrower. It is my home and I am going to stay at home, so possession will also be of the borrower. All right, but this mortgage, how this mortgage will be created? Listen to me, first stay only in mortgage. Okay, how this mortgage will be created? There are two types of mortgage. One is equitable mortgage, second is registered mortgage. Sir, what is equitable mortgage? That I am giving you my, you are the bank, I am the borrower. I am giving you my title deeds, my home original documents, I am giving it to you. Done. All right. The contract is done. Okay. Now you give me the loan. So the delivery of title deeds creates equitable mortgage. However, in India, there was a lot of scam for this. Right? That is the reason that registered mortgage was introduced. Means there will be an official agreement that both of us will sign, which will be called as mortgage deed. All right, I am the mortgager, you are the mortgagee. In your name, I am mortgaging. All right, it registers the property to the mortgagee, and this is actually registered with the government. Okay, so registered mortgage is affected by registered instrument called mortgage deed, signed by the mortgager, registers to the mortgagee as a security. All right, so that is your mortgage. Now, pledge and hypothecation, we will take it together. Many students are getting confused between pledge and hypothecation. Pledge and hypothecation, both of them are for movable properties. All right. But in pledge, remember the example of gold. Now, when it comes to gold, all right, I have to give you my gold, right? Okay. So, in case of pledge, it is my property, it is my asset, but you are in the possession. Okay. Property movable, ownership of the borrower, possession with the lender. Car loan is also movable. All right. Although in Bangalore and Mumbai traffic, cars are not movable. Okay. But car is normally a movable asset. Okay. Then in that case, I am driving the car. So ownership of the borrower, possession also of the borrower. It is my just request that you please read these lines once. That pledge, I will deliver my gold to you. So delivery of goods by the borrower to the lending bank. Hypothecation, all right, I will submit my statements to you, but I'm not going to deliver the goods to you. It will remain in my possession. In a corporate sector, hypothecation is created on inventory, where the inventory will be there in my storage location. All right, but I'm going to submit the statements to you. Okay. Then assignment. What is assignment? Transferring the right to someone. Tell me, transferring the right to someone. All right, making someone official holder of your right. So that is insurance policy. Now, insurance policy, let us say sum assured. If I die, then sum assured is 100 lakh rupees. But I have paid premium of 10 lakh rupees. If I cancel the policy right now, the surrender value, all right, is 8 lakh rupees. Then this is becomes the security value. All right. That assignment normally we see in insurance policy. But in practical life, in corporate life, all right, the insurance policy is very personal. In corporate life, we see assignment normally in case of trade receivables, where I am giving you the right to collect money from my trade receivables. So assignment represents transfer of an existing or future right or property belonging to a person in favor of another person. An assignment gives the assignee absolute right over the monies or debts assigned to him. Next, set off. All right, set off. What is set off? You are the bank, I am the borrower. I have kept 100 rupees. I have kept 100 rupees as FD with you, and I've also taken loan, all right, of 80 rupees. Then you can set it off if I don't repay the loan. So set off is a statutory right of a creditor, to adjust. Tell me, statutory right of a creditor to adjust debit balance in debtors account against any credit balance in another account of that same debtor. All right. So basically, two accounts will be combined. One will be the deposit account, second will be the loan account of the same person, provided both the accounts are in the same name and in the same right. Then next will be your lien. Lien is nothing but right to seize. Lien is creation of a legal charge with the consent of the owner, which gives lender a legal right to seize and dispose of and liquidate the asset under lien. All right. So these are different modes of creation of the security. That's a very, very important for MCQs, case studies and stuff. Now, now comes another very interesting discussion, that is the discussion of non-performing asset. I have kept it on this link. If you click, you will get my access to my handwritten notes. All right, ignore the handwriting, please. Okay. Now, non-performing asset discussion, I want you to focus properly. Non-performing assets, because there are so many questions. If we just do the questions, we'll miss out on the points, all right, of NPA. Okay. So now listen to me. Non-performing assets. Bank has given loan to Mr. A. Mr. A is going to pay the installments. Then in that installment, there is a principal also to be recovered and there is an interest income also to be recovered. What if Mr. A stops paying the installment? That means asset has stopped generating the income. Now, because asset has stopped generating the income, it can be a non-performing asset. I'm not saying that it is a non-performing asset. Now we need to understand when it will become non-performing asset. All right. RBI has prescribed IRAC norms, income recognition and asset classification norms. Based upon these norms, banks are required to classify and recognize non-performing asset. All right. Now listen to me. NPA criteria. Now be very careful. When the question comes about NPA, you have to first understand that what is the question exactly trying to question you. What is the question exactly trying to question you? Whether it is just a classification criteria that the question wants, all right? Classification criteria means, okay, whether it is NP or not, just tell me that much. Or the question wants you to move ahead and talk about impact of NPA on the financial statements of the bank. All right. So first what we'll do is, we will discuss classification criteria. General criteria for classification is when installment remains overdue for more than 90 days. General criteria for classification is that when installment remains overdue for more than 90 days. But listen to me very carefully. Let us say that if 30th March is the due date, if 30th March is the due date, and let us say if it is unpaid on 30th March, then from when it will become overdue? On 30th March, or you will say overdue from 31st March. If you are saying 31st March, you are wrong. The word overdue has been defined by the RBI. Overdue means if it is not paid on the due date. So yes, it will become overdue on the same date itself. It will become overdue on the same date itself. So this will be day one of overdue. Oh, be careful. All right. So installment remains overdue for more than 90 days. That is general criteria. But then there are some specific criteria for agricultural advances. All right. Ignore this page number references. There are some specific criteria for agricultural advances. When it comes to agricultural advance, you will have to check the loan taken for crop cultivation. It has to be a loan taken for crop cultivation. All right, now listen to me. You will have to see for which crop the loan has been taken. There are two types of crop, that is short duration crop and long duration crop. If loan has been taken for short duration crop, all right, then there is a different criteria. For long duration crop, there is a different criteria. That means wait, don't go so much fast. Wait, all right. That means we will have to understand which crop is a short duration crop and which crop is a long duration crop. Short duration crop, this is not NPA criteria. I am just explaining which crop is a short duration crop. Short duration crop is a crop with crop season within 1 year, not exceeding 1 year. Now there is a one more problem. What is the meaning of crop season? So crop season means period seed sown from then when it is ready to harvest, to ready to cut. So period up to harvesting, when the crop is ready to cut. All right, so this period from seed sown to period up to harvesting. If this period, all right, if this period is within 1 year, then it is a short duration crop. But however, if that period goes more than 1 year, then it will be a long duration crop. All right. So we will have to understand first that which type of crop it is, whether it is a short duration crop or it is a long duration crop. Okay. Now listen to me very carefully. If it is a short duration crop, then the NPA criteria is that installment remains overdue for 2 crop seasons. Means 2 times they can harvest. Okay. If it is a short duration crop, if installment remains overdue for 2 crop season, short duration, 2 crop season, short duration, 2 crop season, short duration, 2 crop season. All right. And for long duration crop, if installment remains overdue for 1 crop season, all right. Long duration, 1 crop season, long duration, 1 crop season, long duration, 1 crop season. All right. Be careful. But this crop season is decided by state level bankers committee in each state. And let me tell you, in case of natural calamities, the relief can be given by the bank that can act as an official exception. All right. For natural calamities, banks may provide relief on their own. So that is your agriculture advances. Now be careful for cash credit and overdraft. I repeat, be careful for cash credit and overdraft. All right. You have to go slow for cash credit and overdraft. This is very, very sensitive. All right. Normally, these cash credit and overdraft items, now these are short-term working capital loans which are given to the borrower, generally to the traders, manufacturers, and stuff. All right. What is the transaction between them? X Limited manufacturing entity, and this is bank. All right. So X Limited will submit the stock statements, current asset, current liability statement to the bank, and bank will calculate the drawing power. Then bank will provide working capital finance. Right? Bank will provide working capital finance, that is CCOD. All right. Now everyone over here, for this working capital finance, all right, how it functions. Okay. For that, I really want you to understand one question, very, very important. All right, everyone over here. Don't worry, I have marked certain questions. I will be sharing one small question bank also with you for audit of banks. All right, look at this. Or you can take a screenshot of this particular question and the answer. Okay, now focus over here. I am the borrower, you are the bank. CAP is conducting stock audit of a borrower availing cash credit facility of rupees 100 lakhs from branch of a bank. The cash credit facility is against the security of paid stocks and debtors up to 90 days. Margin stipulated is 25% for stocks and 40% for debtors. Following further information is available as on so and so date. And this is the information given. Is the drawing power computed by CAP for rupees 82.5 lakhs proper? Now listen to me. What bank will do is, bank will go through your current asset and current liability statement. Then bank will, all right, create such a calculation that what is the value of stock. Okay, this is the value of stock minus how much is the damaged stock. Remove the damaged stock. Then how much stock has been taken on credit for which creditors have not been paid, because that stock is already under some obligation. All right, so creditors for goods, this much minus it. So this is finally the stock for which the company has paid. Now bank would like to keep certain kind of safety margin. So this is margin at 25%. That is given in the question. All right. So 70 lakhs into 25% minus, so that 52.5 lakhs. All right. This is the value of stock. Now they will take value of debtors. They are saying that they want to consider debtors only up to 90 days. That is given in the question. So any debtor which is exceeding 90 days, they will remove it. So debtors which are pending for more than 90 days, they are minus. They are subtracting it. This much is left. Margin at 40%. Provision for doubtful debts or debtors to be considered bad, that will also be subtracted. Margin at 40%. So 40 minus 40%, that is 24 lakhs. Now drawing power A plus B, it will come to 76.5 lakhs. And therefore, this calculation is not proper. All right. Now listen to me. I have not yet discussed NPA norms with you. I am just telling you what is drawing power. This is the CCOD drawing power. Now let me go back to the notes. All right. There is something called as sanctioned limit. Sir, what is sanctioned limit? Sanction limit is the maximum exposure that a bank is ready to take against a particular borrower. So, CCOD drawing power plus other types of finances from the same bank to the same borrower is the sanction limit. So, it is the maximum exposure that a bank is ready to take against a particular borrower. All right, so I have explained to you what is sanction limit, I have explained to you what is drawing power, and I explained the whole business of CCOD to you. All right. Now I will give you the NPA criteria. NPA criteria for classifying CCOD. This is also called as CCOD, classified as out of order. Out of order NPA is same for CCOD. All right. We have to look at the question and we have to look at the balance sheet date. If the amount withdrawn is more than the drawing power, I repeat, if the amount withdrawn is more than the drawing power, means already they have withdrawn more than the drawing power. And if this situation remains for more than 90 days, means as on balance sheet date, already it is more than the drawing power. See, since how many days this is happening. All right. If it is happening for more than 90 days, then it will be considered as a non-performing asset. If amount withdrawn is within the drawing power, it is not exceeding drawing power, but the credits are not enough to cover the interest charge, means the borrower is just withdrawing. This is against current account here. So borrower also has to deposit money. Borrower is just withdrawing against the drawing power. But the credits, there are no credits. Acha, bank has debited interest. At least borrower should pay that interest. if the credits are not enough to cover the interest charge, and if this situation remains for more than 90 days, then it will be tagged as a non-performing asset. Then it will be tagged as a non-performing asset. I hope I've made myself very, very clear. All right. Or let us say that you see as on balance sheet date that amount withdrawn is within drawing power. And since last 90 days, there are no credits only. All right. It's only, they are just withdrawing. Then also it will be tagged as out of order, that is NPA. All right. Now look at this. Sometimes what happens, because borrower and banks, they have a very good relation. All right. And since years and years, they have the account in the same bank account. So they will request to the bank that, bank, can you please give me an additional temporary limit of more of 20% at least for of my drawing power. All right, please. So banks can sanction an additional 20% limit. So let us say your drawing power is 100. So banks can make it 120 for 90 days. If your sanction limit is 100, banks can make it 120 for 90 days. All right. Banks can sanction additional 20% limit for a maximum period of 90 days. But whatever that additional limit has been sanctioned, you will have to repay that money. And listen to me. Borrowers are required to submit the current asset statement once in 3 months. Yes, compulsory. Once in 3 months, you have to submit your current asset statements. If you submit the current asset statement once in 4 months, 5 months, all right, then your account will be marked as out of order. Drawing power calculated from statements older than 3 months is considered as irregular. And let me tell you, all the borrowers who have funded exposure of more than 5 crores, that means the bank has given you CCOD of more than 5 crores. All right, then in that case, your stock audit will be done. Okay. Bank people will come to your storage location and stock audit will be done. Okay. So be careful with this. At this point, not required. It is a financial level. All right. Now everyone over here. So we are finally clear with CCOD now. Okay. So wait, general criteria, overdue more than 90 days, agricultural advance, short duration crop and long duration crop. All right. And this CCOD thing also we are done with. Okay. Now listen to me. Wait. Impact of NPA on the financial statements of the bank. If bank has given a loan of rupees 100 to Mr. A and interest booked, income booked, whatever income has been booked but not realized is rupees 10. Mr. A stops paying installments, let us say overdue for more than 90 days. Please understand there will be two impact. One, what to do with this 100 and what to do with this 10 rupees. Income recognition, 10 rupees. Income booked but not realized must be fully provided. So full 10 rupees will be reversed. And further income will be booked only on receipt basis. And asset provisioning. RBI has prescribed certain provision on the amount of asset based upon its classification. Asset means this 100 rupees. So there will be some provision created on the amount of this asset. But then, sir, what will be the percentage of the provision that will be created on the amount of this asset? That RBI has prescribed the percentage, all right? And we will be discussing that percentage. Don't worry about it. All right. I will now explain that. Okay. This is asset provisioning. Income part is done. Income will be fully reversed and further income will be booked on receipt basis. All right. Now listen. Asset provisioning is based upon following classification. Let us say Mr. A is regularly paying the installments. Then it is standard asset, 0.4% provision. Let us say Mr. A defaults. All right. Mr. A defaults. Overdue. Now overdue up to 30 days means 0 to 30 means up to 30 days. It will be called as special mention account. If he is regularly paying, then standard asset 0.4% provision. But if it is overdue, then 0 to 30 will be special mention account, not yet NPA. 31 to 60 will be SMA 1 and 61 to 90 will be SMA 2 and more than 90 it will be NPA. Now the moment it goes more than 90 it is NPA, so it will become substandard asset. All right. Once the asset meets NPA criteria, it is classified as substandard asset. The moment the asset becomes NPA, it is classified as substandard asset. Okay. Now I will explain the percentage provision to you because they have also questioned it. All right. So now look at this. Just look at this. Okay. Just fix your eyes over here. Just fix your eyes over here. Okay. Now what I will do is I will take up one question for percentage provisioning. I'll take up one question for percentage provisioning. So you will also feel better. Yeah, this is just theory question on percentage provisioning. This is again calculation of drawing power. Yeah. Agrima CA student is a part of, if you want to take a screenshot first, then you can take this screenshot. This is of the answer. Okay. Agrima CA student is a part of an engagement team conducting audit of Madurai branch of ARB Bank. CA Bhuvan, engagement partner, has asked him to verify provision made by branch as on 31st March 24 in respect of the following non-performing assets. Okay, you have name of the account, NPA classification, outstanding amount as on 31st March, amount of provision. All right. So there is a classification done. Okay, then we have these different calculations over there. Don't worry, don't freak out. All right, don't freak out. Okay, now listen to me very carefully. This is the theory. Then we will do the calculation. All right. Now, the moment an asset becomes NPA, the moment an asset becomes NPA, okay, from this day it became NPA. For 12 months, it remains in substandard category. Which category? Substandard category. After that, it shifts to doubtful asset. Then doubtful up to 1 year, doubtful 1 to 3 years, and doubtful more than 3 years. Very simple, simple scale. All right. So doubtful 1 year, I will call it as D1. 1 to 3 years, we'll call it as D2 because it is in doubtful category for more 2 years. And then doubtful more than 3 years, we'll call it as D3. But if the expectation is gone, that means loss has been identified. There is no expectation of recovery. Then it will be called as loss asset. Okay. So we have standard asset, then NPA, substandard asset. Up to 12 months, it is substandard. Beyond 12 months, then doubtful, doubtful up to 1 year, doubtful 1 to 3 years, more than 3 years. And then last one, where loss has been identified, it will be a loss asset. Okay. Normally, D3 asset is also considered as like a loss asset only. Now, let us focus on this question. Okay. This is now only the first, let us understand the percentage provisioning, then we'll focus on the question. If it is a substandard asset, then provisioning required is 15%. All right. However, if it is a doubtful asset, if it is doubtful unsecured, 100%. Don't think about anything. Doubtful secured, then D1 category means doubtful up to 1 year, 25%, 1 to 3 years, 40%, and more than 3 years, 100. 25, 40, 100. Tell me 25, 40, 100. Tell me 25, 40, 100. All right. And loss asset will always be 100%. Secured, unsecured does not matter. Okay. I think now we will be able to solve this. D1, 10 lakhs is the outstanding amount. All right. So D1, we said that amount of provision has to be 25%. Okay. That is a provision of 2.5 lakhs should be made instead of 5 lakhs. Substandard asset will require provision. Is it substandard? Okay, so they have given substandard. It will require provision of 15%, 7.5 lakh. They have made 7.5. Yes. Then doubtful 2 category for secured portion, it will be 40%. Provision of 12 lakhs should be made instead of 30 lakhs. And loss asset has to be 100%. D3 category also 100%. All right. Classification as NPA should be based on the record of recovery. There can be security, but once it is classified as NPA, we'll have to create our provisioning. All right. So everyone over here, this is a very good question to practice provisioning. It was RTP Jan 25 question. Okay. Now focus over here. We will go back to our main notes. We will go back to our main notes. Okay. I hope you are clear up till here. There are some special adjustments which I want to discuss. Okay. Let us say that Mr. A has taken home loan, car loan, education loan, furniture loan, personal loan. All right. And he has taken all of these loans from Axis Bank amounting to total 75 lakhs. And let us say that Mr. A defaults in repayment of only home loan, overdue for more than 90 days. He is regular in payment of other installments. All right. Then let me tell you, entire portfolio, I repeat, entire portfolio of rupees 75 lakhs will be NPA. NPA classification is borrower wise and not loan facility wise. NPA classification is borrower wise and not loan facility wise. Be careful with this. But let us say Mr. A has also taken loan from SBI. Then just because Axis Bank has marked Mr. A as NPA, that does not mean that even SBI has to mark Mr. A as NPA. Just because Axis Bank has marked Mr. A as NPA, that does not mean that even SBI has to mark Mr. A as NPA. Every bank records NPA as per its own experience. I repeat, every bank records NPA as per its own experience. Now look at this example. Just have a look at this example. Second special adjustment. Once you do NPA with me, don't worry, you will not be NPA in your paper. Let us say Mr. B has kept FD of rupees 100 with the bank. Bank is paying interest of rupees 6. Okay. Mr. B has kept FD with the bank. Bank is paying interest of rupees 6. Mr. B takes loan against FD from the same bank. Loan amount is of rupees 60. Interest payable is rupees 6. So Mr. B has to pay interest and Mr. B is also receiving interest. All right. But if you see this 60 plus 6, 66 is fully secured against the FD with the bank. Now, if Mr. B stops paying the installment, don't worry, bank will not recognize Mr. B as NPA. because bank can fully set off the amount using the right of set off, which I have explained earlier in this session itself. This applies to loans against FD, National Savings Certificate, Kisan Vikas Patra, Indira Vikas Patra, life policies. These are all considered to be highly liquid savings. All right, so not a problem at all. The same exception will apply. All right. Yes, yes, yes. Now be careful. Mr. C has taken loan from Axis Bank. Let us say that the loan is guaranteed by central government. I repeat, loan is guaranteed by central government. Or second example, loan is guaranteed by state government. Loan guaranteed by central government is very, very important adjustment. Let us say loan amount is of rupees 100. Interest booked but not realized is rupees 10. Mr. C defaults. Let us say amount is overdue for more than 90 days. Case 1. Bank should not classify Mr. C as NPA. Listen, central government guarantee. Hello. Central government guarantee is an exception. Bank cannot classify this loan as NPA because it is guaranteed by central government. It will act as an exception. But let me tell you, in case of NPA, there are two impacts. One is income reversal, further income on receipt basis, and second is percentage provisioning on the amount of asset. Yes, yes, yes. So what I'm trying to tell you is that for this there will be no exception, even though it is guaranteed by central government. Only there will be an exception for loan amount of rupees 100. Look at this. Bank should not classify the loan guaranteed by central government as NPA, but income booked but not realized will be reversed for sure. Further income will be booked on receipt basis, because there can never be an exception for golden principles of accounting. Only for the asset provisioning it will be continued to be treated as a standard asset. So only 0.4% provision of standard asset will be done, but there will be no exception against the income rule. All right. And if loan is guaranteed by state government, it will be treated like a normal loan. If it is amount is overdue for more than 90 days, you just consider it as NPA. No exception for asset provisioning or income recognition. No exception at all. All right. Okay. Then consortium arrangement. Sir, what is consortium arrangement? All right. Let us say that Mr. A, bank 1, 2, and 3. There are 3 banks and all 3 of them have given loan to Mr. A, joint loan. Then let me tell you, every bank has to record based upon its own experience. Normally what happens, bank 1, 2 and 3 has given loan to Mr. A. Then bank 1 has taken 60% loan amount. Bank 2 and 3 have taken 20%. Bank 1 becomes the lead bank. Bank 2 and 3 will become other banks. But all 3 of them together have given loan to Mr. A. Every bank has to record based upon its own experience. I repeat, every bank has to record based upon its own experience. If Mr. A is regularly paying installments to the bank 1 but not paying to bank 2 and 3, then bank 2 and 3 will recognize Mr. A as NPA. All right. Just because lead bank is getting the money, that does not mean that bank 2 and 3 will follow the classification of the lead bank. Every bank has to record based upon its own experience. Now look at this. This is also very nice adjustment. I wanted to show this particular question also to you. All right. Okay. Look at this. During the audit of C2 Bank Limited, this is what MTP November 25. The auditor reviews the loan portfolio and comes across the account of Messrs. Neem Tree Infrastructure Limited, which has an outstanding balance of rupees 10 crore. The latest valuation report by an RBI approved valuer indicates that realizable value of the security available against this loan is rupees 80 lakhs. Oh, the value of the same security during previous RBI inspection was 6 crores. So what happened is I gave some security to the bank, to the bank, and all of a sudden that security value has dropped down like anything. Right. Additionally, in another borrower account, Messrs. Gayatri Textiles Private Limited, with an outstanding balance of rupees 5 crore, the realizable value of security is estimated to be rupees 40 lakhs. As an auditor, how should these two accounts be classified as per RBI's prudential norms? Now focus over here, everyone. Very important adjustment. This adjustment is about erosion in the value of security. All right. Let us say if Mr. D has taken loan of rupees 100 against security of rupees 150 from Axis Bank. So outstanding balance, let us say it is 100. Mr. D defaults in repayment. Now what was the security? Earlier security value 150. Now let us say security value is 70. If there is a drop, erosion, reduction in the value of security by more than 50%, if there is a drop, erosion in the value of security by more than 50%, all right, that means the current security value is less than 50% of the value assessed earlier, then in that case, straight away, all right, the asset will be classified as doubtful asset. We will not wait for substandard, then doubtful and stuff. No, it will straight away be dropped in D1 category, doubtful up to 1 year wala category. All right, because security value is less than 50% of 150. Second case, let us say security value drops to rupees 7. In second case, we will compare 7 with 100 loan amount. So if the security value reassessed, all right, reassess security value, if it is less than 10% of the outstanding loan amount, not the earlier security value, less than 10% of the outstanding loan amount, all right, then it will be classified straight away as loss asset. So if security value is less than 50% of the earlier security value, doubtful asset. If security value is less than 10% of the outstanding loan amount, then straight away you classify it as loss asset. Am I clear with this? Yes, yes, yes. If you look at this particular answer also, very easy to solve now. Very easy to solve now. One question is of doubtful asset, the other question is of loss asset. Okay. Now, everyone over here, I have cleared many of your questions and many of the discussions of NPA. All right. I'm not still saying that it is line by line cleared. All right. But yes, lots of things have been cleared over here. Now we will jump to again the marathon notes. Okay. Audit or advances part and NPA part is done. We'll jump to marathon notes. 1 minute. I think there is some problem in the iPad. Okay, we are back. We are back. We are back. All right. Now, everyone over here. I told you that this NPA part is very sensitive. But apart from that, there are other points also. Quickly, I will just get through those points. Conducting bank audit. Okay, you see there are some boxes over here. I will quickly cover them up. Regulatory framework governing bank audit. This is just nothing but the names of laws and regulations. Remember 3-4 names. It is more than enough. All right. Understanding of the accounting system in case of banks. Now, when it comes to banks, all right, their accounting system can be either fully computerized or it can be, all right, semi-computerized, all right. Manual systems to nowadays, we don't see it. But if it is fully computerized system, as an auditor, we need to be satisfied whether all norms parameters as per latest applicable RBI guidelines are incorporated in the system or not. We cannot assume that system generated information is correct. So software should be updated for any recent regulatory changes. Then when we look at, the question bank, there is a module question on engagement team discussions. Engagement team discussions. Sir, what is this? Nothing. What are the matters that you will discuss within the engagement team if you're conducting audit of banks? All right. Students, have created a code word and 2-3 points. We will discuss about errors, frauds, all right, banking system, discussion about non-performing asset. So errors that will occur, past errors, method used for planning fraud by the bank employees. And we will perform risk assessment procedure, further audit procedure, and discuss that with the team. So little bit, if you can tally from here in the answer, it will be great. And what are the best benefits of such engagement team discussion? That it enables the engagement team to consider an appropriate response to fraud risk. It gives a platform to share ideas. All right. Now, other points, there are some basic BCom kind of points. All right. Like what are the special features involved in case of bank audit? All right. Banking system. So you see all code words and stuff given over here. We see large geography with technology, volume, 1 point on volume, bank has very high volume, complexity, geographical network, extensive use of technology. All right. Now, what are the different types of bank audit reports? What are the different types of bank audit reports that a statutory auditor normally signs apart from his main audit report? All right. So this you cannot just write anything. So if you look over here, I have given some examples. Ghosh's list. There was one Ghosh committee which had said that there are some compliances that bank has to do. So we have to give a report whether that is being followed or not. Then there is CARO is not applicable to banks, na? Because bank have a separate report called as long form audit report. Long form audit report, which is an additional reporting requirement prescribed by RBI. All right. So as an auditor, even I have to report upon this long form audit report. Then if there is any irregularity in the working of bank, then there is this SLR compliance report, statutory liquidity ratio report, and treasury operations report. Achha, fraud reporting to central government is applicable for bank also. So 2-3 examples if you can remember from here. I'm not giving too much time to all of this. Okay. Then if they say that as an auditor, you have to draw an audit plan, all right, in case of banks, then audit plan should be drawn based upon what? All right, this can be the question of 3-4 marks. Audit plan should be drawn based upon what? Audit plan will be drawn based upon, first of all, previous experience. Then whatever are the risk involved, all right, whatever are the operations of the bank, and we will consider, all right, all the features of the bank also. So please just understand whatever you look at this page, just have a glance at it. So you can write something very low probability that questions will be from this page. Accounts and audit technical requirement. Yes, at least this box be very careful. Accounts and audit technical requirement. So in case of banking financial statements, there is a separate format of financial statements. Bank does not follow Schedule 3 of Companies Act 2013. There is a separate format of the financial statements, and that is given in third schedule to Banking Regulation Act 1949. There are two forms of that schedule. Form A deals with balance sheet and Form B deals with P&L. In case of banking industry, even though it is a very big bank, still Ind AS is not applicable. They have to follow accounting standards issued by the ICAI. When it comes to appointment of auditor in case of banking industry, if this can be your MCQ, if it is an auditor of nationalized bank, he is appointed by the board of directors of the bank, not by RBI or something. RBI's prior approval required? Yes. Central government prior approval required? No. I am worried about nationalized bank. I am worried that students will just write CNAG of India, which is wrong, just thinking that it is some kind of government bank, which is not the case. Our auditor will be appointed by board of directors of the bank. Regional rural bank, again, the bank will appoint board of directors. RBI prior approval, no, but central government prior approval, yes. This you have to revise 2-3 times. Okay. Then auditor of normal banking companies appointed by AGM shareholders. RBI prior approval, yes. All right. Central government prior approval, no. So central government prior approval, it seems it is required in case of audit of regional rural bank. All right. The remuneration of SBI auditors and nationalized bank is fixed by RBI in consultation with central government. So I don't see CNAG anywhere. CNAG is there if you want to appoint auditor of SBI, which is a proper government bank. Then in that case, CNAG of India will appoint that auditor. All right. Okay. So this page, you should just have a glance at it. Earlier page was done by me. All right. Audit of banks, auditor's report. As I told you, apart from the main audit report, there is something called as LFAR, long form audit report. It is additional reporting requirement prescribed by RBI to be followed by all types of banks. The statutory central auditors of all types of banks, they are required to submit LFAR to the banks latest by 30th June every year. Latest by 30th June every year. Please remember this. All right. Now, this is 1 3-4 marks question, but it is very basic. In case of nationalized bank and SBI, auditor is required to make a report to the central government. Arey baba, this report is very basic. Balance sheet true and fair view. P&L true and fair view. Alright, look at this. Financial statements present true and fair view of the affairs. Whatever information you wanted, whether the information has been given to you. Alright. And any other matter which you think should be brought to the notice of central government. Remember just 1 or 2, 3 points, basic points over here in case of auditor of nationalized bank and SBI. Then remember this for MCQ. It is compulsory that in your audit report, you have to compulsorily mention the number of unaudited branches, that how many branches are unaudited, and let us say there are 80 branches which are unaudited. Then what is the total advances given by that branch? That also you need to mention. So number of unaudited branches and quantification of advances must also be given in the audit report, which is a compulsory requirement. Application of SS in case of bank audit. Now there are few paragraphs in this bank audit chapter where they have mixed with standards on auditing. So I've created code words for you to understand if you have not focused too much on standards on auditing. All right, there can be a question called as initial considerations by the statutory auditor. Okay. Remember, initial considerations by the statutory auditor. So if you are the auditor and you are starting the bank audit, all right, then what are the initial considerations? In that, I have clearly written I eat CD. All right. So I for you cannot perform internal assignments in the bank, like internal audit, like concurrent audit, which is also another audit. You cannot perform these kind of assignments if you want to be the stat auditor. These are initial things that you need to be careful of. You need to ensure that your engagement team is an experienced team. A for you have to assess the risk involved in this particular audit. T for you should be very clear about your terms of engagement. All right, SA 210. C for it is a compulsory requirement that you have to communicate with the previous auditor before accepting the appointment. Yes, it is a compulsory requirement as per the code of ethics of the ICI. And D for declaration of indebtedness, you have to give a declaration in writing that auditor, firm, relative, staff, all right, none of them have become NPA if they have taken loan from that particular bank. Then there is one more question called as understanding the risk management process. If you have seen the last 60 minutes of my or last 30-40 minutes of my essay revisions, all right, which was chapter 3 risk assessment and internal control. Then I had discussed over there components of internal control, crick monitor, all right. I had discussed over there in great details, okay, with the questions. If they ask you risk management process of the bank, if they ask you risk management process of the bank, you have to repeat that only, crick monitor, then automatically your answer will tally. All right, but if you have not seen that, then there is no point of me, again repeating that over here. Unnecessary disturbs the video. If you have seen that, then you will realize that it is the same thing. Okay. Some technical other points in case of banking industry. Okay. As an auditor, you may rely on the reports of other auditors, okay, or you may rely on some other reports also. What are those reports? First of all, you may rely on your own previous year's report. You may rely on internal audit report. You may rely on congruent audit report. Congruent audit is again continuous audit of transactions. Then you may rely on RBI. There are inspectors from RBI. You may rely on those reports. So basically you will take help of other reports, and they may ask you to give such examples that from which reports you will take the help. So you can write 2-3 examples as I have given over here. If they ask you to define what is stress testing, then all the commercial banks have been requested that they need to do stress testing. That means whether the bank will be able to survive in an adverse economic scenario or not, and whether the bank's software can survive a sudden increase in the volume or not. Okay, that is called as stress testing. So if the bank's operations and bank's balance sheet is put under stress, whether it can survive that or not. Okay. Basel 3, Basel is nothing but a name of a city in Switzerland where international banking settlements, international banking regulations are framed, which mainly focuses on capital income and stuff. All right. Acha, just one quick tip. If they ask you prudential norms, PRUDENTIL, prudential norms, it is nothing but that NPA and income recognition norms only. So you have to explain that only. I just thought I'll just tell you. Okay. So these were some very basic points. Acha, but listen to me. Apart from this, hello. Apart from this, what I have seen, all right, where students are struggling is one last part over here, which is audit of income and expense in case of banks. Audit of income and expense in case of banks. You have audit of revenue of the banks and you have audit of expense of the banks. My request, please understand, I'm giving you one simple request over here. All right. For example, this is the income part of the bank, and this is the expense part of the bank. When it comes to income, obviously the bank will divide income into two: interest income and other income. Just go through this list once, just once. I'll tell you why. They have asked this in MCQ. The discount earned on bills is actually interest income, not other income. All right. So just once you should just see this. Other income will be all that commission and fees. Nothing. Acha, expenses. All right. Interest expense, operating expense, provisions and contingent. Main expense is interest expense. Then whatever are the operating salary to staff and stuff, operating expense and provisions and contingencies. If you see depreciation, they have put under operating expense. Such kind of basic things you please look at. Okay. Just take out 5-10 minutes and just have a glance at it. That is one thing. Second important thing is for audit of revenue and audit of expenses. There is one very nice term which they have been questioning, which was also questioned in September 25. All right, that is takeout finance. All right, takeout finance. Now, what is this takeout finance? Takeout. I'm just searching the term. You may think that sir is not doing anything, but actually I'm searching the term. There is one question on takeout finance. You have to please be patient with me for this takeout finance. I have marked that question also to be discussed. Is right how it's not reflected on the screen. Actually, I'm searching. No, man. Okay, we'll have to be patient. Here. Sorry for the delay. Look at this question number 62. XYZ Developers, a property development firm, has secured a short-term construction loan from ABC Bank, right, to finance a residential project. Upon completion of the project, XYZ Developers plan to refinance this loan with a long-term takeout loan from DF financial institution. However, due to delays in the project's completion, XYZ Developers face difficulties in repaying the loan, and bank classifies the loan as NPA. What is this, man? What is this? All right. Now see, what is takeout loan? Listen to me. If L&T Infrastructure is building a very big infrastructure project, all right, and let us say Axis Bank is financing it. Okay. Then in that case, for few years, Axis Bank continues to finance it. Now L&T Infrastructure goes to SBI. At SBI, you please repay this Axis Bank and please take me out from this finance. I mean, please take me out from this arrangement with your finance. So SBI will finance so that L&T Infra can be take out from this arrangement. All right. So look at this. XYZ developers secure short-term construction loan from ABC Bank. Upon completion of the project, XYZ developers plan to refinance this loan with a long-term takeout loan from DF financial institution. So one lender giving the loan to another lender to take out the borrower from that particular financing arrangement. This is normally to boost the liquidity, all right, and to ensure that no single bank or financial institution comes under heavy financial pressure, all right. That is the takeout loan. Takeout loan is a method of financing whereby loan that is procured later from SBI is used to replace the initial loan. More specifically, a takeout loan or takeout financing is a long-term financing that the lender promises to provide at a particular date or when particular criteria is completed. Objective of takeout finance is to expand sources of finance, to boost the availability of longer, and to ensure that single bank or financial institution does not remain exposed for a long time. All right, now listen to me. Every bank has to classify NPA as per its own experience. In the case of takeout finance, if based on record of recovery, account is classified by the lending bank as NPA, it should not recognize income unless realized from the borrower or taking over institution. So obviously, NPA norms are never going to change. Every bank has to record based upon its own experience. All right. So everyone over here, that was with respect to takeout. I'm sorry it took some time. All right. So you can, just ensure that last 4 or 5 items questions with respect to audit of banks, you are going through. More than that, preparation is not required. All right. Okay. Audit of expenses also, interest expense, interest rate we have to check, calculations we are supposed to check. All right. So you can just go through my notes once over here, and that will be more than enough for your bank audit chapter preparation. I hope that you are feeling confident now with respect to bank audit. All right. Okay. Now we'll be doing audit of different types of entities. Audit of different types of entities. Again, even this audit of different types of entities. Okay. Audit of different types of entities. This is into, the main entities over here are government audit, cooperative society audit, LLP audit, right? And audit of local bodies. Okay. Any other audits are not that very important. We have to just go through it once. And if you are able to survive this revision video, all right, then you will feel much more confident with respect to audit of different types of entities also. All right, we will just take a 5-minute break. All right, and then we will start. All right, so for audit of different types of entities, all right, government audit, cooperative society audit, you have this LLP audit and local bodies. These are the important points. And for other institutions, all right, there are some basic things to be done. Okay. Now listen to me. For audit of different types of entities, if I keep on explaining everything to you, all right, and you keep on doing everything, okay, it is not going to be very productive session. So what I have done is for audit of different types of entities, all right, I have selected few questions. Okay. Only those questions I want you to do it properly, but don't worry, I'm giving you briefing about everything. All right. Apart from that, if you look at the video and do everything, it's too much of time investment. Audit of different types of entities, we have government audit framework. Okay. Now, if you see, my main investment was my notes, all right, which I have created and given it over here. You can just glance through these notes once, only glance. Then based upon last 10 attempts, I have made one full analysis of only, let us say, 6-7 questions and 1 or 2 MCQs here and there, which are main things. All right. I will give you the most important points to you. All right. This Article 266 Consolidated Fund of India is a very important point. Then this appointment of CNAG, very good for MCQs. Then their most favorite is this expenditure audit. All right. Expenditure audit, which has 5 main principles of auditing. One of their favorite, okay, for expenditure audit. All right, audit against rules and orders. Don't violate any rules while government expenditure. Audit of sanctions. Everything has to be sanctioned. All right, authorized. Audit against provision of funds. Okay. Provision of funds means budget, first budget and then spend, budget and spend, budget and spend. All right. Propriety audit is unnecessary expenditure should be avoided. And performance audit is that whether the expected results are being achieved or not. This is one of their super favorite. Nothing can be missed out from this page. All right. Again, this we can just read it once, not too much of importance. This box is again for their MCQ. Okay. And this to anyways you would have done in company law. All right. But yes, this particular section, rest section numbers are important. Okay. 143.5 and 143.6. When it comes to local bodies, 6 heads of expenditure very important. Municipality and stuff, local bodies. And this objective of local bodies and the audit program. But once government audit is done, this becomes automatically very easy. Okay. Then audit of cooperative society is lengthy. Right? It is lengthy. You can't keep on doing everything. So you will cover only to the extent I cover it in the question bank. All right. But just to tell you the most important points over here, they have kept on asking books of accounts definition. Then this only read once for MCQ kind of knowledge. All right. If possible. Then this page, investment of funds, shareholding restriction, borrowings, loans and advances, contribution to charitable purpose. Again, very, very sensitive over there. All right. Special features, this is just a code word. And this special report to register has been a separate question. All right. Just do my question bank. It will be more than enough. When I am uploading one question bank for non-essay topics on the same Google Drive. All right. You will love it. That will be more than enough. For audit of LLP, applicability of audit of LLP is one of their favorites. All right. And these form numbers to be submitted is also one of their favorites. Audit of hire purchase and leasing companies, in that operating lease and finance lease difference is one of their favorites. And what do you understand by hire purchase agreement? What do you understand by hire purchase agreement? Audit of NGO, listen, in case of NGO, this maintenance of books of accounts point is one of their favorite. All right. And then this revolving fund. You just read it, you will automatically understand. That is also one of their favorite. All right. Foreign Contribution Regulation Act 1 rule is their favorite. And then this audit of income corpus contribution. Okay. Now for school, college, cinema hall, hospital and hotel, what I've done is if you click on this link, this PDF will open, which is a module PDF. I have just highlighted important points over here. So you can just go on your phone itself. You can keep scrolling. All right. And automatically you will get all the important points. All right. Automatically you will get all the important points. Just keep scrolling and you will get your important points. Okay. So that is how it can be done. Or else just go through my question bank, which I'll upload. So that at least you are little prepared with respect to audit of different types of entities. Now comes your 16 marks chapter. All right, 15 to 16 marks chapter, that is audit of items of financial statements. You pick up any question from any attempt. This cannot be solved unless you are very clear with your accounts knowledge. All right. So there are how many types of questions when it comes to audit of items of financial statements? Listen to me very carefully. One, you will get audit of dash item. All right. I have created wonderful notes for you. Audit of dash item. Let us say you get audit of salary. Here they will need 4 to 5 points. All right. They will need 1 point on document to be verified. They will need 1 point on accounting treatment. All right. Then whatever is the account, then you can write 1 point on internal control system like authorization and stuff. Then you can write 1 point because this is salary, so you can bring income tax act also, TDS on salary deduction. All right. So these are the main points that will be required. Okay. So document, accounting treatment, disclosure in the financial statements. These kind of questions, if they're asked for 4 marks, you write just such points, you will get 2 out of 4 or something like that. You can practice some questions again, which I will be uploading. Okay. Second, I'll be giving you some sample questions on how it is done. Second, audit of salary becomes very simple. But if I say audit of valuation of trade receivables, means I'm not asking full trade receivables. You have to give me only valuation. Valuation means provision for doubtful debts. So here you have to write very specific points. It depends upon your knowledge. See, this chapter 5 is all from all subjects, whatever knowledge you have, showing that knowledge is chapter 5. All right. No professor can prepare you separately for chapter 5. All right. It all depends upon the knowledge that you have. Now, trade receivables, 0 to 3 months, 3 to 6 months, 6 to 12 months, aging analysis, past experience, comparing it with previous year, analyzing the trade receivables for doubtful debts, whether provision is created properly or not, what was the provision created last year, what is the actual bad debts in this year. All right. Chances of recovery, collection audit. Through that, you can understand the valuation of trade receivables. These kind of questions, students normally end up scoring 50-60% of marks. All right, on the spot. Okay. However, there are some questions like, what about disclosure of cryptocurrency in the notes to accounts? Disclosure of cryptocurrency in the notes to accounts. Now what to do? Is crypto, and all of that, what to do? See, I have created these notes. See, details of cryptocurrency. All right, over here. Now, in I think last 1 or 2 attempts, this was asked. Relationship with stock of companies, this was asked. All right. Now, this is pure Schedule 3, which is printed in account syllabus. Right? But normally, professors don't do that. Everyone covers all the chapters of accounts. But Schedule 3, which is printed as an annexure, people don't do it separately. So, students are caught off guard over there. But let me tell you, total there are 78 questions that can be asked. If you prepare 2 to 2 points for these 78 questions, I don't think that you will suffer any problem. You will easily score 10 out of 16 over there, or 10 out of 15. Or if it is asked, couple of things are asked in MCQ, you can score 14 out of 15 also over there. All right. So this is how you will deal with the balance couple of topics. Okay. Still, if you need any help, please contact us. We will give you the explanations. We will help you out with anything and everything. But chapter 5, there is only one solution. Practice maximum questions that you can. Practice maximum questions. There is no fixed set of notes. Audit of banks, I can give you fixed set of notes. Audit of different types of entities, I can give you fixed set of notes. Or just follow this table, because just ensure that you have 2 to 3 points for every single point which is given in this table. All right. Done. Because this table I've created from the module only, there cannot be 79th question from here. The question has to be from these 78 questions. That much confidence I can give you. All right. So just go through my question bank, just go through the documents which I have uploaded on my Google Drive. I think it should be more than enough for the balance non-essay chapters. All right. Please comment that how did our entire revision help you over here, and please show some love. Please share it with others. Okay. And I will see you very soon at CA final level. All the very best. Thank you so much.